RIU Conferences acknowledges the traditional custodians of the land on which we gather, the Gadigal people of the Eora Nation. We pay our respects to elders past, present and emerging.
Good morning, welcome to RIU Sydney Resources Roundup. No, we didn't start the fire, apart from the one down in Geelong at the oil refinery. But if there's one thing that we've learnt out of the conflict in the Middle East in the last couple of months is that we are always going to be quite reliant on oil, but we need to shift that reliance. And there's no better way to do that than to look at electrifying this great country. Not for climate change, but just to protect us against what's occurring, not just in the Middle East where a lot of oil comes out, but also in that other really stable part of the world, the Ukraine and Russia. So if there's one way to electrify this great country, we're going to need a lot more lithium, a lot more copper, a lot more nickel, cobalt, heavy rare earths, you name it. And that's what this show's all about. This is about showcasing 100-odd ASX-listed resources companies getting out there and doing their bit, looking for the next resources. And let's not forget about the precious metals. They're still incredibly important. Obviously, all the silver's been skyrocketing in the last couple of years, and we've got a great bunch of silver companies that are going to be on the stage over the next 3 days. And then there's gold. Wait until the dust settles in the Middle East and we work out how much debt the US has generated, and a lot of us will be expecting a pretty strong bounce in gold. And speaking of gold, you know that you're in a pretty strong market when people start whinging about the fact that the gold price is $4,500 US an ounce. Last year, we were up on the stage, we were having a great show at RIU Sydney, and I can recall the gold price on day 2 got through $3,500 US, and there were people partying and having a great time, and where we sit now and what we've experienced over the last 12 months is tremendous for that commodity. So if you look at the basket of commodities, and I'm sure MST and some of our other keynote companies will get up and talk about it, we're in a really, really strong space. We're in a very healthy position for a lot of explorers to get out there and do what they do best and find the next mines of Australia. And what better city to promote all these companies than Sydney, because there is just a lot of money, there's a lot of investment, and there's a lot of support from the Sydney and the New South Wales investors. And so we're very pleased, RIU, to be back in this great city. Like, look at this view. That's amazing. You know, beautiful spot down in Darling Harbour. So RIU welcomes you all to this great show, a show that wouldn't exist if we didn't have tremendous support from our many sponsors. And as I mentioned shortly on the stage, MST will talk about the market conditions, and I'm sure we're all eagerly looking forward to hearing what they have to say. So thanks to Brownie and Chris and Michael and the whole team from MST for their support at our RIU Sydney Resources Roundup. And then there's ABC Gold. They've been great. They've been supporters of this show for 10 years. Also our RIU Explorers Conference. We're very appreciated of their support. I'm sure Nick will be on the stage. I think it's just after morning tea today, and that will definitely be a presentation, as it always is, that will have a huge audience. ABC will also be sponsoring the drinks later on tonight, so we look forward to seeing you out there. They decided to be quite creative and they've called it the Gold Bar, so look forward to getting out there and having a drink with the ABC guys. And like I said, we like to make it very easy for you all, and some of you have different type of beverage preferences, so you can get down to ALS and enjoy a nice barista coffee. I know that's open. I just went down and had one earlier today. If you feel like a sparkling water or juice, go and see our friends at Hot Chili, have a chat to them about their exploration and copper work that they're undertaking at the moment, and grab yourself a cold bar drink, being, as I said, sparkling water or juices. And then White Noise, thanks to the White Noise staff that have their little lounge section just outside the auditorium, but they're providing bottled water to keep you well hydrated, particularly when you wake up tomorrow morning after the ABC Gold Bar function. Thanks to our silver sponsors, we've got the Lynn Partners. It's great to have some of their representatives that have flown over from New York to be at this show, so thanks to those guys. Good to welcome Automic Group. I'm sure many of you sitting in the audience are probably aware of the company Automic because they're a share registry, and so you'd get a lot of communication all the times that you're buying shares, and let's hope that you get a lot of communication in the next couple of months after all the great investments that you make over the next 3 days. And it's pleasing to welcome a new sponsor, the National Stock Exchange, so thanks to those guys. Nova Legal are back. You know, you can't operate in Australia without a good lawyer, so these guys are extremely important. So thanks to Chris and Frank and the team at Nova Legal. And then we're very pleased to bring on our accounting sponsor for the first time, RSM. So thanks to their team, and we look forward to building a long relationship with RSM going forward. Mets have been here for 10, 12 years as the lanyard sponsor. Those of you that keep the lanyards, you'll notice that Mets is consistent in that in providing that service. Hagstrom Drilling, get down and see those guys. They've got a booth down the back near the coffee stand, thanks to their sponsorship. And Sequent, thanks to the Sequent guys, what they've done is they've provided a gift for each of the companies that get up and give their presentation. So any of the presenters in the audience, see Steffi on the way off the stage, and Sequent have a little gift for you to remember your time and to thank you for your support at RIU Sydney Resources Roundup. We're live streaming as we normally do because we have a massive database of investors that extend obviously over to the West Coast, but also up to Queensland. But let's not forget, on an international level, we've got 2 companies presenting at this conference who are from the Great Britain and also North America, so it's great to have those. And so we need a good live streaming sponsor, so thanks to CMC Alpha for their support, and big shout out to all those people that are streaming us right now on the live stream. There's all our media partners. I'll just make a special mention to small caps. If you go onto our app, and I don't know if anyone's downloaded our RIU Sydney Resources Roundup app, but thank you for doing that. You'll see a little icon that says small caps. When you get a chance, play around with that, because the boys at small caps have done some research on each of the 100 companies that are presenting at the conference. And you can view that obviously in the days after. I know that the priority while you're here is to focus on the people on the stage. Thanks to mining.com.au, Shay and Nick and their team will be around doing interviews. And also you've got Dave Tasker from Chapter 1 and Wally Graham from the Resources Roadhouse. Thanks to all our supporters. It's very New South Wales focused. AMEC had a great show last night. the mining hub, get down the back and check out what Simon's got happening on his TV. Thanks to the Investor Hub guys, Ben, and look forward to seeing Rob Murdoch on the stage tomorrow morning. And I'll just make a special mention for our team before I hand over the mic to the great Christina Morrissey. Our team has done, as they always do, an amazing job. We're very lucky. Charm, Andrea, Diane are tremendous in the work they do. But we've also got great leadership from our board. We've got Stuart McDonald, Simon Hadfield. Well done to those two guys who created RIU in the first place. They've done an amazing job. 20-odd years of RIU Sydney, 25 years of RIU Explorers. Tremendous work by those guys. And a special mention to Stewie's son, AJ, who is managing our one-to-one meeting room that we started a couple of years ago. We've got 300 meetings booked in, so it's just another initiative to this show. We've got the auditorium here with the 300-odd seats. We've got the exhibition with the 125 booths, and now 300 meetings happening behind us. So we should have everything catered for you over the next 3 days. If not, maybe don't say anything to me. Just go and have a chat to Andrea, Charm and Di. But without any further ado, I hand you over to the great Christina Morrissey. Enjoy your time, and thanks again for your support.
Thanks so much, Jackson. It is fantastic to see such a strong room here this morning. I've spoken to a number of you already, some really wonderful to see some familiar faces, and we've got some new faces this year as well too, which is wonderful too. I'm going to give the prize for the person that's travelled the furthest to come along and join us this year to Mr. Hurley and his wife. Mr. Hurley's just over here and informs me that they flew in specifically from San Francisco last night. They'd never ever miss this conference, so well done, sir. And he's still awake, which is pretty impressive. So one of my jobs is to keep things moving and energised, so I'll do my best to ensure that you are on the ball today. Now, Jackson touched on it a moment ago. We are operating in a pretty extraordinary moment globally. So back home in WA, like the majority of the vertical events team, I'm based in Western Australia, and I work with 6PR, which 3AW, etc., is sister station as a talkback radio host. And over the past few months, I've been speaking with economists, with geopolitical experts, and even with people on the ground in places like Venezuela and Iran when things are happening, watching those events. And there's been one consistent theme all the way through, hasn't there? And that is uncertainty. And I know that right now every one of us in this room is watching things very closely. Hormuz this morning, God knows what was happening there, but the oil price went up another 5%. And we're watching, of course, what happens in Washington, because it's not just an abstract headline that we wake up. They're directly influencing our markets, our commodities, and the opportunities that sit in front of us. But the great thing is, sadly, that volatility doesn't just create risk, it also creates opportunity, and that's why we're here. That's why we're here at this event, because as Jackson said, over the next 3 days, we've got 100 companies, nearly 100 presentations. We're going to hear from those companies at the forefront of discovery across the gold, the lithium, the rare earths, the materials that quite literally will be powering this modern world and giving us an alternative to the oil and the gas. Although one of you this morning did tell me he's just invested in a little gas company in Western Australia that's done very, very nicely for you, which I'd say is a wise investment at the moment. So what I think we'll do straight away, and before I get the next team up on the stage, is I just want to let you know that one of my roles is to keep things moving. So for each of my presenters in the room, at 2 minutes I'm going to ring my bell. At 1 minute, I will stand up and then I shall walk across towards you. If I get really, really close to you as a presenter, it means your time on the stage has come to an end and it's your job to move off. I'm not being rude. We just do need to get things going because we have got 100 presentations to get through. So let's start with presentation number one. And we've got 20 minutes. Jackson did mention the presentation already, but it's an opening keynote and it could not be more timely. It's a deep dive into resources in a volatile world. It takes two experts to get the job done on this particular presentation. So from MST Financial, would you please make welcome the ever-smiling Hassan Tevik and Matthew Friedman. Please make them welcome, everyone.
Great. So thanks for having us. I'm Hassan Tevik. I'm at MST. I don't have a clicker with me at the moment, but
good start.
So in the next 20 minutes, myself and Matt will hopefully provide a bit of guide on what's happening from a very broad top-down perspective, that's from me, and what's happening with commodities in Australia as well. MST is an independent research provider. Most of our clients are institutional investors. We have some wealth managers as well. We've all worked at top-tier investment banks, and we get a chance to provide independent analysis, so what we really think, to investors now. It started up in 2017, and it's been quite successful since. Disclaimer. All right, this is for compliance. There we go. Yes, we're all experienced analysts at MST. I've actually got 29 years experience. Matt, I think, probably has 21 years experience as well. This is a little bit older. I do investment strategy. So I'm not an economist. Investment strategists get paid more than economists, so I like to make that quite clear to a lot of people. I'm going to provide an outlook on what we think from a broad top-down level and how that feeds into commodity prices. We've been bullish on commodities for over a year now, and we can see the drivers of prices moving higher from here, but also we're cognizant of how long the cycle could actually last. So I'll take you through the drivers here. Also, we can't go through a macro presentation without discussing Iran as well, and also take you down to some of the stock ideas within the Aussie market. So my focus is Australian equities, and I'll take you through some of the ideas there. All right. So there's a structural and a cyclical driver to the industrial cycle that we're seeing right now. From a commodity perspective, the structural driver is transition, the upgrade of networks, which is happening globally, emerging markets developing even further. But there's also a very important cyclical driver here. And we think it has a lot to do with the investment in technology. So I've been taught to look at the 3 standard deviation events in markets. They're the events, or they're the features of markets that are going to generate the biggest returns. And here they are. So investment by US companies has hardly ever been as strong as what you're seeing right now. So you're at peak cycle investment. Most of this investment is driven by what we call the hyperscalers, the tech companies. And most of it is ending up in data centers. So you're at a capex to sales level that you've only seen at peak cycle over the last 40 years. The GDP numbers in the US come out last week. Almost all of the growth in Q1 was data centers. So big driver there. And the expectation is that it's going to get, we're going to see even further investment. Now, given where you are in the cycle, you should be a little bit cynical on how long it can last. What we also know at the same time is that very strong investment is driving the right-hand chart, very strong profitability. So if you look at what US companies are actually announcing during the current reporting season, it's been probably the strongest reporting season I've seen in the last 5 or 6 years. So you've seen upgrades in sales, you've seen upgrades in profit margins that we see on the right-hand side, and also you've seen upgrades in free cash and upgrades in capex as well. So what we think here is that this cyclical gain or cyclical build-out in investment, mostly focused on data centers, is broadening out to other parts of the economy, not just in the US, but around the world. So data centers and AI investment is certainly at the core here, but we can see it spreading out to other areas. So if I look at broad manufacturing indices that look at transportation, construction, they're all in recovery phase, but it is concentrated on data centers. So we think the recovery is going to continue, but the concern is how long it's going to last for. I'll discuss that in a second. What we know here as well is that equity valuations around the world also look like they're close to peak levels. So this is the cyclically adjusted PE, so price divided by 10-year average EPS. It's something akin to the Schiller PE for those finance nerds. So you're at valuation levels which you've only seen once before in the last 50 or 60 years. Now, I would say this valuation level is probably more justified than what you had in 99, 2000. I'll take you back to chart, the reason why. This valuation level, for now, is justified by very high profit margins. Companies haven't been as profitable as what you're seeing right now in over 6 or 7 decades here, potentially even more. So how long will these high profit margins last? How long will this strong investment last? We'll give you an indication of how long these very high valuations will last as well. So we're looking out for several indicators to suggest when you could be seeing this level of investment, this level of profitability, and also this level of valuation come down. We don't see any of them in place now. So let me take you through 1 or 2 of these. All right, very busy chart. Apologies here. I'm trying to get a lot across to you. But what we've seen in the past is supply disruptions around the oil price, so supply disruptions driven by Middle East concerns, have often involved a recession or a serious downturn. So if you go through the history of time here, and the orange line here is the real oil price, and the blue line here is our indicator of the industrial recovery. The blue line is very strongly correlated with commodity prices over time. So what you've had is a real increase in the oil price, often is associated with a downturn or recession. So you had OPEC 1, which was a recession. You had the initial Iran revolution in the late 70s, early 80s. That resulted in a recession as well. And then you had these mini downturns as well. This time around, you haven't really seen the consequences of high real prices just yet. And there's a few reasons why this is the case. First, I don't think prices have actually gotten high enough. So oil prices haven't gotten to a level which provides serious restriction for the industrial recovery. So the orange line here is oil prices in real terms, so not nominal terms. What you've seen in the past is that you need to see at least $130 plus oil price for it to become a serious constraint. And if anything, I think given the changes you've seen in the economy over the last few years, you probably need to see something even higher. So not yet. So there are potential other drivers of the end of the industrial downturn. What you've generally seen over time is this concept of a rise in the cost of capital. So are interest rates going to rise? Are bond yields going to rise? Is the cost of financing going to rise? And that's usually the prelude to a downturn in industrial recovery or industrial cycle. So the most important driver of the cost of capital is the US central bank, is the Fed funds rate. So are we at a point in the cycle where you're going to see an increase in interest rates? Our answer is not yet. So we don't think there's going to be an interest rate increase. If anything, the next change could actually be an interest rate decrease. We think interest rates are going to be flat until at least the middle of next year. So it does give you some sense that this cycle can actually last a little bit longer. And then you think about things like, as mentioned at the start, the sustainability of US debt. Is the rise in government bond yields going to provide a constraint for the industrial cycle? Again, we don't think the answer is yes just yet. So bond yields maybe drift higher, but certainly not surge high. So for us, we think the industrial recovery is going to continue until we see clearer signs that the cost of capital is going to increase. If I can pivot a little bit to what's going on in Australia, you've had 2 rate rises by the RBA. They're meeting today. Expectations are for another rate rise. Now, in my view, that's probably the wrong thing to do. So what you've had here, as I said, 2 rate rises. You've had an increase in fuel prices in Australia, which is equivalent to at least another 1, potentially 2 rate rises as well. You've had Australian households take a serious hit over the last month or so. To sustain the current level of consumption, you probably need to see households dip into their savings rate or their savings level. And I think you're probably not going to see that. You're probably going to see consumption actually come off a bit. If the RBA raises rates today, and if they signal further rate rises going forward, what they will do is provide this a reason for this dip in consumption you see now that's continue for until the rest of the year. Our thinking is that you've probably got 1 more rate rise coming through. It's probably not going to be now. We think probably later on this year. And also what you need to consider here is the RBA's changing policy just before a budget. So what we know from the budgets coming through next week is that it's going to be tight from a top-down perspective. There's going to be changes in the budget which probably prelude to a potential rise in the unemployment rate. I think the RBA needs to take that into consideration. Now let me jump through a couple of things here, and I'll go through. All right, we're positive on markets because you see this industrial recovery coming through. The industrial recovery should be positive for company earnings, especially in Australia. That provides a demand perspective on Australian profits. So the demand environment for Australian companies, especially in the commodity sector, is positive because of this industrial recovery. What we know over time is that China used to be an important driver for commodity prices in Australia, but that's gone by the wayside. There's other drivers here. Within the Australian market, where we do want to be exposed are those commodities where you're seeing relatively tight supply. And I'm using the example of copper here. The two surges in the copper price you've seen over the last few years or so, they've been associated with the tightness in supply that's come out of South America. So if you are an investor in the Aussie market and you're looking for ideal exposure, look for those companies that not only benefit from a positive demand environment, but also benefit from relatively tight supply. Now, I'll leave it there, and I'll pass it on to Matt.
Thank you, Hassan, and good morning all. I'd like to use the time to, I guess, give you a bit of maybe a more bottom-up or a miner's perspective. I'm one of our mining analysts at MST Financial, and I think across the firm we probably cover somewhere in the order of about 50 mining and resources stocks. So, we get to talk to a lot of mining companies, and hopefully we have a little bit of a sense of what they're saying and the pressures that they're feeling. And I think there's probably three themes for me that have really emerged over the last 12 months in terms of the volatility that companies have experienced. And I've summarised them there in terms of geopolitics, prices, and jurisdictions. And when I say geopolitics, I mean obviously we've talked about the war in Iran and the closure of the Strait of Hormuz, and clearly that has very significant impacts across the board. But I think it's been broader than that, and this is probably a chart that will be familiar to many in the room, and that's obviously the incredible kind of control over so many of our important commodities that China has from a processing perspective. Over 90% of rare earths, over 90% of natural graphite. And as I've listed on the bottom there, the geopolitical kind of expression of this has been the tremendous level of export controls and really sort of gaming a lot of these commodity markets that China has particularly ramped up over the last 12 months. And I think, again, that's obviously, introduced volatility into markets, but it's created an opportunity for the Western world and for supply chains in the Western world to really recognise this as a problem that needs solving, and the result of that is obviously that the realisation that you actually need to build out some of these processing chains, domestically or onshoring. The second one is really a flow-on effect of that, which is the ramification that has on prices. And Hassan talked about some of the supply drivers and the demand drivers to what we've seen in pricing. But if you're operating a mining company or trying to get a project off the ground, how do you run an economic model or a feasibility study when in the last 12 months the price of your commodity might have doubled, or it might have tripled, or in the case of tungsten it might have gone up over 7 times, right? And so, again, I think Chrissy alluded to it earlier, the volatility creates opportunities whereby clearly the market has acknowledged that this kind of price movement, it's not something that an analyst is going to plug into an economic model, but it's something that has created an opportunity for these industries, and it's really a sign that I suppose Western economies are recognising the fundamental value of a lot of these commodities. I think what we've seen is that a number of commodities, perhaps copper included, as Hassan alluded to, have spent long periods of time below incentive prices, whereby equity investors, governments, even debt investors have found it hard to justify building new supply in these projects, and that's just created the supply gaps that we're sort of left with today. Given the last 12 months has kind of rebased the level for a number of commodities and clearly made them far more attractive, and I'm including sort of precious metals in that basket as well, that creates positive or supportive market conditions to really address some of that tightness in supply. The third one I've sort of termed as jurisdictions, but it's broader than just the jurisdictional problem that probably a lot of us are quite familiar with around kind of approvals timelines and royalties and various other structures. And I think this is a great chart, and it's a scary chart. And what it shows is the average years from discovery to first production. And this was of the cohort of mines that were built from sort of 2020 to 2024. So the chart is showing really kind of backward-looking metric. The average time there was in the order of 18 years. On a forward-looking basis, when we look at what's in the pipeline now to address, some of these price problems and supply problems that we've just talked about, that's looking more like closer to 30 years. 30 years to get a copper mine off the ground from discovery to actual first production is the expectation over the next 5 years. Now, that's a jurisdictional problem. It's also a problem of access to capital, probably access to technical ability and labour and people and all of these problems. And the manifestation is something that we see, unfortunately far too frequently in our industry, which is blowouts in timing, blowouts in capital, and all these factors. But again, it creates this sort of positive cycle of a lack of supply, an inability for new supply to address the strong demand levers that we're seeing sort of coming through in the economy. Now, that all sounds probably like a lot of grey clouds, but I think actually there's some silver linings there. And I think what we are seeing, particularly over the last 12 months, and as Hassan alluded to, that I think markets and governments are slowly waking up to probably what a lot of miners and mining companies have known for a very long time, in that it's actually time to play catch up on solving some of these issues. And I think in those three buckets that I identified in terms of geopolitics, I think we're seeing a lot more direct intervention from governments. I don't think that there's a better example of that than the US government's or the Department of War's direct investment in the rare earth supply chain through their equity investment in MP Materials. We're also seeing that here in Australia with the Australian government's supporting of Iluka's Eneabba refinery. We're seeing it in prices. Far more commodities and far more supply chains are being exposed to supportive floor pricing arrangements, offtakes. We've got this idea of a strategic reserve like the US Project Vault, which is really kind of underpinning this notion that you actually need prices to be at a level where our upstream mining companies and our midstream processing industries are going to be profitable and be able to deliver the supply that the market is needing. And then finally, in terms of jurisdictions, I mean, maybe this is the harder one, but again, I think governments, whether that's federal or state in Australia or other governments around the world, are probably coming to the realisation that they aren't making it easier for companies to get up off the ground. Their policies are making it harder, and if they want to fix the problem, some of that really needs to change. So it really reinforces our view. I think that over the next decade, with some of this, I guess, supportive action coming through across our industry, that, as I say down the bottom there, good deposits in the right hands should be pretty well positioned to really be successful in this market over the next, say, decade. I know that Chrissy's given me the bell, so I might wrap it up there. Look, from MSC Financial's perspective, thank you very much to Stuart and Jackson and the team at RIU and Vertical Events for our involvement in the conference. We're really excited to hear from the companies over the next 3 days. I hope you all enjoy your time. We did want to do a little bit of Q&A, but we're probably pushing up on time, so I might leave it there, and please come by our booth, number 38 in the conference hall, if you wanted to have a chat further on any of these topics. Thanks very much.
Thank you so much, Matt. Thanks, Hassan. Thanks to MST as well. Fantastic presentation to kick us off today. Knowledge is power. It gives that bit of edge, even in these uncertain times. It's nice to have a starting point. Now, this fellow here, Mr. Boyes, how are you feeling today? Have you eaten up the entire supply of champagne in South Australia recently?
Not yet. We're getting into that.
These are the happy human beings, these fellows here. So, and they've not stopped. So we'll hear all about their first gold pour out of South Australia, I'm sure. We're also going to hear about their exploration, because they're certainly not stopping looking to increase the resources. Would you please make welcome to kick us off at RIU 2026, our first company presentation, Matthew Boyes and Pat Gold.
Thanks very much, Chrissy, and thanks very much to everyone who's attending here today. Obviously, another really well attended RIU. Hopefully we get the same sort of outcome we did We had it in Fremantle this year, which was probably the best conference I've been to over the last few years. So, Pac Gold, it is a big week for us. As you've seen yesterday, we did pour our first bar of gold. So we've actually made that transition from I guess, an explorer into where everyone really wants to be, and that is actually producing metal in this gold price environment. So we're all very, very happy with what we've done over the last few years, and especially over the last 5 months. I'll take you through that at the moment. The corporate overview, really there's a couple of main takeaways from this slide that I want to highlight. One is the support we've had from some really key institutional investors over the last 6 months. Acorn, who have been in since inception of Pac Gold, have supported us all the way through, obviously because of the quality of the exploration projects we've got up in Queensland. But more recently, we've had our major shareholder now, which is Curious Capital, have come in and supported us and bought heavily on market as well. Post our recent raising and post the acquisition of the White Dam mine site in South Australia, which has been fantastic. So the company basically is sort of like 25 to 35% held by large institutions, Australian-based institutions as well. Management's got 6 to 8% of the company. And the other key takeaway from this slide is the actual cash position. We raised $13 million last year in quarter 4, around about the end of 2025. Really, we set out fairly clearly during that raise what we were going to utilise that capital for. Obviously, the goalposts have moved slightly with where we're sitting geopolitically, and the cost of us actually going out and exploring has increased exponentially. But we've been able to achieve what we've pretty much stated with those funds, and also still be sitting in a very strong cash position at the moment when we've actually achieved our first production. I think is a great sign for the team and a great sign for the company. The board, I'll take you through this quickly. Really, the board was revamped at the end of 2025 when I came on. We were lucky to be able to access some really high calibre board members in people such as Bruce Kendall. Bruce has been involved in the Chalice Group. He's actually the guy who founded Gonyville, Tropicana. He's had some fantastic technical experience over the years. Richard Hacker. Richard's been sitting next to Tim Goyder for the last 20 years, so you can imagine sort of the experience and what he's been exposed to there. And his expertise and input into the board this year has been absolutely fantastic. Michael Pitt, the only surviving member of the board. Michael's he's a development manager over at Broken Hill Gold Mines, which is interesting and also very useful because it's a regional play and knows the area where we're actually operating and the area in which we really want to expand our footprint into, which is that Broken Hill area of New South Wales and South Australia. And Keelan from the big end of town, ex-BHP, she's our chair. Well, this is the most important slide of the whole deck at the moment. It's the fact that we've actually produced our first bar of gold. We started to turn over the heap leach pad last year. As soon as we got into White Dam, we looked at the ways of actually trying to get some cash flow out of it, and we started to think, okay, we'll just aerate sections of the pad, then we'll probably get some gold back. And that's come to fruition. We've been able to produce our first bar of gold. It's not a massive bar of gold, but it is cash flow. We'll have our first $500,000 come in the bank this week. So that is basically the first financing, non-dilutional financing this company has actually received since inception 5 years ago, and it's a major milestone for us. The asset itself is an asset that has proven production. The Exco and Polymetals joint venture, which was running the asset from 2010 to 2018, did a fantastic job of leaching and getting as much gold out of that pad as possible. We've decided that we'd go back in there and have a look and see if we can't get a little bit more out of the top of the pad, and see if we can't emulate the cost that they actually achieved in the first time round. So it's a very low cost operation, and I believe we can we'll be producing a lower quartile once we get the mine up and running again. As far as the timing and the value of the acquisition, I can't highlight enough. We'll end up spending about $4 million after we produce our first 5,000 ounces out of this asset. It's an asset which has got all its permits in place, native title agreement in place. All the capital's been sunk. We've now refurbished the plant effectively. It's up and running 100% effective, and we've got all our mining permits already granted. So it's an asset that comes with a lot of work and a lot of capital that's already been invested along the way. We estimate that amount of money, around about $50 million, we put into this asset, and it's running. It's actually producing gold bars. So we reduce the time. Time cost of money, obviously, as you know, is very important. The actual, the operational continuity, I mean, I've touched on this before, but it's fully permitted. This is one of the main aspects of the reason why we went in to pick up White Dam. It was because it was fully de-risked, really. There was more work to do on the plant than we thought, but we've successfully refurbished the plant. The guys have done a fantastic job. We've put in the capital that's required to run that plant now effectively. We get the full team of guys that were sitting there with GBM and some of them from Poly Metals and Exco days. So we get a group of staff that actually know how to run the operation. We don't have that time delays of actually training people up, getting in new people, and the cost involved in doing that as well. All the infrastructure, as I said, is there. We've had to do a few things to get the plant up and running, as I said. There's some relining of ponds and et cetera, but everything's there. And when you get the proof of concept, really the idea for us in this first 6 months of this year, first 6 months operation, was to aerate this pad and see what we'd be able to produce out of it before we start our recrushing exercise, which I'll take you through in a moment. Does the plant work? Can we put it back into production as a new group of people, a new group of operators? And we've just demonstrated that we can. So when we brought on this asset and brought White Dam into the company, the idea was to lay out a growth strategy. So it was a 3-phase growth strategy, and the idea was to de-risk and not basically be there and having to continually be dependent on equity raising over the next sort of next 5 to 6 years or whatever time frame you're looking at. So phase 1 for us was start the retreatment of the material that's on the pad. The 7.5 million tonnes on that pad running at about 0.2 of a gram. The last lift of the pad was put on in 2015, 2016. It was loaded, and there was still gold remaining in that. We estimate the gold remaining in that to be sitting at around about 3,000 to 4,000 ounces of recoverable gold. Now that's based on the fact that we have done some initial test work on this, crushing this material, re-leaching it in a lab environment. The real key for us is to see how that performs in the real world environment. So some of the capital that we initially raised last year went into purchasing a crushing circuit from Metso. That's now on site. You can see up to the right, hidden behind one of the call-outs there, is basically what the pad looks as of 2 days ago. So we've successfully recrushed the top lift of that, the right-hand side top lift of that pad. There's about 80,000 tonne which is recrushed. That's not under irrigation as of yet. There'll be another 40,000 tonnes come behind that before we're able to start irrigating. We have irrigated the ramp area up there, which is about 40,000 tonnes, though we haven't seen any return from that yet. Takes about 4 to 6 weeks, probably a little bit longer for us to get return of solution from the top of the pad down to the ponds and into the plant because of the height of the pad. It's over 30 metres high. So what we're going to start to see over the next couple of months is we're starting to see a lot more gold coming back from the pad, from the recrushed material that's sitting up there. We'll start to have regular pours and regular updates to investors on the production, and we'll also be able to put out a production forecast for the next 12 months just from the heap leach pad, while we continue to work and develop the assets, which is going to be phase 2, which is basically upgrading the existing resources which are there at White Dam. When we picked up White Dam, it has 100,000 ounces of JORC compliant resource in the ground. There's three main areas, which is the Hannaford, the Vertigo and the White Dam North areas. The mineralisation is close to the surface, it's oxidised for the best part. The only permit we need is a mining permit for the White Dam North project, and then we can look to put the assets back into production. I initially see a 3 to 5 year mine life. We're targeting somewhere between sort of 17,500 and 22,000 ounces of production annually, depending on what grade we can get on the pad. We're drilling out the Vertigo pit, with Vertigo pit has now been fully drilled out. We have ceased to drill at the moment just because of the diesel price. I think the company has to take a fairly sort of balanced approach to the way we spend our money, and at the moment any diesel we're consuming goes into producing a gold bar. So we're just eliminating any excessive diesel use until we can get back into a price environment which is more favourable to exploration. I think a lot of people in this room will probably be in the same position. Third phase of this is district scale exploration upside. We've got 900 square kilometres of ground to drill, we've got 900 square kilometres of ground to explore. We've got multiple targets, walk-up targets. We have a bunch of permits in with the South Australian government now. We expect all those to start being approved in the near term. And once we sort of get back into a price of diesel closer to $2, then we'll be starting to drill all of those targets again. So really my objective over the next 2 years is to be able to bolt on a 10-year mine life for the White Dam gold mine. And I think with the assets we've got, And with expansion into the Broken Hill and South Australian area, we've got potential to easily put that amount of ounces on there. There are a lot of assets which have the right rock types to be able to be heap leached on the White Dam, at the White Dam facility. So the JORC resources, I'm going to flick through this very quickly. As I said before, we have 100,000 ounces on there. We are going to move the existing inferred in resources. Remember, these were drilled back from gold price of $1,600. So move those back into an indicator category. Vertigo is done, 12,000 metres have been done in there. We are going to start drilling Vertigo again next week. And then with another 2,500 metre program due to all being sort of intercepted outside of the original resource area. We'll have that resource done, then we'll move on to White Dam North and Hannaford as the year progresses, and again it'll be dependent on where we sit with our cash position and diesel prices. Phase 3, getting I guess more to the theme of this conference, is the exploration upside. The company was originally founded on an asset in Queensland called Alice River. Alice River was and still is our main flagship asset. Alice River is an incredible asset. It's probably got about just over 800,000 ounces in it at the moment. We see potential in Alice River to be a 3 to 5 million ounce asset. It is a very large land package. It requires a lot of expenditure over the next 3 to 4 years to get to a point where we're comfortable that we are going to be able to achieve that target. But we are restarting exploration on that in a very short period of time. The guys have done some fantastic work up there. The second will be regional near mine exploration in South Australia, and also looking at regional targets in South Australia, not just the land we own at the moment, not just the assets we are actively exploring at the moment, but assets that we can purchase and JV into in and around within trucking distance of the White Dam asset. And there are many. I think it's a region that's been less explored than I've ever seen in Australia. If it was Western Australia, it'd be full of holes. There's a very limited amount of exploration that's gone on within a sort of like 100 kilometre radius. As far as we can see some fantastic deposits being found, such as Havilars, Kalkaroo, and there's a Muteru to the south. There's also the Porsche mine. But apart from that, basically we are the only operating asset in the region. The vision overall is to become self-funded. I think that's everyone's dream as a junior gold producer and explorer, basically to kick off enough value and enough cash flow to then fund our exploration efforts on the other assets and also grow. Also look at acquiring assets that we think can be brought into the production pipeline in a short period of time in South Australia, and also look at growing outside of South Australia and potentially back into Western Australia as well. I guess immediate value creation was the purchase of White Dam. Near-term catalysts are going to be producing more gold. Really, that's what we want to be. We want to be self-sufficient by the end of the July quarter. I'd like to be throwing off somewhere in the order of 300 to 400 ounces on a monthly basis. It'll all be dependent on how we go with the production from the pad, and in a real life situation how that actually performs. I'll touch quickly on the Northern Queensland assets, the two main assets, Alice River and the joint venture agreement we've got with a gold antimony play called St George. I think, as you can see from that, that's a great image, the regional image of an IP. So wherever you're basically getting an IP low, all the way up there you've got what we call the Alice River Fault Zone. All the way along that Alice River Fault there's mineralisation. Up in the left-hand corner at the top where the original mine, the Alice Queen mine sits, there's about 800,000 ounces we've already delineated at a gram, half of that which falls into an open pit. And then as you move down, we've got hits, from Posse in the northeast and Kapok, which has just been found, 50-metre wide zone running a gram, all the way down to about 30 kilometres down that IP anomaly all the way to the south of the block. It is underexplored, it needs investment, and we will do our best over the next 2 years to be able to discover what we think is it actually has at Alice River, which I think was a 3 to 5 million ounce asset. St George, I can see Chris here from my left-hand side here. St George, package of ground that I think is probably the best gold antimony assets in Australia. 900 square kilometres of ground that has not been previously explored. Go onto the website, go and have a look at this presentation. Some of the grades that we've picked up from surface, from rock chips, are outstanding. The work that the guys have done on the geochemical side and project and target definition over the last 12 months has been outstanding. We've only had the project 6 months. We've done basically the spend we require to keep that in good standing. And with that, I think I'm going to get kicked off. But thank you very much for your time, and I hope you enjoy the rest of the conference. Come and see us up at the booth. Thank you very much. Cheers, Chrissy.
Righto, mate. A lot of excitement there. We're going to go from gold to silver now. And Donald Gardner, when I was reading through your presentation earlier today, I thought, now there is a little sentence that we could be saying this afternoon at the Gold Bar. I will try and say this one. A major silver indium polymetallic porphyry epithermal system associated with a collapsed caldera system. It sounds absolutely scintillating. I know you're going to make it fun for us.
Thank you.
Congratulations.
Thanks.
You make him welcome, everyone. Donald Gardner.
Thank you. Right. Good morning, Sydney. A beautiful day and a beautiful view out over the National Maritime Museum. So thank you to Jackson and his team for inviting us to RIU to present, and thank you to our shareholders for your ongoing support. So nice image of us. This is about a week ago, we started drilling again at Orient. So it's good to be back, good to be drilling. Disclaimer. So, who are we? We are Iltani Resources. We listed on the ASX in June 2023. 78.5 million shares in issue, market cap around $33 million. Board of the management, we hold 15%. We're also backed by the Queensland Investment Corporation, holds 7%. I'm the MD, Donald Garner. Karina and Justin, non-executive directors, are here today. Anthony isn't here today, and Eric Norm, our exploration manager, he's up on site in Herberton running our drilling program. So, what do we have? Our key asset is the Herberton project that's located up in northern Queensland. It's about 75 k's directly inland from Cairns, about 110 k by road. We've got about 300-400 square k of tenements in the area. Our main focus is on the Orient project. As Chrissy said, the Orient project is a major silver indium polymetallic porphyry epithermal system associated with the collapsed caldera system called the Boon Musa caldera. And you can see the purple line on the slide there, that's the caldera complex. The Orient is a large, potentially world-class endowment of critical and strategic minerals: silver, indium, lead, zinc, plus there's also minor tin and antimony mineralization associated with the system. And we've got multiple additional targets in the larger Herberton project area. So, Orient, what do we have? As I said before, big system. So, extends 4 kilometers long strike, 2 to 3 kilometers wide, open at depth. To date, the majority of the drilling has been at Orient West and Orient East. We've got a mineral resource, 34 million ton, 110 grams silver equivalent. So 34 million ounces silver, 250,000 ton lead, 300,000 ton zinc, and about 600 tons indium in the ground. So, Orient mineralization, what does it look like? We're up the top level of the system. So we've got high grade, really high grade, massive sulfide-rich veins, predominantly galena sphalerite, surrounded by extensive stalwart zones. This diamond core was drilled at Orient East. So we're looking at there 3.4 meters, 460 grams silver, 80 grams indium, 12% lead, 5% zinc. So that's the high grade core. That's surrounded by 46 meters, 70 grams silver, 11 grams indium, 2% lead, 1% zinc. That's the low-grade stalwart zone. So what does it look like on the ground? This Orient West, this is the southern part of the Orient West ridgeline. You can see on the right-hand side of the slide, that's the remains of an old processing plant from the 1920s. The guys on site, they were mining the ore, they were hand sorting the ore, they were getting the lead oxide mineralization. The lead oxide mineralization was taken by bullock cart up to the Chilego smelter in far north Queensland for smelting. On there you can also see on the left-hand side remains of the old workings, and you can see there's where we've been drilling up the top there. You can see the bags from the RC, and you can see the drill pads along the top of the ridge. So what we're really looking at here is we're looking at multiple vein systems dipping into the ridge line. The ridge line extends 3 kilometers. Essentially, we take the top off the ridge line for an open pit. This is Orient East. The sort of small hill you can see there in the distance, that's like the end of the Orient West ridge line. So that's the end of the 3 kilometer strike of Orient West. Again, in the foreground, you can see some bags from our RIU drilling. You can see some old workings. The mineralisation at Orient East is more of a large, sort of lumpy stockwork. And between Orient West and Orient East, we have the link zone, which we're going to drill more of this year. So, what we're doing this year, at Orient, grow the resource and expand the system. So, the blue holes on this are our historic drilling that we've done to date. The green holes are what we plan to do this year. As I said, the drill rig is up at Orient West, so we've started drilling there. So we're looking to infill the drilling from 2024, 2025 to upgrade the resource category, predominantly from inferred to indicated. The drilling should increase the overall grade of the system, and we're going to test the strike extensions of the system. Then expand the system. So, as I said before, we're going to drill the link zone, which is the area between Orient East and Orient West. Drill vein 1, drill up Orient North, test it, and continue to test the Orient West Northeast extension. The drilling in the areas in the middle is less sparse because it's really what we plan to do. We'll go out there, drill with success, drill again, drill again, drill again. So these are the initial holes we're planning to drill in that area. There will be more holes drilled this year. We're confident we can fully link Orient West and Orient East. While we're drilling Orient, we're also going to look at going out into the regional Herberton project, and we're going to test. We're finally going to get around to drilling these high impact, high priority targets in the project area. So Boonmouth epithermal, it's an Iltani discovery. We discovered that a couple of years ago. It's an epithermal vein system extending over 3K, never been drilled, surface sampling to 7.85 grams gold. So we're going to stick 7 RC holes in that. Union Jack is a small scale historical working. We went out there, we sampled, we got 2% copper from the old workings. When we overflew it last year, when we did our VTEM survey, there's some really nice VTEM anomalies there, a couple of plates, so we're going to test that. Isabel, I'm personally looking really forward to drill Isabel because it's a really, really high grade deposit. Low tonnage, currently it's about 100,000 tonne there. It's sort of a pipe, a chute. Recent sampling was done a couple of years ago. When I was with the Red River Resources, we got 1,400 grams silver, 5,500 grams indium, 6% copper, 15% lead, 17% zinc, and 5% tin from surface sampling. So hopefully we can replicate some of those grades from the drilling underground, which will be very good to see. And we're also going to go and test Isabel Extended. So Isabel Extended, there's a drill hole put into that in 1982, hit 7.2 meters at 3.3% copper. Never been followed up, so we'll chuck a couple of diamond holes into that to see what we get. So, to summarize, and this is our key slide, so the Iltani investment case. Basically, the whole point of doing this is try explain to the audience and everyone who we are, what do we have, what are we planning to do, and why should you invest in us? Ultimately, it comes down to that. I come to these conferences to look at companies for my self-managed fund. Sometimes I make good investments, sometimes I make not so good investments. So it's really about trying to explain to you, the audience, why we think you should buy our shares. So, Iltani Resources, who are we? ASX listed ILT, 78.5 million shares in issue, really tightly held, 41 cents a share, $33 million market cap. The board and management, we hold 15% of the company, so we're really motivated. We've got skin in the game, and we're backed by the Queensland Investment Corporation. They hold 7%. The QIC is essentially the sovereign wealth fund of the Queensland state. They have been instructed by the Queensland government to support the critical minerals mining and exploration development projects in Queensland. So the QIC are backing us to bring Orient into production. Funding, we've currently got $8.1 million cash in the bank as at 31st March. So we're fully funded to deliver on our 2026 drilling program and more. Our core asset, as discussed, our core asset is the Orient Silver Indium project in northern Queensland. So, yeah, silver, lead, zinc, indium, great. What are we doing in 2026? Drilling. To quote another Donald, probably more important than me, drill, baby, drill. So that's what we're planning to do in 2026. At least 115 RC holes into Orient, grow and expand the mineral resource, 25 drill holes into our high-impact regional targets, which will deliver hopefully some fantastic results. And while we're drilling, we're going to advance Orient forward through the permitting and development process. That's why the QIC has invested us to deliver Orient into production. So as we're doing all the exciting drilling, for me, as a geologist, I find it very, very exciting. We're also working on the permitting, the technical side. So while the RC rigs out there, 3-4 weeks' time, we'll also be mobilizing a waterbore rig to start doing the hydrological studies on the site. We've got our trained environmental out there at the moment doing the wet season, flora and fauna studies, so moving that forward. Core Resources are working on our metallurgical samples, doing the metallurgical test work. And we're also looking to grow Iltani. One of the drivers of listing Iltani in the first place was to give the management team a platform to go out and look for assets in the market, acquire assets that we think that can deliver value for our shareholders. So we've got a twin-pronged strategy there. So we're looking to bolt on assets around Orient. So we're applications, acquisitions, looking for satellite deposits that we can truck to the Orient plant that can add value for our shareholders. So that's underway. Orient, as you all know, is located in northern Queensland. Northern Queensland, we have the wet season. So this year, January, February, March, the wet season just kept on going. We were supposed to be on site at the beginning of March of drilling. March was very wet this year, so we were actually delayed, so we started in April. So whilst we're advancing Orient, we're looking for other projects in Australia, base metal and precious metal projects to bring into Iltani, so we can work on a 12-month year basis. But also, we're looking for projects that can create value for our shareholders. So what people can't see is what we're doing in the background. You will only see our successes. We've been looking at a number of projects. They haven't delivered what we want for our shareholders, so we haven't done anything yet, but we are looking. But we're always focused on creating value for our shareholders. Whatever we do, we're shareholders, management team are shareholders, we're aligned, we want the share price to go up, that's what we're in business to do, and we want to deliver value for our shareholders. So, short and sweet, actually under time, which is amazing. So, if anyone's got any questions, I've got, 2 minutes? Anyone? Anything? If no one wants to stick up their hand and ask a question, yeah? Look, we're about 8 holes into the drilling program. Eric and the team sent off, I think, 3-4 drill holes to Intertek in Townsville last week. Another load went yesterday, so hopefully we should be getting assay results back in 3 to 4 weeks' time. Hi. Indium, there's a bar of it on our at our stand, so you can come and have a look. So, ironically, I actually put this presentation through ChatGTP, and ChatGTP said, you should have put a slide in there on indium telling people what indium is. So obviously, I should have done that. So next time. Indium is it's a metal, silvery metal. Its main use is in the touchscreen of mobile phones. So on site, the indium is associated with sphalerite. It's recovered to the zinc concentrate. We send the zinc concentrate to a zinc smelter with the indium recovery circuit, recovers the indium, and we'll get paid about 40-50% of the indium in the con. Indium's currently, I think, I might get this wrong because it's quite difficult to work out the spot price, $600 a kilo, 600 US a kilo. So yeah, no worries. Come and see us on the booth. We've got a bar of it there from Korea Zinc. Any other questions? No? Okay. If anyone wants to come and see us at our booth, please feel free. Thank you.
Well done. Great presentation. Thank you. We'll all be practicing our idioms and all the rest of it for the gold bar this afternoon. Now, Tim, we're going to head from Australia now. We're going to go over to another one of the world's top mining precincts. And the company that's coming up on stage now, when you look at their investor profile, there's a little West Australian company that's done relatively well, Northern Star, you know them. They've invested. They're 14% investors in these guys. So the interesting thing is, what is it that they're seeing in you, good doctor, that the rest of us might like to drill into as well. So without any further ado, because you've got a really big cracking presentation, I'm sitting down and you're welcoming Dr. Jason Burton to talk to us about Polar X.
Thank you. Well, Polar X is about to embark on its biggest exploration season in Alaska ever. For the first time, we're really getting the full length of the season, and compliments to the funding, $6 million US funding from Northern Star as we enter the second year of our joint venture. So for those that don't know, we're focused on exploring in Alaska at the Alaska Range Project and also in Nevada. Really, I can't split my favourite between the two. I love them both the same, like all children. And we've got exciting things ahead in Nevada as well. So, in Alaska, we're along the Denali Highway. So, importantly, we're very close to infrastructure. You can drive along the highway to get into both of our Caribou Dome and Zackley prospects. You'll need a chopper for the other stuff, but it's pretty important to be close to infrastructure for developing an asset there. And that's one of the key reasons why Northern Star is involved. Also, Northern Star is not that far away as the crow flies. They've got the Pogo mine. They've got a great presence in Alaska. They've turned that around and increased the size of the resource in a very short time. And they have a great presence up there. A lot of people really have stood up and took notice of what they're doing, and Northern Star is keen to develop their interest in Alaska. Just the quick rundown on the joint venture funding arrangement. So we announced the deal in August last year. It was $5 million US funding, and we've been busy drilling from August, September, and also then we did a lot of re-logging over the winter to prepare for this season. So it's probably the best prepared we've ever actually been going into an exploration season. So the project itself, you'll soon work out why the other reasons that Northern Star wanted to be involved. Part of it's the grade. You look at Caribou Dome, we've got a resource at 3.1% copper. We've also been working on some of the historical assay testing approaches that have taken place and found that there was significant undercalling. So I'd expect that number to change when we come up with an upgrade, probably later on in the year. The other one is Zackley, where we've got copper, gold and silver. And Zackley is a skarn system. Caribou Dome's a VMS system. Like all skarn systems, there's some heat source related to that, and we've been doing a lot of work on that in the last 12 months. So we've got an update to come out on that. We're actually in draft at the moment. If you look at where Zackley is, just to the north, there's a very strong geochemical anomaly. So last year we flew very tight line space, 25 to 50 metre line spacing, right across the tenement for air mag. We've got several very impressive anomalies, and I'm following up those pretty quickly in June with Mobile MT. For those that are unaware of Mobile MT, it takes use of the passive EM field from the Earth. It's been used to great success in several projects. You might know of K92. There's an impressive Mobile MT signature above the porphyry there. So I'm going to use that hopefully to identify some conductors underneath what we've already mapped on the surface, where we can see copper on the surface, and we expect to get a hole into one of those targets at the back end of the season. To kick things off though, we'll be drilling at Caribou Dome once again. The last two seasons we've been focused intently on the structural nature of the deposit, and we've got a good grasp of that, and we're ready to go a lot deeper. This is what the ore looks like when you're in it. You know you're in it. It's quite obviously high grade. But we also have found some stuff there that looks like it's progressing into the high-grade ore body, which hasn't previously been looked at. And it's one of the advantages you have when you take all that historical core off-site and you set up yourself a proper processing facility, and you get the team to work at it all winter. So we think we can expand on the mineralisation style up in Caribou Dome. As you can see, that cross-section there is a complex structural history, but bear in mind, a resource wireframe is not the same as a structural model. We'll be going deeper underneath. That's probably about 300 metres that we've gone down so far. I'm trying to double that depth this season. We've got the rig turning up starting on the 1st of June. We've had a pretty methodical approach, taking on each section line and mapping it in with a lot of detail and putting that together. So we're seeing quite a consistent repetition of structural patterns across the ore body now, and we've got a high degree of confidence that we can take this significantly deeper. Okay, now Zackley. We drilled a lot in Zackley in 2016, 17, 18 period, and we're trying to get back into there as soon as we can. We've done a lot more mapping out there, and we've also done a lot of mapping just to the north of it in Jupiter. We're understanding that system a lot better. There's a lot of magnetite there, a lot of magnetite replacement associated with mineralisation. And the importance of that is when you go into Jupiter and Gemini, you're also seeing that same intense magnetic alteration on the system with a lot of associated mineralisation at the surface. Jupiter itself, it features a lot of magnetite at surface. You get large chunks of it, and you get a lot of copper and gold in the assays. The potential is that this is an IOCG system. Previously, people have looked in the area under the eyes of porphyry, which is probably sending you into a different direction with the rock types you'd expect. I'm neither here nor there about whether it's an IOCG or porphyry. Both are known to be very large scale. For us, that's about the upside more than anything. So we did have success in drilling Mars. Also, a few years back, down the bottom of the hole, we've got about 120 metres of 0.2% copper and about 0.1 to 0.2 grams gold. It was by no means an economic discovery, but it's another part of the system. We do see a very large magnetic anomaly adjacent to this hole, and it's somewhere we would like to go into. Northern Star has expressed very clearly that they're not interested in leaving the Alaska Range until all these targets have been drilled. Okay, so really we started getting a lot of traction with what we're doing up in Alaska when we did the 2024 scoping study. And you'll see that these prices are quite outdated. We've had a large jump in all these metal prices in the last couple of years. But even on the old economics, it's a compelling project. Almost 74% internal rate of return, short payback. Obviously now you'd be looking at around a 6-month payback and probably double that in net present value. Going to move on to Nevada as time's running out quickly. So in Nevada, we're along a new trend called the Humboldt Range, and we think it's an emerging Carlin trend, although this is not the same type of mineralisation that you get in the Carlin trend. But for us, it's a good entry zone into Nevada, where it's it was, at the time I picked up the ground, it was not too difficult to get some ground in Nevada. It's obviously a lot more difficult today. We're positioned amongst adjacent mines and also a developing mine project. So right on our doorstep to Black Canyon is Integra Resources with the Florida Canyon mine. It's a heap leach operation. They're doing about 70,000 ounces of output per annum. And then to our south, we've got two very interesting projects. We've got the Kerr mine, which is the Rochester mine. It's a silver heap leach operation. They have a little bit of gold in there too, but about 400 million ounces of silver. And there's the Saladas Resources Spring Valley project, which is getting developed. It got funded last year by Wheaton to almost $700 million US. They've got a 2-year pre-strip, and they're going to be doing heap leaching all the way through their oxide transition and sulfides. For us, when we found out what they are doing, we took a new look at what we've got up in Black Canyon and in 4th of July, because we're all in the same unit, the Rochester rhyolite, and it's actually leachable in the sulfides. So there's no need to build a roaster. They're getting about 65% recovery in their test work at Spring Valley. So it gave us a lot more confidence to get aggressive on our exploration there. If you look at the numbers that we've got up in the hills, we're actually in an advantage over our neighbours. We've got these high-grade veins running through quite consistently. They're bonanza grades, and that does help with the resource, but it's by no means the actual main game. The main game is bulk operation, and so if you look at the average grade that you've got at Florida Canyon, it's like 0.35. It's very low grade that they're mining. They're mining down to 0.1, and they're just putting it all on leach pads. Likewise with Spring Valley, they're at 0.5 and average grade, and they'll be mining that down to 0.1. Their output's going to be like 300,000 ounces per annum, so they're going to be moving like 30 million tonnes of dirt each year. That's big trucks. Okay, so what we've just announced in the last month was the results from our drilling program up the top of the hill. It's called the Ridgeline Anomaly, and there's a white line there that shows where we drilled this program. It's a long anomaly. It's about almost 4 kilometres long, and we really only got to test about 600 metre strike length. We had a small capacity rig, so we could get it up into the region. And for 13 holes, it's probably the best campaign that we've had. There's a brief summary there. You can tell that the takeaways from this is that we're above the cut-off grade, well above the cut-off grades at our neighbours, but also above their average grades, and significantly above. We're getting above 1 gram, so it makes us quite attractive in their eyes. The other thing too is every foot drilled into the Rochester rhyolite had silver about average 1 gram per tonne. So there's a large presence of silver there. It's effectively a silver deposit, but the difference is it's got some high-grade zones that are bulk mineable with the gold as well. So what's going on there? We're working on that. It's a vein system, epithermal. It's obviously got some deeper heat source. We are able to track it along the surface. Success with the IP, because the gold that we're looking for really is hosted in arsenopyrite, and it's picked out quite well in the IP. So the mission here is to get back up on top of that hill in the next couple of months. We've probably staged that after we've commenced drilling in Alaska, which starts in the 1st of June. Just a summary of some of the recent results. Now, I'll just draw your attention to the 4th of July claims that we've got down the south between us and Rochester. When we first looked at this a few years back, no one was looking at silver and antimony, but as we've taken another look at it, you can see we've got some good antimony grades there. This is all vein related, this stuff, and we've got very high grades in the silver and also gold. So we're going to dust off this project soon as well and put some time into that this season. The 1.5% is their over limits. Obviously, if you're not looking for antimony, you're not going to go say to the lab, go back and check that antimony for actually what the true value is. So we'll find those pulps and we'll get the lab to have another look at that too. So there's a lot going on. We've got great assets in Alaska and Nevada. We've got a lot of belief in our Alaskan assets from Northern Star, as they've just tipped in another $6 million. And we've got also the 100% ownership of what we're doing in Nevada. So I think it's got an exciting 12 months ahead for PolarX, and that'll be followed by another exciting 12 months, because the JV will continue to roll into that year as well. Keep your eyes out for us, and we've got a booth, booth 80. More than happy to talk to people in more detail about what we've got. So, just a bit of the time frame for the year ahead. And buyer beware. Thank you.
Well, that was impressive. Quickly end there. So go and see the team and they'll drill into that more. It's a really big set of projects that they've got. Now, when Donald was up here before, we learned exactly what indium is, why it's so important. We know that China has got about 90% of the resources there, which is why you guys come into play here, don't you? American West, making America not great again, but just great at producing critical minerals. There's some really interesting projects here. Would you please make Dave O'Neill very welcome?
Thank you. Is that on? Yes? Good, thank you. And yeah, a bit more roving this year. I don't look like a baby giraffe up there, so I'll do the Mike Job thing. But look, thanks for joining us, and thanks for the host again, giving us this opportunity. So, as you can see from this first slide, we're a junior mining company, but as you can see, we have a significant amount of mineralisation already defined in JORC resources. And as a bit of a change this year, we're back to the West Desert project in Utah, and we've had the opportunity with some funding to progress that project in addition to our Storm project. So this year I might focus on the West Desert, given the time constraints, but I will touch on Storm as well. We just started drilling at West Desert, and we think we're onto a potential significant discovery in our very first drill hole this year, and so there will be a lot of arm waving. I'm very excited to present the results for this drill hole, and so look, go back to the ASX releases. There's JORC resources, so please use that as your source of information. So as the name sort of defines, we are North American centric company. We do have two distinct projects: Storm Seal up in Nunavut in Canada, which is has been our flagship for a while. We're progressing with pre-development activities there, full on, and we're getting close to finalising those results, and hopefully can deliver some updates to the market shortly. And the other project is West Desert, Utah, and essentially we formed American West around West Desert back in the day, and that's come to the forefront because of this American, the interest in critical metals and the USA. But like I said, we're drilling that now. We think the very first drill hole has stumbled on a major extension and discovery to the system. So just a quick snapshot of who we are. We're a fairly small team. We are highly experienced in mine building and discoveries worldwide with BHP Billiton, Western Mining, Western Areas. So we have the team to execute in these foreign jurisdictions. A snapshot of the company. We're about a $50 million company as it stands today. We have the significant shareholders are management and Ocean Partners, and Ocean Partners is a metal trading company, and they obviously see the value upside and also our ability to execute. I'm also pleased to announce that yesterday we announced a $10 million raise, which will help progress the West Desert project and the Storm project together. So West Desert, and the core you're looking at is from last week. So it's the black-brown mineral in this core is sphalerite, which at West Desert is very high in critical metals as well. So we do have portable XRF on site. We haven't had this assayed, so that's the other disclaimer here. This is all based on visual observations, but we do have portable XRF, so we can't tell you what the gold and silver, etc. will be, but we know that it will be very, very rich in copper and silver and zinc, which I'll talk to. So the things you really need to know about West Desert, the takeaways, is that it's an existing resource. It's 30 to 50 million tonnes, depends on which way you skin it. It's a very large porphyry-related skarn and carbonate replacement deposit. So I'll talk about the geological model in a bit more detail. But we are down the road from Bingham Canyon. So Utah, one of the best mining jurisdictions on the planet. These guys wake up in Salt Lake City every day and see Bingham Canyon sitting there. So they're very versed in mining. West Desert was actually an old mine back in the early 20s. They mined high-grade zinc, silver and lead. And with that, which I'll talk to, they didn't assay at the time. There's a lot of tellurium, gallium, germanium and indium in those dumps as well, which I'll talk to. 24 million ounces of indium as it stands today, 1.3 million tonnes of zinc and significant amounts of copper, silver and gold as well. And that really lays West Desert out one of the largest indium deposits globally, and it's also the largest undeveloped deposit in the US. And I'll just talk about why that's very, very important. And like I said, we think we've extended the mineralisation another half a kilometre along strike, and that's very significant. So power, water, and fantastic infrastructure. Copper, Bingham Canyon, that's where the copper smelter is, and the zinc goes to Trail, BC, and that's got an indium recovery circuit. So very well set up. Now, I do have a slide on indium, and I didn't ask ChatGPT for this, but what is it? I mean, everyone asks the question because there's so many critical metals out there that, you know, it's hard to get your head around it. But like our presenter said before, indium is one of the softest metals. It's got very good geochemical and electrophysical properties. It is come down from the $850 a kilo. It is classified as strategic and critical in the US, so it sits at number 3 on the critical metals list. And that's because 100% of it is imported into the States. So China's, you know, depends what Trump's doing and the administration's doing there. That's not the concern, is what China's doing. And they've actually put a ban on indium exports. And the reason it is important because of this bad baby here, it's a B-21 Raider prototype. And what isn't well known is that indium's used in stealth aircraft coatings. So they're going to build 100 of these, and China's banned the export. So you can see that the local market there is absolutely going to be screaming out for some of these metals. And so therefore it puts us in the right place at the right time, which I believe is, and when, you know, we won't talk too much about the onshoring of the critical metals in the States, but as you know, the Trump administration's put a lot of effort into advancing this, particularly in terms of permitting and funding, and that's what we're trying to leverage into. But the other thing is that the Department of the Interior is also looking at other ways to, I guess, short circuit and bring forward some of these supply chains. And one of the things they're doing is providing funding to be able to rehabilitate old mines. We've done some dump sampling. This is the West Desert dumps, the old silver, lead, zinc mines. And as you can see, there's a fair bit of material there. We've done some sampling of this stuff, and we've found very, very high grades of tellurium, up to over 1,000 grams per tonne, gallium, germanium, indium, plus zinc, lead, copper. So this is an opportunity for us. There's funding available for this. They'll pay you to clean it up, and then we can dig this stuff up and treat it and hopefully get some revenue from that as well. So this is an immediate opportunity for us, something we're looking at in parallel with the exploration. So West Desert, what do we have now? What do we understand about it? So it's a large deposit, I guess geometrically as it stands today, and you know, there has been a PEA done on it in the past, NI 43-101, and they came out with a 60 million tonne resource. But JORC compliant resource, we skinned it a little differently. We've got about 30, 40 million tonnes there. As you can see, it's split into 2 distinct zones. This is porphyry related, but it's a high-grade skarn. And what a lot of people don't understand is that Bingham Canyon, Tintic, these all started out as zinc lead mines. The beauty of these skarns, they're magnetite hosted, and without getting too technical, so there's a distinct magnetic signature with these ore bodies, and so the exploration leads you to these things straight away. And so they stick out you know, in the geophysics very clearly. So that's what happened at West Desert. All the drilling went into this initial magnetic anomaly. They defined this magnetite hosted zinc indium mineralisation, and it sort of grew from there. But 2 things about this, you can see that there's the bottom, the deep zone, that's the carbonate replacement, that follows sediments, that's separated by a large fault. Then you've got the main zone, which is attached to the porphyry. That porphyry's got high grades of moly and copper and bits and pieces, but we're not exploring the porphyry, just to make it very clear at this point. At some stage that could become an opportunity for us, but we want to chase these high grade deposits around the margin of the porphyry. And I'll show you why. Well, firstly, one thing to talk about as well, the bulk of this deposit sits on patented land, and in the States, if you're exploring there, it's very important from a permitting perspective, the classification of your land. So that's private. American West owns that 100%. So we could build a ranch, a restaurant or whatever, but it's, you know, that gives us permitting opportunities to fast track this deposit. This is the image that really excites us, and this is why we've moved quickly into the exploration and seeing how big this thing is. So West Desert, now looking down, is that black dotted line, and you can see, because of the magnetite, there's a very distinct magnetic anomaly where the deposit sits. The light blue above that, and the sort of depression in this magnetic image, the lighter, cooler colours, that's what we believe is the porphyry. But as you can see, 4 kilometres along strike from West Desert, there's a magnetic anomaly that continues across the mountain range there. Our first hole this year, firstly, a couple of other holes that have been done historically in the region, chasing up bits of sniffs of geochemical anomalism, have all hit high-grade mineralisation outside of the resource. So that gave us confidence that there could be more out there. Our very first drill hole, WD2601, has intersected what we believe is the extension to this. And just looking at this picture, you can imagine if there's 30 million tonnes sitting in that tiny magnetic anomaly, how much could be existing along strike here. And that's why we're so excited by this first drill hole. So this is what we hit. So this is now looking, a long section looking north. You can see the West Desert deposit very clearly in the 2 separate zones. So this is only a 20 metre thick interval. It's not showing the whole deposit, obviously, in lock section. So that first hole we hit around 80 metres of visual sphalerite and chalcopyrite mineralisation. That looks very, very similar to the main deposit at West Desert. You can see here the dark, again, the browny black sphalerite in this certain section of core. We do have XRF, and we know that it does have very, very high grades of zinc in certain parts here. The key thing to remember about the zinc and the copper mineralisation here, it's very high grades in indium, gallium, germanium, and or tellurium. So we can't assess that with the XRF gun, but we can actually, we're waiting for the assays on this. One thing, so yeah, as you can see, it's a fair step out, and that, like I said, that magnetic anomaly goes, 4 kilometres to the west. So you can imagine there could be multiple West Deserts along strike here. So it's a very, very significant discovery. It's our very first drill hole. Statistically speaking, that should be quite difficult to achieve, and so that tells you something about how rich this system could be. One thing I won't talk too much about, because it's without assays, gold's a little bit, can bite you in the bum if you don't get the assays right. But what we see here and what we don't see completely at West Desert is 2 things. The porphyry changes and it actually turns more mafic to the east here. Now, over that we get a significant amount of pyrrhotite, potassic alteration with chalcopyrite and pyrite veins through it. So that's in the porphyry. Outside of that we see a skarn that's highly, highly altered. We have pyrrhotite plus or minus copper, but we also have this overprint of pyrite and arsenopyrite, quartz carbonate veining. So what that's telling us, and there's about 230 metres of this mineralisation. So we do have a little bit of gold in West Desert, but it may be, and you see it at Bingham Canyon, you see it at Tintic, all of these zinc, lead, silver skarns do have gold with them. So we could have stumbled across the gold portion of this system. If that is true, then that's a significant development for West Desert. Like I said, we have 230 metres of that mineralisation overprinting this base metal mineralisation. So assays in a month, but that will be a significant change for the project. So what does it look like now? We've got the 10 million in the bank. We actually got 14, but we did the $10 million raise yesterday. That will be put into expanding this. We have 1 diamond drill rig on site. They're deep holes, it's a big system, and so we would like to get another rig on site to accelerate more discoveries. They'll also beef up into the resource side of things. So we're doing 2 things. We are looking at those dumps, the dump sampling there. We want to enhance our understanding of what volumes are there and the grades. We want to also do a resample of some of the historical core where there's this amazing scar mineralisation that's completely unassayed. That'll beef up the indium and resource which is inferred at the moment, etc. And we believe these 2 things, particularly the West Desert, will, particularly if the gold turns out as well, will transform American West into a significant North American asset base, in addition to our Storm project, which I won't have time to talk about today. And well, I do have a minute, so I may as well touch on where we're at. So those who don't know, Storm is based in Nunavut. This has been our flagship project for very good reasons. We've identified 275,000 tonnes of copper and silver up in northern Nunavut. Very well positioned. We're up there last week talking to the government in Iqaluit at the mining symposium. We're moving this forward. We've been looking at the development opportunity here. Those studies are going very, very well. We're putting extra time into it. We want to do it right. We want to do it first time and get it absolutely. But as we've talked about before, very, very simple beneficiation, no need for flotation. This is world leading in terms of processing copper without very, very large capital. And so we're very focused on delivering this project and, delivering for our shareholders going forwards.
Thank you, Dave O'Neill. All right. It also screams when you bend it. That's another interesting fact you might not have known about it. All right, look at this fella here. When he came up on stage last year, you said, Lefroy, exploration, we're exploring, but we're going to be a producer. When you're on the roadshow in September, we are on the cusp of being a gold actual producer, and in February, you were scoffing champagne with your nice big gold bar standing in the middle of your friends. It's a great photo, by the way. Would you please make welcome the very happy Graham Gribben to hear what's next in this story and should we invest?
Thank you, Chrissy, and to RIU and to Vertical Events for the opportunity to talk today. Apologies if my voice sounds a bit deep. I'm just recovering from a head cold. I'll try not to cough. Yes, as just mentioned, we have had a pretty exciting 12 months and Lefroy's growth strategy is very simple. Produce, which is a recent thing for us, convert and to discover. So I'm going to get through into the details right now. Production of gold is an exciting advancement for the company, which we achieved this year in February, our Lucky Strike project, and that really is one of the key pillars that will grow the company going forward. Converting our resource base is another really important one. What sets us apart from a lot of our peers is having over 1 million ounces of gold resource base, and a real opportunity to grow that resource base. And I'm sure when you see some of the updates I'm talking about today, you'll agree with me. And then discover, taking the profit you get from the gold production, and then unlocking the full discovery potential of the Lefroy Gold Project. So 3 really parallel growth strategies for the company. So just a snapshot there. Share price there, 16 cents, market cap just shy of 40 million, 248 million shares on issue. I think you'll agree we're very cheap for a company that's producing gold, on the cusp of getting into profit share distribution with our mindshare partners, BML, and having a 1 million ounce gold base. And we've got 1.4 million cash in bank. It's important to have good real estate, and we are proud of the location that we're in Kalgoorlie. Those that aren't familiar with that part of the world, we're just 35 kilometres south of Kalgoorlie, surrounded by giants, not just from a company sense, but from a mine sense. So we've got Northern Star and St Ives to our west, Black Cat and Vault to the east. There's no greater place to be discovering, developing and mining gold in the district. We're surrounded by existing milling infrastructure, haul roads basically flanking our tenement package, and we have a very compelling and contiguous land package there of 630 square kilometres, and within that, the 1 million ounces of gold and an opportunity to really grow that. So I'm emphasising the 1 million ounces, but it's a really important part of the company and why we're unique and why we see a lot of growth potential. We put out an announcement this morning, updated the Mount Martin MRE. So I encourage you to go to the website or the ASX or come to the booth this afternoon and talk to me about it. So that resource has been updated to 460,000 ounces. Just the grades improved up to 1.6. We're very encouraged that project's going to grow, so much so that we haven't waited. We've already got a rig on site, and we're doing resource extensional drilling as we speak. and an initial 4,000 metres of drilling, but that'll expand. And we've already committed to the company commencing its inaugural scoping study on the project in this quarter and advancing. So we won't be waiting for that drilling to complete. We'll start the scoping study and then look at upside as well at the same time. Lucky Strike, we're mining at Lucky Strike, but we also see there's an opportunity to expand, not just the mine, but also the resource. So that initial 79,000 ounces has potential to grow. We continue to mine. That first toll milling parcel of gold was generated in February, and we're seeking to advance further milling slots throughout the year. And of course, Burns, there's a high-grade core to Burns of 4.2 million at just 1.2 grams per tonne that's within a broader 500,000 ounces of gold. That high-grade corridor is really the area that we're seeking to focus to advance the resource at Burns. And so these three projects together represent a compelling growth story for the company, and we've got plans in place for all three. Just touching on Lucky Strike, as Chrissy mentioned, basically in 12 months we've gone from signing an agreement with BML, who's a Kalgoorlie-based mine profit share group, to pouring first gold. So that's pretty fast in anyone's book. The important thing to stress here is there's no upfront cost for Lefroy. BML are paying for all the upfront costs to mine Lucky Strike, and only once their upfront costs are paid, then profit share distribution occurs between the parties. So that's a really important thing to emphasise. We've also, as I said, poured first gold in February, and the future profit share distribution, which we'll see into the back half of this year, will help fund and advance a lot of our other projects, resource expansion and exploration. That's a picture of the pit there. That was, I think, January of this year, so it's gone down a little bit further since. Talked about expansion. So you'll look in this image here, and to the left is the stage 1 pit that is currently being mined. There is a proposed stage 2 southern pit, and the company did a whole bunch of drilling at the end of last year to assess the potential to have a more expanded mine. You can just sort of see some of the numbers there, 8 metres at 18.6. So there's a high-grade component to this Lucky Strike system. It's hosted in a banded iron formation system, which geologists in the room know those systems can have, when they run high grade, they can go very high. Just zooming in there, you can see the stage 2 opportunity. So we did a whole bunch of drilling, including some geotechnical work, to understand, is there a bigger pit opportunity here? And some of these numbers in and around and on the margins of the resource can say that there's definitely potential. 24 metres at 5 and 9 at 8.5. So this is all really encouraging. Again, this has actually been paid for upfront by BML, so as a sign of their interest and in the project, they've been paying for some of this sort of resource extensional type work so that they're committed to the project as well, and so we're keen to advance that. So I mentioned that the company updated the MRE, the mineral resource estimate for Mount Martin, and then the announcement was out this morning. I've just got an image there of Mount Martin. It's on location 45 freehold property, so we acquired the interests in that ground 2 years ago from Franco-Nevada. They hold the title over the freehold, and we have a 21-year 21-year mineral rights agreement with them, with an option for another 10. It's right up on the margin there with Northern Star. It's this haulage corridor running due north towards Kalgoorlie. Again, fantastic bit of real estate. Being freehold land, you skip a whole level of bureaucracy in terms of what you can do on that land. So it's a far more streamlined path to potentially going down the path to mining. There's the resource update that I mentioned. There's a lot of exploration upside we see at Mount Martin, hence why we've got a rig turning there, and we plan to keep that rig going through this current quarter. Systems open along strike, predominantly down plunge to the north, but also to the south, and we've got that 4,000 metre program underway. And as I mentioned before, scoping study is set to commence in this quarter. Just further giving a little more detail, so there's the indicated and inferred split. Grade popped up a little bit to 1.6. And I'll draw your attention to the long section, just to the bottom of the image there. So the red being indicated and green inferred, the resource classifications, and the system is open. You can see those northerly plunges to the system, but also south of the south shaft there is, it's basically untested. So there's a lot of upside. The mineral resource was completed. The last one was done 2 years ago, 24. What we've done, the change between the two, naturally the gold price has shifted, and so some of the assumptions have changed as well. We've included material below 200 metres. The last announcement, the last update clipped the resource at 200 metres from surface. We've applied the same cut-off grade, and all of the resource is reported and constrained within a 7,000 Aussie pit shell. We've run scenarios at a lot less than that 7,000. The system is very robust at lower gold prices, but that's which is encouraging as well. I mentioned it's untested predominantly to the north and south. Just another image there, this time in cross-section, just demonstrating there's an existing pit on Mount Martin that was last mined in 2009 by Dioro, and so this would be a significant cutback, predominantly cutting back on the main shear and the east shear. You can see those corridors in that cross-section. Apart from the resource growth, apart from the mineral resource update, which the company put out today, there's a significant growth story, and I'm just giving a little more colour here to some of the exploration upside we see. So the polygons in yellow represent where the drill rig is targeting right now. The grey corridors are the shear zones within which the high-grade gold corridors are located. I'll draw your attention to some of those numbers to the side there. These numbers are all on the northern flanks of all of these shear zones, north of which we basically have no drill holes. So the system is just waiting to be drilled. So 8 metres at 4, 10 at 8, 3.8, all of these within 30 to 40 to 50 metres of surface. So the drilling program we're doing is all testing the top 150 metres, so testing high grade, shallow resource extensions, which is what you're wanting to find, sorry. This initial program should be completed mid-month, and so we anticipate assay results pending the up and down cycle of assay labs in Kalgoorlie to be available in June. Lastly, but certainly not least, Burns. I mentioned that the company is seeking to grow Burns in the high-grade corridor, and the image on the left there demonstrates Burns with the resource showing only the material above 0.5 gram. And you can see that it's in a linear north-south trend, and it's structurally controlled within the Quimby shear zone, which is that grey corridor you can see in the image. The previous drilling was basically to find a zone extending over 650 metres, and importantly, that high-grade zone is 98% indicated drilled and 2% inferred. So there's a very high degree of geological and resource confidence at Burns, and that gives us a lot of confidence to look for extensions to the system, particularly to the south. Another view of Burns, this time in cross-section, and I'll draw your attention to it's a very shallow cover before you get into high grade. This is on Lake Randall. You mention lakes to people and they think, oh, 100 metres of cover. This is very shallow before you get into some really high grade material. And I include this slide in all my presentations because I never get sick of these intercepts. There's some really thick system mineralisation there, 39 metres at 3.8, 61 at just under 3. This system has a very high grade core, and it's consistent in that zone, and there's the material, basically the deposit's open along strike. What have we done recently? So in January we did complete a drilling program confirming the northern up plunge component of the system, but also additional metallurgical sampling to confirm previously completed encouraging met results from Burns. So that work was completed, the assay results are returned, Some very nice numbers there. The 20.8 at 2.6 is within the fresh, and then some nice oxide material there, 30 metres at 5.7, so it was nice to see that. The metallurgical results are still pending, so we'll obviously report that when we receive it. And what it means for Burns, the company will seek to do a resource update of Burns, focusing on that high-grade core. So redomaining the wireframes, focusing on the high grade, and then using the results from that update to further explore the Burns system and hopefully add ounces. Of course, you always look for more gold next to where you already have it. So Burns is to the bottom of the image there, and as you span across that 4-kilometre corridor, there's a whole bunch of anomalies that have mineralisation within the top 40 to 60 metres that basically haven't received a hell of a lot of drilling, certainly in the last 3 or 4 years. So we're very encouraged by this. We're going to take the learnings from Burns. We know that these systems are structurally controlled, and we've identified where there's additional structures along that corridor. And so that's a big part of our exploration growth story, if you like, is finding further targets of Burns. So we've got a very busy timeline ahead, apart from advancing Lucky Strike through toll milling, further announcements and ongoing mining. Mount Martin, we've done the update. We're advancing to a scoping study and future resource exploration work. Burns, where we've got an update to the resource, followed by future drilling there as well to unlock growth there, and of course all our broader exploration programs. So in conclusion, our growth strategy is very simple. Funding growth through ultimate cash from the Lucky Strike project, expanding our 1 million ounce gold base, particularly at Mount Martin and Burns, and obviously unlocking further exploration growth through our broader tenement package. And I've only done it in 4 seconds to go. Thank you.
Well done, Graham. Even with a deep, husky voice. Well done.
No worries, thank you.
A lot to talk about. That was fantastic. Thank you. It's nice to see the success stories, isn't it? We've followed them from explorer right the way through to producer, and who knows where else. Look at this fella here. He calls himself an MD in charge of a team of proven mine builders in South Australia. Is that in your business card there? Is it?
Absolutely.
This is Lachlan Wallace, everyone. So he's going to take us to South Australia. And this is a project that they're on track as well. So next year could be the same story. They're on track to build Australia's only pure play silver mine. Would you please make him welcome?
Thanks, everybody, and good morning. The Paris Silver Project, located in South Australia, is one of only a handful of pure silver development projects all over the world. At current prices, really high margins. Free cash flow generation, $1.9 billion over an initial 11-year mine life, and we are actively running towards getting this into production. So we released a DFS in February, raised and secured some money in March, and now we are fully focused on execution. Paris is a really rare combination. It is a pure silver project in a true Tier 1 jurisdiction. It is a very simple, low technically complex operation with really strong economic margins, and importantly has a clear pathway through to development. So I've mentioned pure silver, and I guess the reason that's important is in Australia, silver is produced predominantly through lead and zinc mines with silver as a byproduct, and it's only the component of the silver within those, lead and zinc concentrates that is seeing the upside of the rise in silver price. At Paris, we'll be quite different. We're planning to produce a silver doré. This is a silver bar. It's sold directly to the bullion dealers like ABC Refinery, one of the major sponsors here. And as a result, we are fully leveraged to the rising silver price environment. From a simplicity point of view, this is a very conventional open pit mine, shallow ore body. It's an off-the-shelf equipment with regards to processing flow sheet. And we are bringing forward high-grade ore to enable early, strong cash flows, which enable a really rapid payback of around 12 months. Now, importantly, the Paris project is located within about a 15-long corridor of silver mineralisation. Most of the drilling has been around the Paris pit itself. However, with future drilling, we would expect to be able to leverage the infrastructure we built at Paris to see a broader district scale opportunity. So what we have here is simplicity, but with scale as well as high margin. In terms of the macro, it was mentioned earlier, I guess some of the geopolitical events that are going, the Iran conflict, I think, is put into very sharp focus. The fact that the world still relies heavily on fossil fuels, and when that model is disrupted, things get pretty tight pretty quickly. And what it really highlights is that the push towards a decarbonised economy through electrification really does matter. And at the centre of that is silver. Silver is the most conductive metal known. It's used in all manner of green energy technology, EVs, solar panels, and as that world continues to decarbonise through electrification, that demand for silver continues to grow. But the supply side is really quite tight. The majority of silver is mined as a byproduct of copper, gold, or lead and zinc mining. There is very little primary silver production. And these gold and copper miners are not changing their production profile to get a little bit more silver just because the price has gone up. The supply response is effectively price inelastic. And of the silver that is mined, around 70% is coming from Latin America, Russia and China. So hardly the poster children for geopolitical stability and operational success. They are regions that are plagued with supply disruption. So what we have here now is a rising demand, tight supply, and over the last 5 years that has led to a deficit in the silver market, and that has driven prices up to record highs earlier this year. And as the world continues to decarbonise through electrification, that deficit is forecast to continue. And this is, I guess, the macro that we are developing a pure play silver project into. So project economics, it's 11-year mine life, $1.9 billion free cash generation, $1.2 billion NPV, 93% IRR. We have a manageable capital load of $260 million with an all-in sustaining cost that facilitates operating margins in excess of 60%. As a pure silver producer, every $1 in US silver price increase translates to an improvement in NPV of $27 million and an improvement in free cash flow generation over the life project of $42 million. Because we're bringing forward the high-grade material, we're able to get those early cash flows, enabling a payback period of less than 12 months. So what we have here is a capital management load that's financeable. We end up with a high-margin project with a rapid repayment. It's exactly what lenders are looking for, and that's why we're getting a lot of inbound interest to fund this project through construction and into production in the near term. The project that underpins those excellent economic numbers is really simple. I was going to hammer that point home today as we work through the presentation slide deck. It's a basic open pit conventional flow sheet that's used in primary silver operations all over the world. It's located importantly within South Australia, a mining state that is, a friendly mining state with a strong jurisdiction and importantly a clear framework through to development. The project itself is located about 2 hours west of major mining hubs Whyalla and Port Augusta, so really good access to skilled labour, equipment and support services, and importantly we have a social licence from community, so strong community support to build this project. So what we have here now, good project economics, simple project, which I will talk to in more detail as we work through, but importantly we're also in a position to deliver it. We have over $60 million cash at hand to be able to work through the remaining work streams, which is the detailed engineering, the permitting, as well as the financing streams as we continue to grow with organic exploration along the way. But importantly, we also have a delivery team that has built mines before, including the last mine that became operational in South Australia, the Kanmantoo 2 underground copper mine, which was taken through from early stage exploration through to free cash flow development in about 2023 and is still humming along today. So it's a proven team that knows how to build a mine in this state. From the growth expansion point of view, we have a team that has taken this project all the way through from initial discovery to now 57 million ounces of resource and still continuing to grow. But what is interesting is that with all of the macro environment, the risk-off nature that we find ourselves in at the moment, we have an extraordinary value disconnect. We are trading at an EV of around $90 million as we stand here today, and which is around or less than 8% of our project value. So an extraordinary metric when you look at an advanced project of this stage. And I fully suspect that as we advance this project through the detailed engineering, de-risk it further, that we'll start to see that gap between our $90 million EV, $1.2 billion NPV start to close, which obviously represents a really nice value or investment opportunity for you guys here today. So I've banged on about simplicity. Let me show you why this is a really simple project. The ore body itself is shallow, it's tabular, it's flat. So all the drill holes we do are vertical because there is no real structure to this. It's basically 1.2 kilometres long and growing. The ore body itself is up to 400 metres in width. It starts only 10 metres below surface and the maximum depth is only 175 metres. It's a quarry. Like, it's very low technical complexity in terms of, and really well set up for low cost bulk open pit mining. As you can see in the image there, we stage the development really just to bring forward that high grade ore, making sure that we get some strong early cash flows that enable us to repay within that 12-month period. In terms of the ore body itself, the geometry leads us to not only, I guess, grade stream, but we build these enormous stockpiles, and that provides the business with a fair degree of project resilience. It effectively decouples the mining from the processing, so if there are any, I guess, misses or short-term schedule variances within the pit itself, we're not dropping into benches to trace ore to try and feed the mill. We can just rely on these large stockpiles, which, after the first year, the equivalent of about a year and a half's worth of processing. So they are material stockpiles that build very quickly, and that's just because of the flat, shallow nature of the ore body. In terms of the processing, I guess the key takeaway from here is it's simple, it's reliable, it's predictable. It's a very standard flow sheets used in primary silver projects all over the world. It's basically a three-stage crush, grinding down to about 53 micron through a whole of ore cyanide leach, and then recovering the pregnant solution through Merrill-Crowe process to produce a silver bar. So very standard, proven technology. All of this is off the shelf. There is no novel technology here, no weird chemistry, all very basic, predictable, reliable, dare I say boring, but that's exactly what you want out of a processing facility. Importantly, because we are producing silver doré, so a silver bar, we're not dealing with any complicated logistics. We're not dealing with any opaque offtake agreements. We're not having arguments with Chinese smelters at disport over the quality of the concentrate. It's a very simple process to take this straight down to the bullion dealer and receive cash on delivery for those proceeds. From a cost point of view, key takeaway really is this is a fundable project that will be built. So from an all-in sustaining point of view, Aussie about $40, so $28 US, enabling over the life of the project operating margins in excess of 60%. Importantly, all of these costs have been built with third-party inputs or market pricing, so they're defendable and they're robust. Similarly with the DFS, $260 million, so a really manageable capital load all in to be able to get this up and running, including the working capital requirements. Again, with the DFS, we use very conservative assumptions all the way through. We didn't seek to try and optimise every single line item and left plenty of fat on the bone so that as we continue to work through the detailed engineering process, which is what we're into now, we are expecting to see some improvements to both cost and schedule with regards to the deliverability of this project. And this was deliberate. I mean, really, we want to be able to take this project at this current DFS level to financiers and have it stand up to lender scrutiny. So what we really have here, I guess, is a manageable capital load with high margin and with that conservatism built in that enables future upsides, exactly what the lenders are looking for. In terms of permitting, just draw your attention to the picture here. It's flat, it's dry, sparsely vegetated. It has a highly saline groundwater that cannot support any livestock. There's basically no competing land use here. Importantly, we're located in South Australia. So this is a mining state where $1 in $15 of the state domestic product is coming from mining. They support mining, and this is recognised really quite clearly recently with the Fraser Institute, not only recognising South Australia as #1 globally for mineral potential, but importantly, #4 globally, #1 in Australia for mining investment attractiveness. It is a true Tier 1 mining jurisdiction. It does help that we built mines in this state before. We've got an excellent rapport with the state government because they put a lot of time, energy and resources into permitting a mine, and they want to be sure that the proponent will then go and build that and bring that economic activity into the state. And with us, they know they've got a proponent with a track record who has done that. In terms of native title, we have an excellent relationship with our traditional owners. It's been built over 13 years of positive engagement. During that period, we have undertaken 5 formal heritage surveys. There's been a number of areas further afield, a little way away from the project that have been identified as culturally significant. We've agreed exclusions around those and designed the project in consultation with our traditional owners to ensure that every party is getting what they need out of this project development. And designing it in a collaborative way like this just means that we get the best outcome for all parties involved. So we are aiming to submit our mining lease application in the middle of the year and suspect that that will be permitted then within about 12-month time period. In terms, so now with the DFS basically complete, we are now very much focused on the execution, so how we take this through to FID in preparation for construction. So as I said before, well-funded $60 million. This is basically going to enable us to go through from a detailed engineering through to the issue for construction work packages ready for the construction on the site. It enables us to engage contractors to start look at some of those long lead items as well as well as consider some of the pre-FID activities, so camp construction, roads, such that when we hit FID, we're ready to start on ground and start this build. In parallel to that, we are working through the financing process to ensure that these two dovetail together. So once permitted, financing's lined up, engineering is done, and we can commence construction immediately. In terms of the funding, it also enables us to continue to expand. So the pit design that you see there, that is the DFS design, but the optimisation was done at $48 US. So we're currently trading about $73, about 50% higher than the optimisation. But even at $48, it was wanting to push into these areas highlighted by the black squares. But we deliberately constrained the pit because these areas are inferred in nature, so they have a lower geological confidence. So we're now out there drilling these as we speak. We're about 65 holes into an 80-hole program over these areas, and I suspect that as we increase that drill density, the geological confidence increases, and what we'll see here is the pit expand and value of the project improve. In addition to that, we have fully, between the cut-off grade that was assessed at $48 and the current price of $73, we fully have an extra 6.5 million ounces of silver that sits within that. So we are designing the tails dam with expansion in mind to be able to accommodate not only the increase from the cut-off grade based on current price, but also the expansion of the pit and other tenements that we're looking at nearby. With regards to Paris, it really is just the start of the process. So it is housed within a 15-kilometre long and growing silver mineralised corridor. There are numerous hits that have limited drilling associated with them. They include towards the north about 5 kilometres, 8 metres at 1,260 grams per tonne, all the way down to to Athena at the south, so 20 metres, 160 grams a tonne. Including 5 at almost 500 grams a tonne. So obviously all of these opportunities here have a much lower hurdle through both permitting and economics, given their relative proximity to Paris. From a timeline point of view, very much just focused on bringing those work streams, those permitting, the engineering, as well as the financing together as we continue to expand through growth. So I guess to close, what we have here is a Tier 1 project, pure silver, located in close proximity to existing mining services, and with a huge opportunity to continue to grow longer term. So we have 1 second to go and we're done, but if you'd like to find us, the booth is out there and be happy to talk to you in more detail. Cheers.
It is, and you'll be there. Lachlan Wallace, everyone, please make him very, very big round of applause. Now this fella here is going to round out session 1 at day 1 at RIU. Scott Williamson. Again, this is a company which is unashamedly looking to move towards production from Explorer. They're moving heaven, earth, and a heck of a lot of dirt to do so. He doesn't need much more introduction, does he? Scott Williamson, everyone. Let's hear about Horizon Gold. And a round of applause. Correct, that is right.
Thanks, Chrissy. Yes, we are looking to move a lot of dirt, and you can see there's already a fair bit of dirt moved in this project already. Gum Creek Gold Project, it's previously operated gold mine. You can see on the left of the screen is Swift, on the right is Swan, and then on the horizon is Kingfisher. So there are 3 of our flagship ore bodies, and you can see there 1 million ounces has already been mined at much lower gold prices. Really excited to restart the Gum Creek Gold Project, which was previously the Gidgee Gold Mine. So we have 2.3 million ounces at 1.9 grams per tonne, so it's quite a high-grade mineralised system. We're going to focus on 2 mining areas, Gidgee Shear Zone, which you just saw in the first slide, which has 1 million ounces at 2.1, and Howards, which has 250,000 ounces at just over 1 gram per tonne. We have a feasibility due at the end of this half. We're just going to focus on shallow, free milling, open pit to start with. This system has a lot of underground potential as well, which we're currently drilling. We're drilling at Kingfisher, following up on some really high grades there. We've got 2 diamond drill rigs operating at Kingfisher, and we've also got 1 RC rig that is extending the oxide open pits throughout the belt. There's been 37 open pits mined over this 80-kilometre belt, and they're all open along strike and at depth. So it's a completely underexplored greenstone belt. It has 1 million ounces of previously mined, and we think there's many more millions of ounces to be found and produced over this coming years. There's a number of other operators in the region. So there's 6 operating gold mills within 150 kilometres. So right in the heart of the middle west goldfields of Meekatharra, Wiluna, Mount Magnet, Leinster. Some of the biggest multi-million ounce gold systems in WA surround us in this prolific gold belt. You can see the historic production. It previously was focused on open pit mining for the first 10 to 15 years. They mined at 3.5 grams per tonne at much lower gold prices. So this mine has only operated at gold prices less than $1,000 per ounce. It then went into underground mining and has missed the last 20 years of gold price appreciation. And obviously because of today's gold price, we'll be mining at much lower grades and larger throughputs. So we want to be mining at around 100,000 ounces per annum for a minimum of 10 years, and we think this goldfield could be mined for the next 20 years. So we'll just zoom into the project thanks to Verify. You can see that 100-kilometre radius. You've got those major gold systems out at Meekatharra, Wiluna, Sandstone. We sit right in the middle of that triangle. We think it's time to build another one. These will be filled. So over the coming years, the capacity of these mills will be reduced significantly. So we think it's time to build a new 2.4 million tonne per annum CIL plant, and we could potentially be a toll treater of other opportunities in the region as well. So zooming into the Gum Creek Gold Project, the feasibility study, which is due in June, will be focused on 2 mining areas at Gidgee and Howards. The reason we've just focused on those 2 mining areas is to simplify the permitting process and simplify the story. Outside of that initial study, there's another 30 deposits to bring in at a later date. You can see the existing processing plant. Unfortunately, that is too small, so we'll get rid of that. We'll build the 2.4 million tonne per annum out here to the left of screen, and we're actually going to utilise the existing ROM pad. That's our main ore body over here at the Gidgee Shear Zone. So the 2 flagship assets are Swan and Swift. You can see there's been significant previous mining at both of those ore bodies already. And then that Gidgee Shear Zone heads down to the south, down to Kingfisher, where we currently have the 2 diamond drill rigs drilling out the underground potential of Kingfisher. The undergrounds will not be in the initial study, but they'll be brought in later date. The beauty of these underground mines is they can bring in high grade in the order of 3 to 4 grams per tonne, which would displace the open pit material, which is around 1.5 grams per tonne. And that could bump our ounce profile above the 100,000 ounce per annum. So back to Swan and Swift, you can see it's a large mineralised system, 1.3 kilometres wide. One large open pit will be mined at Swan and Swift, and right next to this Swan Swift open pit will be the 2.4 million tonne per annum CIL plant. Conventional, free milling, simple as it comes as far as metallurgy comes, and we will also consider a 3 million tonne per annum scenario, which we'll include in the study. 3 million tonnes per annum has the potential to bump us above that 100,000 ounce per annum run rate. So just zooming out to that Gidgee Shear Zone, we actually have 3 sort of parallel structures. We're now just going to fill in the gaps. All of these ore bodies are open along strike, so we've got the RC rig just peppering the strike extensions of these oxide open pits. We're drilling 80,000 metres this year. We're going to put $20 million into exploration, not because we need to. We've already got 2.3 million ounces. But we think that this is a system that could be mined for not just 10 years, but for 20 years. And we want to show that with the drill bit over the next 12 months. So zooming into Swan and Swift area, It's a high-grade mineralised system. We want to bring the open pit down as low as possible. There's gold everywhere. It's almost like a confetti, and that's why we want to go open pit mining here and get as deep as we can on those high-grade chutes. You can see it's a high-grade system running above 2 grams per tonne. Previous owners actually went underground and they were chasing those high grades, so you can see some significant ounce to 2 ounce per tonne intercepts. The plan is to try and take the pit down as low as possible, and we'll mine out all that high grade within the open pits. So Kingfisher, this is a much more tabular, more conventional underground mining opportunity. Currently drilling the down plunge extent, so it's heading down here. And there is a previous underground there, so you can see the previous owners set up the underground quite nicely, so we could dewater and be in there very quickly for very low capital intensity. Some of the grades that we're following up here at Kingfisher, you can see in the order of an ounce per tonne throughout the system as well. So we're quite confident there'll be an underground here. That is on top of the base case, which will be open pit mining for the first 7 to 10 years. If we bring this in, this will come in early in the mine life and increase that ounce profile by displacing the open pit material. So that's the Gidgee Shear Zone, sits here. The new processing plant will be right next to that. We're also going to truck in Howards. So this is our second mining area that will be included in the feasibility study. Howards is a larger bulk tonnage, lower grade, low strip ratio. So no existing mining on this, no oxide, it's straight into fresh, but free milling. So good, strong recoveries and low strip ratio. So that'll be a good top-up base load feed that we'll bring in from Howards. So they're the two mining areas that we'll focus on. The study will come out at the end of the half. Outside of that study, we have the underground at Kingfisher. We also have Wilson's. Wilson is the most defined ore body in this greenstone belt. It has the most deepest drilling, and it is also the highest grade. To mine Wilson's, we would need a concentrator, so we will consider adding a concentrator onto the CIL circuit. You can see significant grade at Wilson's, around 4 to 5 grams per tonne. So there is the opportunity to add Wilson's into the mine plan through the addition of a concentrator. So nice little underground mine at Wilson's. This could do 50 to 60,000 ounces per annum. You add that to the 100,000 ounce per annum from the open pits, and you're in the order of 150 to 160,000 ounces per annum. Currently trading at a significant discount to peers. This chart was done a couple of days ago. It's actually even cheaper today. So we're trading in the order of $80 to $90 per ounce. A lot of our peers at similar stage of development, which is the final stages of studies, are trading at $200 to $300 per ounce. I think once the market realises how well advanced we are, we should trade more in that $200 to $300 per ounce range, which is a 2 to 3 times uplift from today's prices. So it's a story that hasn't been well promoted yet. It's only just the last few months where we've really started telling the story, bringing the capital markets along the journey. And the journey is into production. There's not many WA gold developers that will be producing in the coming months and years, and we will be one of them. And so you can see a lot of our peers that are in production are trading with $1 to $2 billion market caps. We're currently trading with about a $200 million market cap. So in summary, we have 2.3 million ounces. We're adding ounces at about $20 an ounce. We're looking to spend $20 million on exploration. We're going to drill 80,000 metres, not because we need more gold, but we want to show that this is a mine that will be mined for decades. And it's about creating the excitement around exploration and the underexplored nature of this 80-kilometre greenstone belt. We're simplifying the story by just focusing on those two mining areas, being the Gidgee Shear Zone, which has Swan, Swift and Kingfisher, and Howards. And that will be the focus of the study, which is due at the end of the half. 2 diamond drill rigs currently on Kingfisher. We'll swing one over to Swan, try and hit some of that ounce and 2 ounce per tonne dirt. We've got existing mining leases. We own the pastoral lease. We're in a prolific gold belt surrounded by multi-million ounce systems and existing infrastructure. We have a team that has built, owned and operated mines all around the world, including Africa and Australia, so the ex-Resolute team. So we've got a team that has built in more difficult jurisdictions than WA. It's probably the best time I've seen in my career to be building a mine anywhere, but particularly in Western Australia. The best capital markets I've ever seen, both from an equity and debt perspective. So the time is ripe for another gold producer on the ASX, and looking forward to the journey. And welcome to the Gum Creek Gold Project and Horizon Gold. Thank you for your time.
Well done, Scott. Great presentation. I like the way that you've got verified. You've got everything in gold bars. Looks like gold bars, you know, when you do the picture up there, the pictorial display, sort of giving us the taste there. I like it. All right, Tim, we're going to take a break. We'll be back in this room at 11:15, and I've got Michael Frappel from ABC coming in to discuss gold in these uncertain times. Go out and grab yourself a picture with the big fat gold bar, grab some morning tea, and we'll be back. We'll be ringing the bell and you'll hear us, and for those of you playing along at home, enjoy your break. We'll be about sort of 25-ish minutes. Thank you. Right. I've got a bit of mood lighting in here now. Lovely. That's what I love about this particular conference room is we've got that lovely connection to the outside. So it doesn't matter how many hours we're staying here, and we're staying here for many hours over the next 3 days, you sort of got that connection to the outside. Now, I went through the auditorium, had a walk around, checked out the hot chili, the food, the drinks, etc. And I also got as far as ABC Refinery and picked up my mandatory chocolate. And I had a bit of a chat with our next presenter up on stage, the great Mr. Frapple from the ABC Refinery, who assures me that the lines around the actual retail side of things for gold have got a little bit shorter. I think this time last year we were talking about lines that was stretching out around the block, etc. But he is going to give us an insight into gold, obviously as an insurance policy, many of us use it, but also what, things like whatever the Mr. Trump was doing this morning in the Strait of Hormuz, God knows, but it's uncertain times. So let's see how gold sits in that particular parameter. Please make Nicholas very welcome.
Thank you very much. So, gold trades in a regime of almost constant geopolitical change. What seemed alarmingly corrosive just a few months ago, and by this I mean mere calls to invade Greenland or perhaps Canada, has long been overshadowed by events in the Gulf, which may yet cause a sharp drop in world demand as high energy prices impose a tax on consumers everywhere and create other second and third order effects. For example, countries dependent on energy and fertilizer imports possibly experiencing food shortages, which may then turn into civil strife. The situation currently can be seen as multiple overlapping theaters of conflict marked by fragmentation, of which tensions between the United States and the remainder of NATO and last week's split in OPEC are the most obvious examples. And let's look at current events this way. Right now, two superpowers are caught in the vices of their own making, with their foreign policies now subordinated to the mid-sized powers they chose to challenge and intimidate. Admittedly, one of those superpowers is of a rather rickety nature, but their nuclear capability and ability to disrupt events means they remain in the superpower club for now. Conflict involving states such as Iran and Russia have very unclear timelines for resolution, and that means that inflationary shocks and the scope for demand destruction, especially for key oil and gas importers in East Asia and Europe, are correspondingly hard to design a policy response to. What does seem fair comment is the effect of the ongoing closure of the Strait of Hormuz is very underpriced. In all of this, however, gold has underperformed. It's down almost 20% as of the time of writing in US dollar and Aussie dollar terms. We need to ask what's going on. There are several influences. Recent performances, by which I mean the huge rally from December 24 to the recent high of 5,600, have been phenomenal. Gold's rolling 12-month Sharpe ratio, its measure of risk-adjusted return, hit historic highs recently, and that was good. But gold suffers periods of underperformance after hitting highs in that metric, and recent underperformance should perhaps be seen in that context. Real yields have risen as a response to events in the Gulf, and that has been a headwind for gold. I'll catch up here. Additionally, the dollar has benefited from a flight to safety. Now, there are two very good reasons for that, in my opinion. Firstly, the sharp rise in the price of oil is a balance of payments shock to oil importers. I'm going to refer to oil and gas somewhat interchangeably to some extent, but how much you're affected by one as opposed to the other will depend on where you are. America is a net importer of oil products, and that means that while it too faces higher prices at the pump, it doesn't face the balance of payments shock that a Korea or a Japan, a Eurozone or a China will face. Hence, the dollar is going to outperform in that environment. The second reason is the huge concentration of tech assets in America and the vast demand that tech-related capex has on America's economy. This isn't just a today thing, but it's in full swing right now. And it attracts foreign assets seeking outperformance, and that is underpinning the dollar as well. It's not a forever thing necessarily, but so far one constant seems to be that the behavior of the Trump administration has yet to visibly put a dent on this aspect of American exceptionalism, so far at any rate. And then gold itself has lately been trading a little bit more, or adopted some of the characteristics of a risk asset. Some explanations for that touch on the investor profile and portfolio demand being a very large part of total gold demand. That's true, but it's not uniquely so. There is evidence of positive correlation with the biggest equity index, and those indexes are being affected by what's going on in the Gulf. Gold is liquid, investors have made good money on the whole, and that allows those investors to sell if facing stress in other assets. On top of that, there's been a significant re-rating of the expectations of Fed policy since February. Until then, the powerful narrative behind gold's positive story was the expected program of Fed cuts in 2026. Those cuts were based on a somewhat bearish view of the American economy, and perhaps also on the view that President Trump would get his way and determine policy rates. Data didn't really confirm the first of those. The labor market showed resilience with the unemployment rate down, jolts or job openings data up, and signs of resilient consumer confidence, at least until April. So it was a stronger picture than some wish to expect. And I say wish to expect or desired. In addition to all that, there was no doubt that many observers bought into the idea that the arrival of Kevin Warsh would herald a new era of low policy rates. And it's not clear why, because Warsh has a good history of hawkishness on monetary policy, and he generally favors the inflationary side of the Fed's dual mandate and managing that. Of course, people say all kinds of things when they're out to get the big job, but judge a horse by its form, and this horse is a policy hawk in both light and heavy going. It's also likely that President Trump overreached with continuous threats to Fed independence. And that's, to some extent, allowed for the fact that Fed can tighten. But whatever, events have overtaken arguments about easing. The closure of the Strait of Hormuz has impacted inflation expectations enough that easing is all but out of the question this year. Market pricing for the level of Fed funds is almost 75 basis points higher for rates in January of next year, at the beginning of this month, than it was before hostilities started with Iran. So, one thing I'd like to talk about, and how it may affect gold, are major disruptors the world faces now, because those things will speak to gold's strength as an insurance asset. 2026 will experience huge capex spending by technology hyperscalers, most of whom are going all in on artificial intelligence spending. The scale of that spending is expected to be huge. Major technology firms projected to invest between 650 and 700 billion US dollars this year, twice last year's spend. For context, that amounts to about 2% of America's GDP, or the equivalent of adding a Singapore or an Argentina to the world economy. Some of that spending on compute is to establish market dominance as a priority over generating free cash flow. Investors are already passing judgment on equity valuations of the most dominant firms in US equity indexes as firms increase spend and gearing, and not all firms will emerge as the winners in this race for territory. Now, additionally, those firms are competing for power distribution infrastructure that is aging out. To give one example amongst many, transformers are aging faster owing to the demands placed by the rise in overnight electrical vehicle charging, something that wasn't factored into their design lives 2 decades ago. For transformers, as for humans, nighttime was supposed to be a period of rest. And the need to replace aging infrastructure in large countries such as the United States comes at a time when the technology sector is competing for even more infrastructure. That competition may drive real prices higher and supply chains tighter. And in fact, we're seeing evidence of that already. What impact this huge spend on compute has on asset markets and on real prices in the economy isn't easy to map out, but the sheer scale places it in the first rank of known unknowns. Moving on to private credit, which is estimated at 2 to 3.5 trillion US dollar in size. That sector has been showing signs of stress and concern over real valuations for some months. Citigroup has warned that private credit tourists selling into a downturn poses a potential threat to corporate debt markets. Now, it's too early to say whether stresses in private credit comes from sort of somewhat temporary liquidity issues as opposed to actual performance issues. The distinction made by UBS's CEO, Sergio Ermotti. Right now, the message from most is that this is far from systemic. However, the world is in a tightening phase, and private credit may be a significant canary in the coal mine of formerly cheap credit. Thirdly, Iran. 60 days have passed since the start of the war, more than 60 today perhaps, and the Strait of Hormuz has remained blocked for longer than most analysts anticipated. An estimated 600 million barrels of oil and around 20 billion cubic meters of LNG is trapped in the Gulf, and the amount is growing day by day. Iran and other Gulf countries are likely to run out of crude storage soon, in Iran's case mid-May, leading to efforts to shut in crude wells, which will mean they take even longer to reopen. Deliveries of LNG from the Gulf are expected to stop completely from now onwards as the last vessels to leave reach their destinations. So far, the reaction of markets, crude and LNG possibly accepted, have been optimistic as to the effects of prolonged closure. Industry analysts now have a baseline assumption of about 1 billion barrels of lost crude production. And the initial impact is inflationary, but higher prices will lead to demand destruction, which is already happening in some emerging markets and across parts of Asia. And that demand destruction will lead to disinflation later. The first phase has been a headwind for gold, and the second phase is likely to be a tailwind. Moving from facts about seriously impaired supply, what next? Right now, it seems credible that US intervention in the Gulf is likely to leave Iran with a harder line government than before that knows exactly how powerful the Hormuz lever is and how valuable their nuclear program is, and probably a nuclear deal that is better for Iran than the previous arrangement. Challenging any of the above would almost certainly require a ground campaign, which, as I suspect, is very, very unlikely. But then the war itself was something of a surprise too. US military inventories are also reported to be sharply diminished. None of the above are encouraging for a post-conflict scenario, with the positive exception that a cash-strapped Iran will not be in a realistic position to fund its proxies in the region, unless, of course, crude prices remain persistently high in the aftermath. Gold responds very well to uncertainty, and indeed, it's one of the biggest unknown factors, if you like, or subjective factors in recent years, given rising real rates and a resilient dollar. So whatever the post-Gulf conflict looks like, it's fairly likely to strengthen the case for gold. Now, turning to the dollar. The dollar, of course, is likely to fall in the short term if the Middle East conundrum is solved, or at least unblocked. However, the very long-term secular rise in the US dollar and its current high valuation in real trade-weighted terms owes a lot to huge inflows of international investment. You can see here the $26 trillion inflow of foreign money seeking American investments over the last 2 decades is a factor in dollar strength. Now, if US investments do start to underperform relative to foreign assets for a significant period, and that significant period has to be longer than a year for portfolio managers to reappraise things, then those flows will weaken and may even shrink on an annual basis. That would place the dollar under significant macro pressure, given concerns over US debt and more recently US governance. I really suggest all who are interested in the macro backdrop to both gold and the dollar pay attention to this important metric. And perhaps the most important resilient tailwind for gold. Global debt has hit almost 350 trillion US dollars. Astonishingly, that figure grew by almost $50 trillion in the last half-decade. Debt is an everywhere problem. It might have grown more rapidly in the developed world, but it's increasing everywhere. The risk of default, or as people quite like to call it, perhaps defiatization, is in at least some domains, will underpin gold as the world's best insurance asset. Gold is bullish in the medium term, bullish in the longer term. Certain levels matter, and you have to pay attention to those, but right now it remains in a bullish phase. In summary, disorder and uncertainty are persistent, and disorder and uncertainty are a key part of why gold is a valuable addition to investor portfolios. Like I said just now, look at America's net investor investment position for macro information on the dollar and keep an eye on that. And lastly, huge debt load remains key to gold's durable appeal as a portfolio diversifier. Thank you very much.
Wait right there. Can you give this fellow a big round of applause as well? He's just received his 10 years of service at ABC Refinery. Congratulations. Well done, sir. I asked him if the little pin that he was wearing is actually solid gold, and he said, no, it's actually gold plated. We don't do the real gold. It's a bit disappointing. You think after 10 years you get one or two of those. All right, we're going to stay on the subject of gold, and I know there's a number of you in the room here who are highly interested in gold. We're going to go across to South Africa, to an area where at least 50% of the world's gold has been produced. And this is a fellow who also knows how to hold a gold bar with the rest of them. First gold pour back in March of this year, and they've moved from Australia. They're focusing solely in South Africa. Would you please make welcome Mr. Rudi Dijssel. Welcome, sir.
Well, thank you. So Carla Shallows Gold Mine, that's West Wits Mining's first official operating mine. It's situated in the heart of Johannesburg, South Africa, on the world-famous Witwatersrand Basin, which gave more than 22% of the world's gold ever produced. This is just quick, the disclaimer. The Carla Shallows project is fully funded to construct a mine that will support 70,000 ounces per year gold production. We had a strong institutional support in the last capital raise that was done by the company in January 2026 this year. That completed our equity requirements to support our $50 million lenders facility by South African governmental financial institution, the IDC, as well as our country's largest commercial bank, ABSA. We also have an approved financial lenders facility from Nabari that supports the full development of this mine, which gives us optionality in terms of our fully funded project. West Wits Mining's Witwatersrand Basin project is transitioning the company from a small cap exploration company into a gold producer. Our first phase project, Carla Shallows Gold Mine, is seen as our flagship project and currently in construction, with the first gold production already completed in March 2026 at our toll treater, the Izolweni plant, which is owned by Sibanye-Stillwater. So, West Wits Mining is listed on the ASX with a market cap of 250 million Australian dollars. So the company went recently through a share consolidation of 10-1 and owns 74% of the Witwatersrand Basin project. So West Wits Mining's executive team consists of experienced and strong leadership with extensive ASX and mining industry experience. As CEO and MD of the company, I'm a mining engineer by trade and education with extensive experience in operations, mine infrastructure, construction, and new mine startups in Africa. So, situated on the outskirts of Johannesburg, on the global well-known historical gold-producing Central Basin, West Wits Mining re-evaluated the old Durban, Roodepoort Deeps and Rand leases area and rediscovered the highly economic Kimberley ore body, which is even more impressive in the current gold market environment. The first phase of the Witwatersrand Basin project is fully funded, as mentioned, and that supports the development of our 70,000 ounce a year gold production and was successfully started in July 2025. We brought out our first ore in October 2025. Then we completed our equity requirement for full project funding in January this year. And then in February, we increased our resource statement with additional 2 million ounces. We had our first gold pour in March this year. And then the road to our aspirational 200,000 ounces per year production We've already started that project and commissioned that scoping study. So the focus now will be to do the build-up for Carla Shallows production up to steady state by 2028, while we investigate Project 200. So from a project point of view, we've achieved each and every milestone that we've set ourselves as a company. The underground operations is in full swing. We're focused firmly on a safe, well-disciplined and efficient operations. Carla Shallows' 17-year life of mine is supported with strong economic principles, with an NPV of $500 million, a payback of 8 months after peak funding, and a life of mine all-in sustaining cost of below $1,300 per ounce. And this is all based on using a gold price of $2,850 per ounce. And we all know we are north of that. Our mine's reserve is currently standing on 384,000 ounces with a consistent resource to reserve conversion by doing diamond drilling from the mine's decline and our development that's on reef in strike. So the Witwatersrand is also well known for high resource to reserve conversion ratio, which is a proof of our ore body's consistency as well as a high resource confidence levels. Now, on our mining right, our resource consists of 3 ore bodies. It's the main, the Bird, as well as the Kimberley Reefs, which is all striking from east to west and dipping at 45 degrees to the south and steepens in depth. Carla Shallows will focus on Kimberley Reefs for that 17-year life of mine. The JORC-compliant resource was previously stated above 12 million ounces, which we rebased. We are now rebuilding that, and we are increasing that. So it's currently standing at 7.24 million ounces. So this project has a lot of gold and a huge potential of growth going forward. If we look at a plan view of our mining right with recent added new approved prospecting rights to the south, this shows clearly that it could support our Project 200. So the Project 200 scoping study will be completed by the end of June this year, 2026. And then furthermore, to the northwest, we've got a project which we call the Bird Reef Central project, with a gold-supported white reef and a uranium-supported monarch reef, which is currently as an exploration target. So we've also kicked off an exploration program in terms of doing a tender. That drilling will actually start or planned for the 3rd quarter this year, and that will then bring this whole exploration target of the uranium into a JORC-compliant resource. Right, this is just a high-level view of the planned uranium drilling program. Like I mentioned, the drilling contract's already been adjudicated. As mentioned, Project 200 scoping study was commissioned in February this year and will be completed by June this year. So this will then increase our current steady-state production target of 70,000 ounces per annum to 200,000 ounces per annum. So it's a very exciting project for us that we started. Right, this is just some pictures of current activities on the project development. So things are happening very quickly, and I can gladly say this project is ahead of schedule and far below budget. So the execution of this project is going excellent. And then Westwits Mining believes in responsible mining activities. We've got good ESG principles. And that will ensure that our company and our mine is sustainable, and there's will be huge growth for our company and our operations. Thank you very much.
I was sure you're going to go far longer. Well done. Thank you very much. That's
Thanks.
very, very interesting. Interesting to see you've gone out of WA and across to Africa. Paul Polly is making his way up onto the stage today. We've introduced him in a number of guises before. The singing MD, the well-groomed MD. He's been having to deal with a lot of media recently over in the West. He's an elder statesman at that and well-handled.
Yeah,
and this project that he's got, and another one who's producing, aren't you, Paul?
We are.
Yeah, you've got lots to talk about. Would you please welcome Paul Polly, everyone? He's a regular here on the RIU schedule with the Matza story.
And she forgot to mention that I am wearing a tie this year, finally. So, thank you. So thanks for welcoming me here this morning. It's always a pleasure to present at Sydney. We were here last year, of course, and we've got a pretty different company this year than last year. Last year, we were not producing, we were gearing up. We said we were going to start in July, and we actually did, which, you know, it's great to produce things on time. So what is Matza? What's our investment proposition? We are an undervalued gold producer, have been for some time, but we're creeping up, obviously. We've got an existing resource at Lake Kerry, 949,000 ounces of gold at an average of 2.5 grams per tonne. Really good grade, don't quite often see that grade. We've commenced a 10,000 metre exploration program at Fortitude North. This is our flagship exploration project. Obviously, it's not connected to our Devon Gold project, which is separate, but only some 12 kilometres away as the crow flies. We're currently mining at Devon, and we'll expand on all of this. We've got a very interesting tenement option agreement with Anglo Gold Ashanti. We have got no certainty that this transaction will occur, but if it does, it's worth about $116 million in cash to us. I'll expand on that. And of course, our real story, becoming a long-term, significant producer in the goldfields, and we are working quite diligently on producing feasibility studies. Hopefully we'll deliver that towards the end of this year. So our share price, we were 12 cents some 3-4 weeks ago before the melee of the Hormuz Strait occurred. We've been knocked down, just under 7 cents at the moment. Excellent buying opportunity in our opinion. Our market cap today, $65.1 million. Importantly, our cash and cash equivalents, and what we mean by cash equivalents is gold bullion and ore stocks sitting on our ROM, currently just under $23 million. So our true enterprise value is in the vicinity of $40-odd million. Here's the slide. Here's the slide that's very important. Our EV, $51 per ounce. That does not include any ounces that we have already seen at Fortitude North. So if we were to release a significant maiden resource sometime this year, even if we still use this $51 EV per ounce, we should have a significant impact on our share price. We are significantly lower in value, but look at our grade, 2.5 gram per tonne average, significantly higher than a lot of our peers. There is the value proposition in Matza. It's always existed. Last year we were here, we were between 3 to 5 cents. We're recovering in share price, our values are going up. We have spent a fair bit of time and effort over the last 4 months to build our team. Yes, sure, the board of directors haven't changed, but we've employed exploration managers. We've employed new mining superintendent geologists. We've employed something like 7 geologists since the beginning of this year. And we're employing a few more, and we're getting some mining engineers. What this means is we're building our capacity to actually deliver on our story. That's the single most important thing that we're focusing on right now. So where are we? Lake Kerry Gold Project, 244 kilometres northeast of Kalgoorlie, some 70 kilometres directly south of Laverton. We are in a prolific belt surrounded by Anglo-Gold Ashanti to the north and to the west, Northern Star, I was going to say Saracen, Northern Star to the south of us. We've got some other operating mines in and amongst us. All of our tenements are contiguous, 450 square kilometres. It is not itsy-bitsy. Our pride, our prestigious landholding is Fortitude North. We've identified an exploration target there of somewhere between 640,000 ounces of gold and 1.85 million ounces of gold. That's what we're going for this year. We are currently drilling there as we speak. So we hope to start delineating these resources. We hope to deliver a maiden resource within the next quarter or so. What do we have at Lake Kerry already? We've got a full camp, 112-person camp, fully operational. We have got full fuel storage. As Christy mentioned, there was some media about fuel supplies. That's not a problem. We have geared up our capacity. We don't think that we will have our operations interrupted by fuel shortage. We've got our own airstrip. We have everything we need to be fully self-sufficient at Lake Kerry except our mill. And that's where we're now turning our attention to. To get a mill, we need a quality resource. So we are commencing the building of those ounces. We've already got 949,000 ounces. We want to add another 1 million ounces to that 949, and we want to do it this year. The way to do it is drill. So we've started an initial 10,000 metre program. That started about 4 weeks ago, and we will continue with that for the rest of the year. So we've currently got a land rig. This is the actual rig that's out there, and we're blasting away at it. Fortitude North itself, it's a 1.7 kilometre long mineralised zone. We've got some massive hits, as you can see there. This has been an ongoing story. We've been having interrupted drill programs because of finances and setting up of Devon, but now that we're blasting away, we expect this to continue. So at Fortitude North, what we've got is we've got these lenses of gold that start from surface or near surface and go down at depth. It took us a while to understand the geological model, but we're getting the handle of it now. So we've identified 4 or 5 of these lenses. We think there is another 2 or 3 lenses yet to be discovered, and that will be part of our drilling later this year underneath the actual lake. But you can see some of these hits: 35 metres at 3 grams, 47 metres at 2.5 grams, 22 metres at 9.2 grams. They are phenomenal. They are fantastic hits. We are concentrating towards the north at the moment. We want to delineate the resource to the north, so we're doing JORC resource type drilling, coming down to the south where we'll start to get into more virgin, open, unexplored ground. The yellow is where we're currently drilling. This is what we think Fortitude North looks like, a 1.4 kilometre long mineralised or probably economic zone that is open at depth, and that's what we're currently testing. In the yellow is what the 2 holes that we've completed last month. I was going to say this month, but we're in May. So we expect these results to come out in the next 3 weeks, something along those lines, and these holes will continue. These holes are down to 360, 370 metres in depth. So we hope to go through several different layers to prove up these different lenses that we have at Fortitude North. The deeper we go, the richer this ore body's getting, and you can see that from some of our assays that we've got. Fortitude North is 6 kilometres directly north of Fortitude. I apologise about the names, but our geologists aren't that inventive. So at Fortitude, we've got 489,000 ounces of gold. We have got an approved mining lease, and we've got approved mining plans at Fortitude. So what does that mean? We can start mining there tomorrow. We've done a historical 10,000 ounce trial mine out of those 3 pits that you can see. Yes, that's our work that we did in 2019. That was all processed at Sunrise Dam. We achieved recoveries in the 90%. So that was very successful. This is what we think the Fortitude mine will look like. About 1.6 kilometres long. It's not as deep as Fortitude North. It's not as rich as Fortitude North. But we've got considerable untested areas at Fortitude, so we will probably start doing some drilling there in July. All part of a greater feasibility study for Lake Kerry, where we aim, we expect, we hope to be able to produce a 10-year mine life of some significant scale. We've got other areas that yet to be discovered. FF1, again, blame the geos, far Fortitude North 1. We've got a bullseye magnetic anomaly to the north of that we have not yet put a hole in. So we will do systematic exploration of our tenement package, 450 square kilometres, predominantly poorly explored historically. Some of it is on the lake that's never been tested, but with new lake rigs, you can test them quite economically. So we think the exploration profile for Matsa over the next 12 to 18 months will be quite significant. So Devon, we are currently mining at Devon. We started mining Devon in July. We've completed campaign 1. We've completed campaign 2. Notably, campaign 2, our second campaign, we are toll milling at FMR, 288 kilometres away. Notably, campaign 2 gave us an EBITDA of $5.5 million profit. Now, you don't see that normally in open pits. This is a very high strip ratio. We managed the costs and we're quite proud of that achievement. So what we want to do is do campaigns 3 and 4. We will start campaign 3 on the 28th of May. It'll be slightly interrupted because of FMR operational requirements, and it'll then resume in July. So we expect to do 80 to 90,000 tonnes over the 2 campaigns. But importantly, have a look at the green. That is the story. Between campaign 1 and campaign 2, we had significant step changes in the quality of the production. Our ounces sold, or ounces produced, increased by 114%. Gold sales increased by 145%. So what we're saying is we earned $28 million in 4 months in campaign 2. So campaign 3 and 4, we're seeing more growth. We're seeing another 15% in production anticipation. We are seeing further 6% growth in gold sales. So between now and early August, end of July, we hope to bank somewhere in the vicinity of $45.5 million. Now, most of that's already been paid for. So a lot of that is free cash to our company. Not bad for a company with a 62 million market cap. Our recoveries, mid-80s, not brilliant, not shocking, but we hope to improve that. So we think Devon Pit Gold Mine is a sensational stepping stone to our bigger picture. Devon is providing the cash for us to put together what we want to put together for our 10-year plan that we hope to deliver towards the end of this year, mid to end of this year. We've already started on that and it's looking quite good. Now, here's the kicker, the Anglo Gold deal. They've already paid us $7.2 million in option fees. They need to pay us another $1.5 million on the 20th of June to keep this option alive. It's worth $136,850 at $7,000 an ounce. So I did this calculation a few weeks ago. My apologies for not updating it. They are acquiring an option over the areas in black. It is 5 tenements to the southwest of our tenement project area. It does not interfere with Fortitude North. It doesn't interfere with Fortitude. Doesn't interfere with Devon. Doesn't interfere with the majority of our exploration program. Importantly, they have been drilling on our boundary now for 6 months with diamond drill rigs, lake diamond drill rigs. You do not drill there for 6 months if you're not onto something sizable. So, are they going to exercise this option on the 20th of December? Somewhat 8 months away for $136 million? I don't know. But we'll find out. We'll find out. So, we wait for them to finish their exploration. The white line is our boundary. On the left-hand side, looking that way, is where they have been drilling. On the right-hand side, they are drilling. What they have informed us that they've already completed some 12 holes. I can't really remember the number, my apologies. But they've now commenced IP surveys. They're doing geophysical surveys in the area, and they're already telling us that they tend to resume drilling in July. So if they drill in July, that means they've got to pay us our option agreement. If they're going to pay our option agreement, that means they're up to $9-point-something million. You don't blow $9-odd million if you're not serious. We're fully funded. We've got spare capacity. Our friends Deutsche Balaton have given us a $17.5 million facility that is there available for our use if we need it. We're an undervalued gold producer with a strong development plan. I've got 1 second left. How's that? Thanks very much. Enjoy talking to you.
The trouble, Paul, was that it was a really interesting story, and I would have been happy for him to go on longer. Yourselves? It's a good story, isn't it? If it comes off, be absolute perler. All right. Impact Minerals, exploration company focused on precious and base metals. Now, if you've been following them, and I just had a sneaky little look just then, 2 hours ago online, they've just announced a significant new discovery in New South Wales. Do you want to talk about your bonanza-grade silver and gold assays from drill holes there? Would you please welcome Dr. Mike Jones?
Thanks, Christina. Yes, I did have a spectacular drill intercept. Conoco are earning into our Commonwealth project here in New South Wales, and a very high-grade vein. Both share prices on the run, and we believe it's the start of a major discovery, and we've got a 30% free carried interest. But of broader interest, of course, is this map, and the big question of the day, I'm sure, is he crazy or is he playing 4D chess, as some people seem to think? It is crazy times in which we live in, and we're already feeling the pain of that at the petrol pump, and we're probably going to feel it in a lot more pain in food prices going forwards, because it's not just oil that's having trouble getting through the straits. We're seeing sulphur, ammonia, aluminium, and those are all core products that we need, in particular sulphur and ammonia for fertilisers. And so we're seeing growing shortages. China's stopped its exports of fertilisers, and what it's becoming is that we're obviously entering a new world order. It's a multipolar world, and governments do need to be more resilient and self-sufficient, and that's leading to headlines, like this. We've got this big global uncertainty, and Australian government, to their credit, has actually already started to act with its critical minerals funding, and we're seeing increasingly this type of process happening around the world. It's come as a bit of a shock to many governments, but we're going to have to become more self-resilient. And so it's strange that I find myself saying here that Impact Minerals, we're actually now building an industrial minerals powerhouse out of the salt lakes of Western Australia. And I'm sure many of you have driven over these salt lakes, and they're amazing natural laboratories. Almost every one of them is different chemically. And we found a group of them in Western Australia in which we can produce high purity alumina and also potash. Now, in order to be able to take the material out of those lakes and turn it into this, if anybody knows what this is actually the Las Vegas dome. And that dome is covered in 1.8 million LEDs, light emitting diodes, and behind every LED is a wafer thin piece of sapphire. And sapphire, artificial sapphire, is a form of high purity alumina. In order to be able to do that, we believe that the future is not actually about the mining, that's the easy bit, it's all about the engineering and getting these products into market. And we believe that the first cab off the rank for us is to actually transform the production of HPA globally by being the lowest cost producer by a very significant margin. So I'm going to educate you a little bit today, if you don't already know, about high purity alumina. We're going to look at our fast to market strategy, which came about from an acquisition that we made of a processing technology last year. And we'll finish off with an emerging discovery that we've got in the potash business and production of hydrochloric acid. That's a new emerging story for us out of the lakes, and we'll show you where the value lies at the end. So HPA, it's a critical mineral in many high-tech industries. LEDs that I've mentioned, artificial sapphire, it's on many of your watch covers, it's scratch-proof. It's used in defence applications, again rather topical, missile tips, jet fighter windows, etc. Advanced ceramics, I'm probably going to be the first recipient for my artificial hip. It's biocompatible. But the two big areas are semiconductors and it's used in two areas in semiconductors. First, it's used to polish the particles that go into semiconductors. Silicon carbide, gallium arsenide, and gallium nitride, some of the new particles going into semiconductors need to be polished to a very high degree of accuracy, and they use high purity alumina to do that because it's actually the second hardest substance known to mankind. It's also used extensively in the battery market. Not so much now in the EV market, but in particular in battery storage, large storage capability, which is being built out massively in the US and as we move towards energy self-sufficiency. And you need high purity alumina in there to stop the batteries exploding. You've seen pictures of batteries catching on fire, lithium-ion batteries, and that's because they use a separator between the anode and the cathode to stop heat transfer. If the heat transfer gets out of control, you get a runaway exothermic reaction and the damn thing catches on fire, and we all know they're difficult to put out. And you need HPA to stop that from happening. There's also a growing market in direct lithium extraction, in absorbance, and that's an area that we're looking at. So those three areas are the big growth areas. So with high purity anything, it's all about how pure it is. It's about the nines, the 4 nines. 4 nines is 99.99% pure. That only leaves you a margin of 100 parts per million of impurities that you need to remove, and that's the difficult bit. And this is what I like to call my pyramid of purity. Here we start with smelter grade, and as we go up the pyramid, it gets purer and purer, and as a result, you can charge more for that product. So we're mainly looking at the volume in the 3N and 4N space. You get incredible margins in the 5N and 6N space, but there's not much volume there. So you really need to enter the 4N and 3N space. Our competitors in the market can only enter the 4N because of their high production cost. We believe that we can enter into the 3N space, which is much larger and just potentially as profitable. So it is a great space to be. Now, with all those industries that I've just mentioned, we are actually seeing a global undersupply emerging in the next couple of years. This is a graph from one of the two listed companies that do HPA on the ASX, that's AEM, and probably in the next couple of years we're going to see an emerging supply deficit. AEM's run by Richard Neville, who did very well in the lithium business. You might have heard of him, Orocobre through to Livent, great takeovers. And he believes that HPA is the emerging lithium of the next decade. And we saw how lithium use went to tenfold in that decade. He believes HPA is going to be the same. So there's plenty of space for us to move into that business. And we believe that we can revolutionise HPA production and become a dominant global supplier in a very short period of time by 2030. And we're going to do that by demonstrating that the pilot plant that we bought last year can actually be expanded to a demonstration plant and prove that we can make small modular plants anywhere in the world at any time, provided that we have orders there. And on the addition of that, as part of the critical minerals approach from the Australian government, we are the recipient of a grant for membrane technology to implement into our flow sheets. We're doing amazing work at Edith Cowan University on the back of that, world-class researchers who are taking membrane technology out of the water treatment business and bringing it into the mining industry. It's going to be a hell of a 3-year ride. So we talked about being the lowest cost producer. This is what we call the cost curve analysis, and what we've done here, we've jumped into the future a bit. On the bottom of the axis here, we see the global market for HPA, and on the left-hand axis, we see the cost of production, and there's a dotted line across the top. And that's the price that we use in our pre-feasibility study. And what we see on the right-hand side there is South Korea and Japan are the current dominant producers, very high production cost because of their method. We have Alpha HPA and AEM, lower cost from their hydrometallurgical approach, and we have cheap Chinese HPA. China imports high-quality HPA, it does no export, and it is no threat to the HPA industry globally. And in poor old Impact, down at the left-hand side there, we're in that lowest cost decile even, and it could be even lower. So here's our Lake Hope project. It's about 500 kilometres east of Perth, and in the top 2 metres of that lake, based on the PFS, we have about $15 billion worth of HPA, and an in-ground value, net present value, which would mean what it's worth to us right now, of $1.2 billion Australian. It's an incredible deposit. We're just going to dig that up and ship it out to Perth. It's in a joint venture. This is how we drilled out $15 billion worth of HPA with a rubber mallet and a plastic push tube. The whole assay drill program to get to an ore reserve cost us 250,000 Australian dollars. It is arguably, if not arguably, it is the best result on a drill program ever in the mining industry. 500 kilometres east of Perth, as I mentioned, it's in the middle of nowhere. Baseline environmental surveys, baseline heritage surveys are all clear. We have a mining lease lodged. We're moving towards getting a mining lease granted in the next 18 months or so. And we have enough material there for at least 30 years of mine life. But in industrial minerals, it's all about getting offtake, and it's all about getting to the market as quickly as possible. And one of the big challenges is funding your scale up. And so we were fortunate enough last year that one of our competitors in the business went into administration. They had a convertible note, financial mismanagement, and they went under, had the rug pulled from them. When we looked under the hood, their technology is actually quite spectacular. And by a sheer quirk of nature, the material that they're using as a chemical feedstock for their pilot plant is actually the same minerals that we have in our lake. And so it was a very natural addition to the two of them. So in a very short period of time, we were able to purchase a pilot plant that was 80% complete, an analytical laboratory, IP, patents and trademarks globally. We spent that time since then getting that pilot plant up and working. We're now in a position that one of the very few companies anywhere in the Western world that can produce HPA at will, certainly not at the moment in large quantities, but that is coming. The plant is operating in batch mode, and we can produce material. We've sent that off to a battery technology company in the US that's helping develop that material now for the battery marketplace. But here's the big thing. I think we got an absolute bargain. An absolute bargain. It's one of those engineering stories. So what happened was we were having trouble getting the solvent to mix, and said, this hasn't been designed very well. Why don't we just turn the impellers upside down? They turned those upside down and they got 10 times the throughput. And so a plant that was originally scaled to be about 20 tonnes looks like it could be 200 tonnes at least. To put that into perspective, to get to that position, we need to scale up at the back end and do some CapEx studies to do that. We believe that the cost of doing that to get to the same positions of our competitors will be 1/10 of the CapEx. 1/10, that's an extraordinary, extraordinary number, almost as unbelievable as the return on our drill program in Lake Hope. So put the two together, it's going to be pretty exciting. So we believe that because it's modular, we can build these plants anywhere, and we've already identified the US. We have US investors in Illuminous technology with us, and we're looking to accelerate entry into the US marketplace, both on a customer basis and also potentially for a listing further down the track on the back of the US Defense Department of War, really hammering down now on critical minerals. They've just set up a credit fund to help support mineral development and mineral processing onshore in the US, and we hope to be a recipient of some of that as we move forward. So we're looking to try and list in the US a lot quicker. Once we get there, because I said, if you remember, that the 3N space is a much larger business. So we've discovered that a lot of the 3N people actually want to get into the 4N space, but it's too hard, too difficult. And so we believe there's a natural merger to be happening somewhere down the track where we will buy customers rather than actually go and find them one by one and build up on our business from that. That'll be the build out, and then looking for a NASDAQ uplift within the next couple of years. And so right now we're trying to get that pilot plant operating in continuous mode. We're going to demonstrate to everybody once we get the numbers that we can do this 10 times scale up. And at that point, everyone in the HPA business globally is going to sit up and take notice of what we're doing. We're accelerating the result of that, our entry into the marketplace, handing out the material. We've got our first serious indication from Europe, just appointed a marketing agent there. And so we're rapidly on the way to getting ourselves commercialised. And we believe that after a very short period of time, we're going to be able to build our first commercial plant as soon as late next year, or certainly by 2028. So we're building this new kind of resource company. We're transforming Australia's mineral wealth into high-performance, high-purity products through innovation, discipline and strategic execution. So where does the value lie? So you've all probably seen and heard about the Lassonde curve. We are sitting right here in the trough of development, as I like to call it. It's a climb out from here, but we have a very clear business plan. It's probably predominantly about strategic execution rather than technical risk at this point going forward. So we believe the value is going to be there over the next 3 years. So if we look at our competitors, Advanced Energy Minerals, they listed in December. They've actually been going since 2015, built on the failed carcass of another HPA wannabe producer. Richard Neville came in, transformed it. They've got about 2,000 tonnes capacity. Interestingly, to expand, it's going to cost them about $100 million per 1,000 tonnes of HPA capacity. So go from 3,000 to 6,000 tonnes, it'll cost them $300 million. Market cap's around about 300 million. Alpha HPA, market darling over the last decade. 2017 they started, they were a junior company like us. Reached $1 billion market cap. They've come back now because they are now scaling. They're in their trough of development. They're scaling up to 10,000 tonnes per annum of production, but somewhere between 27 and 31. 31 is when it's supposedly finished. They're also operating about $100 million per capacity, per 1,000 tonnes of capacity. Poor old little old Impact, we've only been in the game 3 years. 2023, we're going to have 200 tonnes capacity, we believe, by the end of this year. Lowest cost producer in the world, and we're going to be able to build our first commercial plant, 2,000 tonnes plus, at a fraction of the cost of anybody else in the world, as early as late 27. And we're 1/10 the market cap and 1/20th of anybody else in the space. So that's where the value lies. A quick side on the potash and hydrochloric acid. We discovered another way of taking these clays, heating them up and melting them basically, and getting potash, sulfate of potash, high-grade fertiliser, and hydrochloric acid as two products. We've identified the salmon gums area north of Esperance in there because it's adjacent to the goldfields, which has a big shortage of acid, and we can provide hydrochloric acid there, and also SOP, sulfate of potash, out into the goldfields. And there's going to be enough material there for export. It's an emerging discovery. You should keep your eye on it. We've spoken about our legacy exploration assets. I only put this in here today because we've had a spectacular drill intercept. We've opened up a new area for exploration. Conoco are the key players there, so you should take a look at what they're doing. And we've got some great news to come from Broken Hill. Share price 5 cents, market cap $26 million. We have $3 million in the bank. We're going places very fast. So please come with us on the journey. We aim to be one of the lowest cost, if not the lowest cost producer of HPA globally. We have this unique deposit in Western Australia. It's an industry disruptive MET process, and we're building out our capabilities rapidly in customer satisfaction, and we're going to deliver into the growth market next year. 11 seconds over. Thank you.
Well done, thanks, Richard Jones. All right, Peel Mining CEO Nick Woolrich joining us now at RIU. He's going to bring us up to speed on the investment potential flowing from the part that they are playing to help kick off the long-awaited Cobar consolidation. Would you please make him welcome, everyone?
Thank you, Chrissy, and thanks to Jackson Charm and the RIU team for organising another great event here in Sydney, and it's just phenomenal to be able to present to such a strong array of investors, both new, hopefully, and existing, about what is a really exciting time in the Cobar Basin for Peel Mining and Spectre Metals, ultimately. So Peel is a company that's probably well known to a lot of you out there, and it's a company that's undertaken somewhat of a rebirth over the last 6 months. We do have a refreshed management team and strategy. We raised $21 million at 8.5 cents in September last year. And we have a strong board, enthusiastic management, and a mandate to look at both growth opportunities in Australia and offshore, and to try and release some of the latent value in what is a terrific portfolio in the Cobar region. This did culminate in a landmark transaction in February this year to sell Peel's copper assets to Aeris Resources. Before I talk about that, why Cobar? I think Cobar is about as good as it gets in terms of mining jurisdictions, particularly in Australia. It's a genuine Tier 1 location with over 150 years of mining history. We have access to mining-specific infrastructure, skilled workforces, and most importantly for Peel, significant latent processing capacity in the region, with 7 processing plants, including 2 on care and maintenance. All of these are short ore feed, and all of these are set up to handle the sort of mineralisation that Peel has across its portfolio. There's meaningful transactions taking place in Cobar. M&A, financings, restarts are starting to flow after many years of underinvestment and exploration. Most importantly for Peel is that we have a Tier 1 exploration team in this Tier 1 region, led by Rob Tyson, and we're actively exploring as we speak. Rob and his team have arguably the best track record of exploration of any team in the region, having found nearly 70% of all the resources discovered in Cobar in the last 15 years. Exploration remains and always will be a key part of the Peel business. And our focus as a board and management team is to capitalise on this by looking at how do we unlock the value in this portfolio and provide feedstock to regional long-life mills. There are 3 key pillars to the Peel portfolio. We have the Southern Nights Complex, which is a high-grade polymetallic mineralised resource comprising the Wagga Tank and Southern Nights projects in a large VMS system. We have our exploration portfolio with nearly 1,400 square kilometres of tenure. We are drilling now and will continue to do so. And we have the South Cobar Copper Project. These are the key assets behind our recently announced deal with Aeris, comprising the Mallee Bull and Wirlong underground projects. This has been the main focus for Peel over the last couple of years, with the high-quality baseline technical work completed on what are some of the highest-grade undeveloped copper projects in Australia. So in February this year, Peel announced a transaction whereby Aeris would acquire 100% of Peel by way of a scrip transaction, and concurrently would spin out the Southern Nights complex, the rest of our exploration portfolio and our cash balance into a new vehicle called Spectre Metals. At the time of this deal, this valued Peel at nearly $215 million, which was a 50% premium to the closing price and 175% premium to our capital raise 5 months prior. Peel shareholders will get 2 forms of consideration, being 0.34 of an Aeris share for every Peel share and a pro rata share of Spectre Metals, a new company formed to house the Southern Nights complex projects, our exploration tenure and our cash. Spectre will IPO on the ASX in Q3 this year. This sees Peel shareholders owning 20% of Aeris and retain exposure to all exploration and M&A activities of the remaining portfolio. Peel existing management will run Spectre. There's upside galore for shareholders, new and existing, coming along with this transaction through their new Aeris holding and also through the Spectre IPO. How does this upside exist? Well, firstly, Aeris post-deal will be a large, long-life copper producer, producing 30 to 40,000 tonnes of copper per annum over with a 10-year mine life. They have an exceptional operating team and can develop Mallee Bull, which will form long-life feedstock for their existing Tritton mill. There's further upside through the Cracow Gold Project up in Queensland and establishes Aeris as arguably the leading local copper producer on the ASX, with long-life, near-term development and a quality, project-ready management team. Peel shareholders will have about a 20% shareholding of the combined Aeris, which gives them meaningful exposure to this large producer. And Spectre Metals. Spectre Metals will be listing in Q3 this year with the core assets, as I mentioned, of the Southern Nights complex projects and nearly 1,400 square kilometres of exploration tenure. There's further participation or leadership in regional consolidation in Cobar that comes with this tenure, as well as management continuity and M&A aspirations both in Australia and offshore. We are looking for projects that we can add value to through financing, studies or development, as our management team has done so previously. And we have a growth mandate. Led by the existing Peel management team, including myself, Spectre will focus on organic exploration and strategic international M&A in the precious and base metals sector. So this is quite a detailed timeline. However, the message is if you want to be involved in any of this, you need to buy some shares of Peel, or else you're waiting for the Spectre IPO. Peel shareholders will be getting an independent expert report, which was released to the ASX today, and have the opportunity to vote on the transaction in the middle of the year. So post-listing in Q3, what's going to be in the new Spectre Metals? We're going to have an exceptional land holding in the Cobar Basin, cornerstone by the Southern Nights project, which I'll go through in a bit more detail shortly. We have vast untapped growth potential. We are drilling now and will continue to do so over the rest of the year. Southern Nights is an exceptional asset, and being nearly 10 million tonnes at over 8% zinc equivalent. We're very much focused on drilling and undertaking technical programs over the coming weeks and months. This is a 100% owned project and is a polymetallic deposit, zinc and silver rich, discovered and advanced by Peel. This project is located on freehold land with no third-party royalties or JVs in place. There are 4 local plants capable of handling this material based on the metallurgical test work we've done to date. This is a large VMS system extending over 2 kilometres of strike and nearly 700 metres of depth, with potential to produce zinc, lead and copper concentrates, plus gold and silver doré. Extensive drilling has confirmed thick, high-grade zones from relatively shallow depths and multiple untested targets. Some of the intercepts that have never been followed up until recently include 58 metres at 5.4% copper and 23 metres at 155 grams per tonne silver and 6.2% zinc. Sorry, I said copper, I meant zinc before. This is a VMS deposit similar to Rosebery and Golden Grove, and as many people know, where these deposits are, they occur in clusters, and so the likelihood of having more exploration success from further drilling is very high. We are currently drilling at Southern Nights. We've released some results in the last month with more high-grade intercepts over up to 25 metres thickness having been announced. This project is very well advanced technically, with mine design, metallurgical and existing project studies well underway. Environmental and heritage work is well progressed, with all necessary approvals being advanced in a timely manner. Turning now to more regional exploration, Peel has allocated about $5 million to exploration across the next 12 months at multiple targets across the Cobar Basin, targeting Cobar-style and VMS targets. And we will continue to do this until Spectra's demerger and post-IPO. Like I said before, Peel has identified 65% of the 34 million tonnes of resources that have been found in the Cobar region in the last 13 years at an average cost of discovery at 10 cents a pound of copper equivalent. These are the people who will be leading your Spectra Metals exploration efforts post-listing. We have the track record and the balance sheet to maximise the opportunity afforded to us from such a large portfolio in the region. We started drilling the Nombini prospect in October and announced results in January this year. Out of the gate, we had 33 metres at 2.47 grams gold from near surface, and the presence of this alongside existing historic exploration results indicate that, that we're potentially onto a large gold-bearing system at Nombini. There is more to do at this project over the course of this year. So located just 10 kilometres from the Mallee Bull Copper Project, Mayday also provides strong optionality for Peel to develop a standalone gold project. This project is on a granted mining lease, offering a clear and low-risk development pathway for Spectra over the next couple of years. Currently, the resource is a modest 1.6 million tonnes, however, it is 97% indicated, and the mineralisation does remain open at depth. The 2026 drilling programs are underway at Mayday, having a mining lease is a significant advantage at this project. Peel and consequently Spectra also retains a joint venture with Red Hill at Curnamona and Anabama in South Australia, and Spectra will retain these 25% free carry shareholdings at no cost in the immediate term. These are Tier 1 potential polymetallic systems with drill testing ongoing in the region. So I am going a little bit fast here, Chrissy, but in summary, Peel has started consolidating Cobar, and in doing so has given our shareholders the chance to get meaningful exposure to long-life, high-quality copper producers through the Aeris scrip, and also continued M&A optionality and exploration success through Spectra. Spectra has a very clear mandate from both our board and our shareholders to grow both in Cobar, in Australia, and through M&A offshore, particularly in North America, where we've operated successfully previously in New World Resources. Post the Aeris deal completing, we're fortunate that Spectra will have a very high-grade resource base across multiple deposits and ongoing drilling, providing strong optionality for future development and processing regionally. Peel shareholders, existing and new, currently have a phenomenal opportunity post-transaction implementation to retain exposure to long-life producing assets in Australia through Aeris scrip, and to get involved in further consolidation activity, as well as Tier 1 M&A through their new shareholding in Spectra Metals. Thank you.
You do have 4 minutes up your sleeve. Does anyone want to ask a question at all for Peel Mining? Anyone got a question from the floor they'd like to throw out? All right, where are we going to find you?
You know where you can find me.
Where are you? What are you next
booth
to?
16.
Where is that close to?
The far right corner near the coffee.
All right, we'll come over near the coffee so you know where he is. Go and have a chat with him. It's an interesting story. Thank you so much, Thor. All right, from Nick to Bill. Bill, do you want to come and join us? He was sneaking down the front there. Happy-looking fellow. Now, you've got a 6.1 million ounce gold project, so no wonder you're a happy-looking fellow. You've hit a couple of critical milestones, so they're looking good, and you're singularly focused on that gold pour Q1 2027, correct?
Yes, very much so. Thank you.
Make him welcome, everyone, please. This is the fabulous Bill Guy. We're going to South Africa.
Hey, guys. Thanks for having me today. Theta Gold Mine's obviously an amazing spot at the moment, and I know you're going to hear a lot of stories today. But I think what we just need to remember that sort of separates Theta maybe from the others, we've got 6 million ounces under management, which makes us, in terms of the ASX, we hold one of the largest undeveloped gold resources held by a junior. So we have size and scale. We're actually building a gold plant as we speak. There's 200 guys on site today building that gold plant, and we're starting underground development shortly. So we'll start the presentation. I think also one of the key features, obviously, of this whole project, we are in South Africa. South Africa has amazing geology and amazing workforce, which we can capitalise on. So we're located 370 k's northeast of Johannesburg. You get there by tollways. There's an hour of regional roads and 5 k's of dirt before you get the mine site. We already have electricity, water on site. It was an existing brownfields project. We've got 620 square kilometres under management. It's all goldfield. We were South Africa's first official gold rush. So the gold's been in the ground for about 130 years now, and TGME, our subsidiary company, was the first incorporated gold company in South Africa. So we have a massive amount of history. We raised $20 million US last year, so we got cash on board. There's about $10 million bucks in the bank at the moment this quarter. And what we want to do with all that history, when you look around our gold field, there's all these old rock dumps everywhere. We've got about 174,000 ounces sitting on the ground. So we're going to use 109,000 of those ounces to fill up the plant from day one. So sometime in September, the guys will start collecting all those rock dumps, getting ready to commission our new gold plant and pouring gold bars Q1 27. In terms of construction, we've already completed our engineering. We've pretty much done the earthworks now. We expect those earthworks to be finished next few weeks. Civils are underway. And we have what we call plug and play. So everything is built in the factory to save money and then trucked to site. So we don't need a civil camp and all those extras that some companies need when you build in the Western Australian desert. We distribute our workers through the local communities, so the money flows into the community, and those communities are also some of our direct shareholders, with 26% of the company owned by local South Africans in the communities. In terms of scale and upside, we've got a lot of upside and scale. We've got 3.5 million ounces that hasn't been consumed in the current mine schedule, so we can bring that in with further exploration and development. So we start off with 4 mines, we get to about 90, 100,000 ounces a year, then we bring on 7 more mines and we'll get to over 160,000 ounces a year. And because of the way the plant is designed and built, that's already catered into the system. We just add different components and we can expand that plant, expand that production profile. In fact, we can double it. So the base recently released our revised feasibility study in February. So we've got 13 years of mine life at 5 grams. So 5 grams these days is a very high grade resource. You know, you look around the mines in Australia now, people are mining 2 grams underground. When I started, you know, people would have laughed at you if you told them you're going to mine 2 grams underground. But what really drives the economics of this project is grade. Grade is always king. So like I said, we've got 6 million ounces under management at 4.17 grams per tonne. We've got different ore types. So we have free milling ore for the first 7 years. We've got 1 mine that's a little bit refractory. We'll bring on about year 7. We've got all the permits we need to start mining. We have got a very low sort of peak funding requirement of $77 million US. So we have all that stuff from history. We've got houses. We own a forest. We've got offices already built. We have an existing tailings dam, so we get a lot of cost savings. So that build process is relatively cheap compared to some of our competitors. And we get a lot of exploration upside. So we're doing the first 4 mines, but there's 40 other mines to go look at and develop across that 620 square kilometres. We actually sit about 50 k's from the Bushveld complex. Bushveld complex is the richest metallurgical province on Earth, produce most of the world's platinum, chrome, vanadium, you name it, and the fluids out of the Bushveld have impregnated our gold field. I'll be pretty quick for this one. We've got a market cap of about 240 million at the moment. Top 10 own 67% of the company. Board of management and directors have got a lot to play for. They own 10% of the company. And we've got 26% local ownership through our BE partners there in South Africa. Board of managers very experienced. I've been doing this a couple of days. All up, I think there's about over 200 years of experience in terms of finance, mining and development. Probably just talk a little bit about some of the South African guys. Jark is our COO. Jark has bought predominantly what is an ex-Harmony team to build this project. So everyone that works on that project for the shareholders, you know, has been mining pretty much their whole lives. You know, South Africa has a very strong mining culture. Jark's personally been involved in 3 mine builds. So, you know, he knows how to build a mine. His last mine build, he had 10,000 people underneath him. So, you know, it's a relatively small build process for him, but he built Durancorp, the southern extension of that mine, took it from about 2 k's down to about 3.5 k's down, and he did it while they were extracting ore from the top, which was a Harmony record. So he's brought all the best of his old team to this project. Terence is a great guy. He's an author. He's a lawyer. Very kind guy. Pussaletta is our ESG girl. She worked for Goldfields as well. Freddie's also ex-Harmony. So that African team is very strong on the ground who are building the project for us. So we can see we're actually building things. You can see there that little picture. That's actually the civils and foundation for the thickener tanks in progress. This is just to give you a sense. So what we do is we build a centralised processing plant, then we truck all the different ore from all around into that centralised plant, which is already permitted. So Beta North and only about half a K away, Beta South, nearly a K away. Frankfurt's 24 Ks and Riffontein is the furthest away at 39 kilometres, but it's a very high grade. So Riffontein has been chosen for about the second mine for us to develop because it runs about 8 grams a tonne, so it can definitely cover a bit of haulage. You can see this picture here, the guys are building the gold room at the moment. Obviously the 4,800 gold price is a little bit out of date, but that gold room is now, the bottom 4 is already complete. So when we look at the project in terms of mine life, 13 years, it's great. There's also a reserve mine life of 8.8 years. So, the project's very strong. We can, if even we looked at the base case reserve economics, we can still cover the project without any inferred material. We're going to mine 4.6 million tonnes of ore at 5 grams. That'll give us about 8.7 million ounces recovered. We've got a payback period very short of 29 months. First full mine will generate over 0.9 billion US in free cash flow. So the project does respond very well to the gold price. Post-tax NPV 455. That's at a 2,884 gold price. So we've used a very modest gold price, a very conservative feasibility study, which is sort of the nature of the South Africans. They're very conservative people. So we really do believe we will be able to deliver these numbers what we've measured against this feasibility study. So the gold plant's under construction, which is very exciting. Sometimes I just like to sit at the top of the hill with Jacques and we just listen to the trucks and everything being built, because every day you go there now it changes, because you got like 7 different projects going on simultaneously, so it comes together pretty fast. 40 historical gold mines under management. We have gold discovery costs of less than $12 an ounce. Because of the 130 years of history, we actually know where the gold is, so we call it drill to validate. We have all the old stope plans, mining plans. The reefs are relatively flat, so they're easy to drill. We've got great community support. We've got a very strong ESG program. Basically, we've made a commitment to the environment. We're going to deliver about 53 million rand over 11 years into that environment to help fix the river and the hydrology of the basin. That helps the animals, the farmers, and helps get the river back to its more natural state. We've got a post-tax internal rate of return of 77%. So we can see here, in terms of production, we started off a little slow. We put in our rock dumps first. The rock dumps got about 1.2 grams a tonne. And by the second year, we're starting to get some of that stoping dirt. So while we're building the plant and putting the rock dumps in, we're doing our underground development simultaneously. And we can see by the third year, the underground development's kicked in. We're putting that 5 gram dirt through the plant. And obviously, production goes up very dramatically. We peak at about 120,000 ounces under this plan. But obviously, the idea is to do more exploration. We really believe, this is probably more like a 30-year project. But we'll bring more lines online and do more exploration. But we want to fund that out of our own cash. We want to be a growth company, and we want to be delivering value for our shareholders. You can see the accumulated cash flows are very strong as well. Okay. So I'm a big believer in the gold price. So if you've said today, we talked about 2,884 gold price, which the feasibility study was based on. But, if you said the gold price was 4,500 today, which it is, you could look at that internal rate of return post-tax, 118%. Your only sustaining costs, 1284. So in South Africa, your only sustaining costs go up a little bit because you pay a higher royalty as you become more profitable. But generally our all-in sustaining cost sits below 1,200, which is the bottom quartile cost globally for gold production. So there's a big margin here in terms of gold price and cost. EBITDA average annual is around, at 4,500, over $200 million a year. So obviously that will make the company very cash heavy. And I think really with a peak development cost of 77 million, you know, it offers a great investment opportunity. It has the Australian ones. You can sort of download this off the website to go for all the different numbers, but given the time constraints today, I won't be able to do that. So like I said, this is our sort of strategy. We start off with the surface gold. All you got to do there is believe we can drive a front end loader, collect that rock that's sitting on top of the surface. We also have what we call pre-mine residue. So in the old days, the miners used to only mine, at Beta, only mine the 21 gram dirt. So that was their cut-off grade, and everything else that was below that cut-off grade, they stacked back into the stopes. So you have all these walls of low-grade material that go for kilometres. So we'll also bring in some of that into our initial production within that 18 months. So that'll take us to 50, 70,000 ounces. This stage 2, it takes about 18 months to get fully underground development mining going. So we'll start that underground development, you know, this quarter. At that point, we're starting to deliver some of that high-grade ore. You know, the underground development's about $33 million to get that going, which, like I said, we'll be starting now. We'll also be doing some plant expansion, etc., so we can increase our capacity. And really, the goal is to get to phase 3, which is the expansion side. So at that point, we're pouring 160,000 ounces a year. That'll take 3 to 4 years, but the plant's designed for that. With the modular design, we just add different components. We had 2 thickener tanks. We had 2 more ball mills, crushing circuit needs a secondary crusher, and we can expand that plant, double that plant production. So one of the keys to this project is those rock dumps. We can see here on the little chart on the bottom left, we can see how the plant's full from day one. So there's no ramp up in terms of feeding up, putting dirt into the mill. So come September, all those rock dumps will be placed ready in front of the mill, ready to go for commissioning and bringing that plant online. And we can see the grade goes up relatively quickly. We can also see that reserve life of mine is 8.8 years. So with a reserve, you only use indicated ore, so it's very solid in the JORC table. So we know we've got at least 8.8 years, but really the 13 years we're targeting is not really the story. We really expect to get to nearly 30 years here. I'm just going to skip some of these because I'm being pressurised here by the boss over here. So people have lots of weird ideas about South Africa. South Africa is a democratic country. You vote every 5 years. Right? We've recently had what they call the Government of Unity, so the ANC has lost a lot of support of recent times, and we're getting a nice transition now with other parties coming into the mix. It's English law, the High Court, the law process in South Africa actually very strong. Mining sector has always been part of the South African history. You know, tends to employ about 10 to 15% of the country's employees, and it's also some of the highest wages in the country. So just in conclusion, we're currently in a debt funding syndicate process. We're doing that. We expect to finish that relatively shortly. We're shovel ready. We've got early cash flow, you know, targeting production Q1 2027, commissioning Q4 2026. That's this year, you know, a few short months away. We've got a project that responds well to the gold price, robust economics. We've got the revised feasibility study, you know, you can read that on the website, that's all come out. We've got all the permits we need for the initial mining. We have a great ESG program, Save the River, Save the Environment, Save the People and the farmers. We say will help assist, you know, 21,000 farmers' jobs as well. We've got a scaled growth platform in terms, not only in the plant, in terms of the number of mines available, but also in terms of workforce. So I think, you know, it's a great story, it's a strong story. You know, cash every project with lots of upside. Thank you.
You keep that. I made the fatal mistake of taking that before, Bill, and left someone completely defenceless up here as a great presentation. Thank you very much, Sarah. All right, look at you. Do you know where the longest settlement, gold mining settlement in WA is? Anyone in this room? Where is it in WA? It's not Kalgoorlie. It's actually a little place called Mount Magnet. And that's where these guys are hanging out at the moment. And I was also looking at some of the geology for these guys. And I think what I should do each year is give you all like a bingo card with different geology terms. We mentioned one at the very start, which I thought was very cool, but you guys have a granodiorite intrusion. Sounds fascinating, doesn't it? We're going to learn about a granodiorite intrusion, why it's so important, why it could potentially make you some money. This is Michael Fowler. He is the MD of Ordell Minerals. Please make him very welcome.
Thank you, Chrissy. Good afternoon, everyone. Thanks for coming along today. I'll get straight into it so we can get to lunch. So what's Ordell Minerals about? Well, we're a junior gold explorer looking to unlock a significant deposit at our Barramaya project in the Murchison district of Western Australia. Barramaya is located right next door to Ramelius's Mount Magnet gold mine. Ordell's been around for just under 2 years. We listed on the ASX in July of 2024. Since that time, we've completed nearly 40,000 metres of drilling. We've had some really strong results from that drilling. Last week we released some more results from our first 2026 program. We had some really nice high grades from that drilling. We're back there on Saturday doing another 15,000 metres of drilling between now and the end of July. So plenty of news flow to come from that work. So just a quick corporate overview. So we've currently got 64 million shares on issue. We've got a market cap of around $45 million, depending on the share price of the day, obviously. Our major shareholder is a company called Genesis Minerals, and board and management hold 10% of the company. We're well funded to complete our work programs at Barramaya itself, and also at the Goodyear project down the southern part of WA, and Fisher South in the northeastern goldfields of Western Australia. All three of these projects, we can work them all year round. They're all easy to access. Importantly, they're all near mining infrastructure. They're all under transported cover, shallow transported cover, and they're all highly prospective. Quick look at our board and management team. Tommy McKeith's our chair. Tommy's on the board of a couple of ASX listed companies, including the large Australian gold and copper miner Evolution. Tommy was with me at Genesis Minerals, where we had a lot of success there together over 5 years. Darren Gordon, who you might know from Centaurus, he's also on the board, very experienced operator, highly qualified mining executive. Jeff James is our company sec and CFO, a very experienced operator that keeps us on the straight and narrow. And the people that do all our the real work, our exploration manager, Ken Popperwell, and our logistics manager, Glenn Winnett. They make up the team. So a nice, small team, but highly qualified. Looking at Barramaya now in a bit of detail. So the project's located at the southern end of the Murchison Gold Belt, a belt of rocks that stretches over 200 kilometres from north of Meekatharra to south of Mount Magnet. And as you can see, it's home to a number of large gold mines, and it's been around for a long time, producing for well over 100 years, this area. It's been one of the good news stories of the WA gold industry over the last 4 or 5 years, with, for example, companies like Musgrave Minerals making a nice high-grade discovery at Kew, and now that's being mined by Ramelius. You all know the Spartan Never Never story. What a great discovery that was, and obviously Ramelius out there mining as well. Ramelius at Mount Magnet itself doing very well, and further to the north, West Gold turning around a number of their operations, and another number of junior companies exploring and mining throughout the belt, also doing very well. Our Barramaya project's located right next door to Mount Magnet. Mount Magnet's got a gold endowment of 10 million ounces from past production and current resources. And as you all know, the easiest place to find gold is where there already is plenty of it. We acquired the project off Genesis Minerals at the completion of our IPO in 2024. And as I mentioned, we've done a lot of drilling to date, discovering and building on the results. And we've got this 15,000 metre drill program starting at the end of this week, looking to extend the high-grade zones we've identified to date and also to find new intrusions, the granodiorite intrusions. So what do we want to do at Barramaya? Well, it's to define a significant deposit for our shareholders. And what we're targeting, as Chrissy mentioned, is these granodiorite intrusions. An example is the Eridanus one that Ramelius hold. Ramelius have got the ground on the left-hand side of this figure within the blue outline. Our project sits within the golden yellow colour on the right-hand side. So it's this Eridanus granodiorite hosted target that we're looking for. That orange zone that runs across our side of in our project, that's where we've identified granodiorite intrusions to date. So we've got a large area to go and have a look at. So why can we find significant deposits here? Well, this area sits under at least 10 metres of transported cover. So the first explorers, early prospectors, they couldn't see through that cover. And exploration really only began here in 2009 when IGO did a couple of small joint ventures. And then it slowly built up. Genesis took on the project in 2017 and 2018, but it wasn't really until we took it on in 2024 that things started to move forward. So we think our Find and Eridanus strategy is really taking shape at Barramaya. Most of our work to date has been focused on this 2.5 kilometres of strike you can see on this plan view here. We've been focused in on that white outline that you can see there with the orange shading inside that. That's the granodiorite intrusion, the preferred host rock that we're looking at. So probably the last 9 months it's really been looking at the McNab's East prospect there that's in the centre of the slide, and particularly the main zone that's highlighted there in the red shading. You can see plenty of good results listed off on the left-hand side there and also shown on the figure. So what we'll do over the next 4 slides, we'll just look at various cross-sections through the area. We'll start off looking at where that horizontal blue line is, looking at a section along the strike of the mineralisation in the main zone, and then we'll look at 3 cross-sections through the main zone. So here we're looking to the north, west is off on the left-hand side. Mineralisation comes up to the base of the transported overburden at about 10 metres depth. You can see some nice robust zones of gold mineralisation there, plunging shallowly to the east at about 30 degrees. So you can see a really nice zone of mineralisation that we think we'll be able to extract via open pit methods. So we've taken over about 500 metres of strike and plunge extent at the moment. Some of our recent results from last week included 4.6 metres at 19 grams per tonne at the bottom of that, in the centre of that figure there. And all those black squares you can see on there, that's where we'll be doing follow-up drilling over the next couple of months. So plenty of work to get on with, looking to expand on that high-grade mineralisation. So the next 3 slides, we'll look at cross-sections through the left-hand side, the western side of the deposit at this point, and highlighted by those blue vertical lines you can see on the top left-hand corner there. So this is the first one, the 490 East section. You can see mineralisation, which is shown within those red outlines there, coming to within 10 metres of surface. Some nice robust zones there, and you can see it's up to 100 metres wide, very close to surface. It's open at depth, all within that yellow shaded area, the granodiorite intrusion. On this slide, we step 100 metres further to the east, the 590 East section. Again, in the middle of the slide there, a nice robust zone of gold mineralisation, open at depth and along strike. And again, on this slide, 100 metres further to the east, on the 690 East section, the same story, nice zone of gold mineralisation sitting here close to surface. It's open at depth and along strike. So plenty of work to do here to continue to expand it. So the 15,000 metres of drilling that we'll do over the next couple of months is sort of highlighted on this slide. The main zone, McNab's East main zone, will continue to target that high-grade mineralisation. The main zone, the north zone will continue to define shallow gold mineralisation through there with RC drilling. Then the furnace area, we've got about 1.5 kilometres of strike to have a good look at where there's been very little drilling to date. So we'll target the granodiorite intrusion there. And then we've got some other areas where some air core drilling on the east side and to the south, where we're really continuing to try and unlock new granodiorite intrusions that we don't know about. And then we've got the McNabs north and south drilling. So plenty of work to get on with and plenty of news flow to come from that drilling. So that's it for quick summary of Barramaya. So we'll just have a quick chat about Goodyear and Fisher South, our other two projects. Both early stage projects. We'll start with Goodyear. It's in the southern Yilgarn of WA. It's right next door to the town of Norseman. It's an early stage gold project with definite lithium potential as well. We've got about 30 strike kilometres of greenstone to have a look at and explore. Late last year we announced some results from soil geochemical sampling, and we've outlined a couple of robust anomalies on the top right hand side of the figure there, GD1, GD2 and GD3. These are now ready for air core drilling. So air core drilling is what we use to initially assess whether there is gold anomalism there or not by drilling. But before we do that, we're having a look at the Goodyear East target that's highlighted on the right-hand side there. It's about 10 kilometres of strike that we're having a look at, and we're currently in the middle of a soil geochem program testing that for gold. And we'll have the results from that sampling over the next couple of months, and then we'll look to complete air core drilling in the September quarter. So while we're really focused on gold, we're also looking at the lithium potential as well. It's in a very similar geological setting to other lithium deposits further to the north. And a quick look at Fisher South in the northeastern goldfields of WA. We're a long strike from Emerald's Dingo Range project that they're looking to get into production. We think it's got all the right rock types, all the right structures cutting through there to host significant gold mineralisation. We just completed an air core program up there, 1600 metre by 200 metre spacing, and that's in that black box that's highlighted on the right hand side there. So we'll have news from that drilling over the next 4 to 6 weeks. So in summary, Barramaya has been our main project and will be for a long time to come. We think we've had plenty of good results from the drilling we've done to date. We've got a 15,000 metre drilling program that's going to start on Saturday. Look, we're a tightly held, highly leveraged gold explorer, and look, we've got plenty of upside still to come, and any good news really sees a growth in our share price and market cap. Thank you very much. Enjoy your lunch.
Thanks very much, Michael. Home to one of only 3 outdoor cinemas as well, Mount Magnet. Been up there and done a bit of filming, and a very good race day if you are so interested, but lots of great mining history. They've got a ghost town out that way called Bugatti. It's a cute name for a ghost town, isn't it? It was originally a gold mining town, but it's now a ghost town. Its name is Bugatti. We're going to have a break for half an hour, so 1:30 we'll ring the bell. Now, the next segment is fairly fast and furious. So I'd like to say it's the 10 for 10, the perfect 10 for 10, but one of them is 15 minutes long. I have looked at that, ladies in charge of me. So we've got 10 really interesting projects for you to look at. You need to be back in the room at 1:30. And can I just ask you, I know a lot of you are going out that door on the left-hand side. If you could please just go out the centre door, because otherwise we will break the left-hand door, and I'd hate to have to take that of your investment earnings, as fabulous as they're going to be over the next 3 days. Thank you. Catchy, catchy. All right, lunch was pretty good, wasn't it? Decent, boys? Good? Okay. All right, we'll have more chance for chatting this afternoon when we go out to the Gold Bar and have a few drinks and enjoy some time together. Try my bingo card of geological words that I'm building up. The next presentation, Nicholas Rathjon has joined us up on stage. Now, 3 years ago, you'd be pretty happy if you had lithium, wouldn't you? You'd be stoked if you had a couple of pegmatites hanging around. Last year, we'd be stoked if we had some gold. A lot of people who had gold understandably sold out of lithium. But imagine if you had right now both gold and lithium. Would you please make Nick very welcome, everyone?
Just testing. Thank you. Thank you, Christy. Thank you, everyone here. Great conference, and thanks for coming back after lunch. As the introduction said, we are going to talk about, we are a gold-focused company on the Coolgardie Belt, which is a very rich history for gold. But our forte into this belt originally, a few years ago, was for lithium, which we not only held on to during this downturn, while selling other non-core assets to acquire the lithium, the gold that we have now, but also moved it through to a mining lease. And again, we're preparing ourselves for development. So exciting times, and we're actually just announced today we are drilling that pegmatite, the main one being Big Red that we haven't drilled for 2 years. Full transparency, open source, all our information is publicly available. These are all the announcements I will be referring to in the presentation today. I don't have a lot of time, 15 minutes is to cover quite a lot, and we are going to talk about quite a lot. Please come see myself or our technical director, Robin Cox, at our booth in the far corner in the far room. First thing we like to do is always acknowledge our traditional custodians. We are active in these areas, we're walking this land, and obviously looking to partner with these traditional custodians to build mines. That's our focus, and that is what we're doing and the pathway we're taking. Talk about the company, good quick snapshot, circa 65 million market cap today. We've also got 10 million in the bank, tight share registry, board and management own just circa 8% of the shares on issue, which we've been acquiring on market over the last couple of years. And as you can see from the chart, that's not updated. We're trading closer towards 8 cents as at today. And really to talk about the chart and the story of how that occurs is from the fundamentals of the exploration of the work that we're doing, which has been led from our acquisitions in the last 12 months and also the work that we've been done primarily at Miriam Gold Project and the forest target, a forest prospect that we've drilled. But to talk about portfolio, very, very focused. We don't want anything further than 50 k's outside of Cow. We want a good operating hub. We've got a shed, a yard. We sleep there when we're doing our programs, and we know the region back to front and how we operate there. So that's exactly where we are, and we stay focused there. To talk about the board, we have a really good spread, and this is what every board should have, of people that to like make discoveries and find things, and then the other hand is you need to then make the money from those discoveries. So we, layman's terms, like say we like to lick rocks and then we like to make the money or cash in on those rocks. And we have that board composition both as non-executive directors but also the operational team. So if you look in the top left corner, you'll see Nev Powell, no introduction needed. He was CEO of Fortescue for 8 years, tripled their production capacity, made them the cheapest iron ore producer, but a forte into a whole range of other business interests, including Genesis Gold, Genesis Minerals. Rob Waugh, the MD and founding managing director of Musgrave, which was acquired by Ramelius in 2023, coming on as a NED for us, really at a time when we were looking at these gold assets and really looking for groundbreaking discoveries. Myself and my background, my background's been primarily in lithium. That's where I cut my teeth. From 2018, making the discovery at Prospect Resources of the Acadia lithium project, taking that all the way through to feasibility, pilot plant, and then we end up selling that for over 500 million in 2023. So this is really exciting for us and myself of looking how we extract the value of our lithium assets while pursuing the exploration potential on the gold. And Robin Cox next to me, technical director, he's actually made all three of our discoveries in gold and lithium, extra grey, MinRes, really, really good technical background and again, really, really excited about what we're doing moving forward. And as I said, 8% ownership in the company. So when we're spending money, we really look at how every dollar gets to work in the right way. Busy start to the year. We've already drilled 9,000 metres. We've announced 8,000 on the gold. We've got 1,000 metres of diamond pending. We've expanded, we've announced a program of 30,000 metres. We have budget for exceptionally more on the back of continuing results there. And the plan around that is we see a time in the market and a positioning in our portfolio to not only continue to advance the assets, but materially change the picture and the landscape, and I'll touch on that for all the different categories, all the different buckets that we've got here. We've just announced the lithium drilling today and a wholesome update that really refreshes exactly where the asset is and exactly how we are in a good position to not only move into development but commercialise that asset as well. Cow East, I won't have time in the presentation unfortunately to cover that asset, but that's 700 kilometres of tenure, again in really good gold country, right near Vault Minerals, Randalls region on Mount Munga complex, which you might have seen today. They've just had a merger with Regis, which is a $10 billion merger. So again, a really good positioning there for us. And BD, we are always actively looking at how we can complement what we have and always flying out to Cal, meeting every prospect. I like to say I know every prospector's beer order off by heart, and we like to deal with other parties as well. So continuing to grow our portfolio, not rest on where we are, either geologically, exploration-wise, but also development and commercially as well. Here's our tenure. It is a large spectrum, large spacing of tenure, over 100 kilometres. Coolgardie, we'll touch on our primary focus, and over at Cow East, again, all within 50 Ks of Cow, 100 Ks, 50 Ks, 100 Ks of Cow, always within 50 Ks of mills for gold and or lithium, and very focused on the right geology, having that right ground that has exploration work already undertaken, so we're not having to make grassroots exploration work and find something from nothing and really high risk. We like to come in when there's something there that we can then grow to a scale that we see is appropriate to bring into production. And again, we've amassed this portfolio over the last 12 months. So talking about 2025, build the portfolio, 2026 is executing on that portfolio. And as we touch on today, we have been able to do that with the drilling at Forest that we'll come to in a minute. To dive into Coolgardie, the focus of what it is today for the gold and the lithium, we'll touch on the gold. It is a gold belt. It was actually the first, it was actually discovered and mined and looked at in the gold rush prior to Kalgoorlie. So it's sort of the mother of the goldfields. This belt has been around for a very, very long time. Most of the tenure has been locked up for the last 20, 30 years. And only in the last 12 months have we seen fresh blood put into it, including our own. But to touch on our peers in the area, it's really, really important to see the scale, to see where things are going. And Min 260, obviously with Bullabulling coming in, acquired that asset for over 250 million, 2.3 million ounces, grown it to 4.5 in the short span of 12 months. Then over on the eastern flank, we're seeing Forestania have recently come in to acquire McPherson Reward. We then have Horizon Minerals, or their rebrand name now, 500,000 ounces along strike. And then up the road, you've got Focus Minerals with the mill up at Coolgardie alongside other mills there as well with 2.7 million ounces. The point being is that this belt, we've done a lot of work in analysing this belt, every singular deposit, and obviously the scale. And we're seeing singular deposits range from 250,000 ounces up to multi-million ounces. And this is really what motivated us to not only, obviously, acquire more tenure here, but specifically look at how we can convert that into sizable and scalable projects, which we do see in this belt already there. As I touch on, we are drilling, we have been drilling, we will continue to drill. Our plan and our modus operandi is to actively work the ground from multiple angles. Again, we have that commercial and technical capability to run in multiple directions. We've kicked off the RC program, we've done that. Diamond's done pending assays to really extend the deposit at depth. Aircore's running at the moment, 15,000 metres there. So they're at Burbanks East, over on the far eastern side, I'll touch on that, and then coming over to Miriam to test the extension of what we've already discovered at Forest very, very shortly. And then having the permits, having everything in place to continue to back it up with further RC once we know where the next target, the next discovery is coming from and how to pursue that aggressively. To talk about Miriam, this was a key asset we picked up exactly 1 year from today and quickly moved it forward into drilling in July. Assays came out in September, and that's where we've seen that share price move come from, is the Forest prospect. But on the ground, we obviously have worked it very, very hard for the lithium and for the gold. But what we see is there are clear, they're called the Miriam shear, that is the conduit for gold through the tenure. That gives you over 6.5 kilometres of potential mineralisation. The drilling to date, and the reason why we like this ground is it hadn't been drilled for 30 years. The last drilling was drilled in 1995, down to a depth of 40 to 60 metres, and again come up with these lighter gold coloured targets. And we see that as a really, really good indicator when you're getting good regolith mineralisation that was never followed up, and it was restricted at the time due to the tenement boundary. So for us now, it's about going through, doing the air core, extending these targets, as we've done with Forest, as the success from Forest has beneficiated us with over 40 million EV uplift in a short period of time. So continuing that trend, and as I said with the air core, we'll be testing not only all these highlighted light gold targets, but actually testing the entirety of the shear to see what hasn't been found yet. To dive into Forest, and this is the target that we have drilled out of all the targets, we've really gone from strength to strength. Again, when we found it, it had only been drilled in the top 40, 60 metres, a couple hundred metres wide. We've now extended that to, it's got 850, 900 metre strike from end to end. We've really come into the guts. We've now extended it down to 150 metre vertical depth. And again, the diamond taking it to 250, 300 metre depth when those assays come in. So I have very quickly turned this from a small oxide potential to now into a standalone deposit that we continue to grow along strike and down depth. So exciting opportunity there that runs parallel to the other targets as we run through those. So very focused on growing this for its resource potential and continual commercial scale as we continue to discover more assets across the tenure. That's how it looks on a long section. I feel like this picture really explains where we're going. Again, that top level cover you can see was where we found it, and this is where we're taking it and continuing to take it. And again, a large amount of it is untested, and hence why we're sort of plugging it in every direction we possibly can at this stage. But the hits that we can call out there are really typical of what we see north of us. Again, high grade, in the oxide, shallow depths, and again, continuing to chase it now at depth and along strike. But 12 at 12 was the call out that we got from 46 metres, but we're getting more consistent 20, 25 at 3+ gram intercepts as well. So the dimensions are shaping up. It's now turning into what is a tangible deposit there that we're rapidly advancing. The growth that I was talking about with these targets and why we're getting so excited with the air core is that when we go from Forest, you've got Forest South, Forest North, with contiguous lines all the way through mineralisation in the regolith. That runs all the way right up to Burbank's east of kilometre north and continues. So we really are looking at, can this deposit go from 850 to a couple of kilometres, and this 15,000 metre program is really targeted on finding those pathfinders, and the soil anomaly delivers that for us, and it's very, very exciting for us to see how that sort of grows, and we'll find those assays out again with this air core program within the next 4 to 6 weeks. As I said, we're touching on Burbank's East first. We're drilling that now. We're putting 5,000 of the 15,000 on this tenure. We staked this tenure ourselves, and we picked up the other half from a prospector. Again, hits in the 90s, hadn't been drilled since. We really looked at diving into this asset quickly, and very, very excited, particularly a 2 kilometre long anomaly that sits along the sort of northern western boundary that runs down, that had outcropping of quartz and various pathfinders there. So really exciting for us, and as I said, we've got the rig there mounted today with both air core, but also turning it into a slimline RC, which means we can drill a little bit deeper if we're seeing things that we like. As introduced, Coolgardie Lithium Project, I was brought in initially for the lithium asset in late 2023. Share price, market cap was larger than it is today, just on Kangaroo Hills alone. We've then acquired Miriam, then got all the gold in, so you're getting all this other stuff for the same price as what we were back then. We've also in that time doubled the strike length of the Big Red and Potteroo pegmatites at Kangaroo Hills, so we've really put some robust structure around it. And again, as you're seeing there, we've not only been able to extend it, it's maintaining high grade, thickness from surface, and what's called a 15-degree dip, meaning that it's extremely mineable, which is what we're attracted to. The other bit is my technical capability and knowledge in lithium is looking at the processing. You really can have a great deposit, but you need to be able to get it out of the ground and make money out of it as well. And what we've done is done various stages of DMS and flotation test work, which again, in our announcements, that has really yielded commercial and market indicators of grade and recovery there. And you're happy to look at our core, which we have at our booth, that highlights that coarse grain spodumene there as well. And then Miriam is what we picked up. What we got excited about Miriam is that we found outcropping on that tenure there had the same geochemical signature as what we saw at Big Red. That's a really good pathfinder. It sits in the same rock unit. And again, we're getting excited too in the future. That's a really good exploration opportunity there for us and expanding the project to, I guess, district or belt scale opportunity as we continue to grow it. Big Red, and this is a really good thing where picture tells 1,000 words. As I said, thick from surface, shallow dipping. You can quite easily see there we're still within 100 metre vertical depth. There's really good opportunity here for us to not only continue to grow it, to infill it and put it into a tangible asset there, but also look at commercialising the asset, which is what we're focusing on, what we've announced this morning as well. So again, very focused on this asset, and now that we've doubled it and it still remains open, looking at how we continue to grow that asset moving forward. As we get to Cowaisa, I'll just touch on it, 700 plus square kilometres of tenure, again, highly prospective. Last time this tenure was drilled, again, spreads across 90s, 2000, 2005. Parties include what is now Vault Minerals and various other explorers. Again, large targets, huge scale, and again, something we're looking for in 2027 as we continue to grow. But as we go through our timeline, probably one of the heaviest and most robust exploration programs for 2026. Again, over 30,000 metres already announced, 3,000 metres on the lithium announced today, with pretty much back-to-back results on the lithium and gold through the year, and again, still have $10 million in the bank. So if you have any further questions, please come see Robin and I, and happy to chat through it further. Thank you.
Well done indeed. All right, team, we're going to stay with a lithium pure play now. Unashamedly so, James Crozier is going to come up and join me on stage. Now, a reminder, tomorrow morning we kick off a little bit earlier, around the 8:15 mark. All right, James, you ready? You must have been pretty happy about January when things suddenly started going the right direction for you. Yeah,
it's great to see the lithium price going up, for sure.
Yeah. Let's hear the story. Make him welcome, please, everyone. James Crozier, and it's Delta Lithium.
Thanks very much, Chrissy. It's great to be here back in Sydney, and Stu and the team are putting on a good conference as usual. I'm here to tell you about Delta Lithium. If the clicker works, there it is. So, corporate overview, we founded this business back in 20, seems like a long time ago now. We started as a gold company, and we found ourselves in the lithium space after an acquisition of the Mount Ida gold mine. We have a pretty good cash position at the moment. We've got about 50 million in the bank, give or take, and we have a very strong investment portfolio led by a 34% ownership in Ballard Mining, a gold company that we spun out last year. Market cap of about 172, I think, today. And if you take away the investments, our EV's about 10 or 15 million bucks. So there's a real value proposition in Delta that you might want to have a look at. We have a very strong register of shareholders. Mineral Resources is there with 23%. Idemitsu is a big Japanese consortium with 12. Hancock needs no introduction. Waratah, Canadian lithium friends, and board and management have 1.5, and the rest is you wonderful people. So there's our board. Nader and I have worked together for many years. We were in Spectrum Metals together before Delta Lithium. I'm a mining engineer, founded the business back in 2021, and Steve's the representative of Idemitsu. He's the CEO of their Australian operations, a very knowledgeable man, and the introductions that he gives us into the Japanese investment community is very valuable. We did lose Josh Thurlow last week from MinRes. I'm not reading anything into that besides calling it a bit of a win. We were sort of finding that Delta's investment sort of leanings, the upper limit of our some of the things we were looking at were sort of falling within the lower limit of some of MinRes's potential investments. So we conflicted him out of the game, but he's still there on the sidelines, as is MinRes. So there's a very strong relationship there. They're very supportive. So both of our operations are in Western Australia. We've got the Mount Ida operation, lithium, tantalum, and the highest grade rubidium resource in the world that we could find, or the AI could find for us at least. And Unithara is up near Gascoyne Junction. Between those two projects, we've got about 36 million tonnes of lithium, around that 1.1% mark. Heaps of tantalum associated with those pegmatites, and as I said, a very interesting little rubidium kicker, which has kind of put Mount Ida at the forefront for the time being. We are still exploring at Mount Ida through our friends at Ballard, who are doing a ton of drilling for the gold there. You should certainly have a look at those guys. We have drill results pending at Unithara, and that will be coming out quite soon, and you'll see there's some very interesting things there, which we're looking forward to tell everyone about. And we're also pressing ahead with metallurgy workflows to try and win the most value out of some of the complex and very valuable minerals that you find in these pegmatites. So let's talk about Mount Ida. Like I said, it's very unique geology. The gold and the pegmatite, lithium pegmatites, they sit quite close to each other, but we're able to separate them, and there's enough room to stick a decline between the two of them, which is quite handy. We're very excited about the level of confidence we're building at Mount Ida, and we're looking forward to stitching together a pretty good flow sheet with perhaps a little bit of downstream processing. And we're on granted mining leases, there's no native title, and it's fully permitted at Mount Ida, and we spent a lot of time over the last couple of years getting that right, while lithium was having a little bit of a sleep. So there's the pegmatites. They dip into the ground. We stopped drilling at about 1K, and they're still going, but that'll do for now. There's plenty of exploration upside, and you can see on the right of that diagram there's a little blue pegmatite that we have stuck a couple of holes into, and that's looking like it might grow, so that's quite handy to have something new in the footwall of the main Sister Sam. It's fairly simple underground mining. There's a bit of open pit stuff, and that measured material at the top, it does fall within one of Ballard's gold pits, so the marginal cost of getting the first bit of Sister Sam out of the ground should be very, very cheap mining. Located near Kalgoorlie, you're just up the road, and it's just about asphalt all the way to Mount Ida now. If you want to go out to Lake Ballard and look at the statues, yeah, you don't even get your tyres dirty anymore. And like I said, the rubidium there, it concentrated in the flow sheet at for getting the spodumene out, and that's a high value product which we need to look into. The last quoted price for rubidium carbonate was $1 million a tonne. We have about 60,000 tonnes of it in the ground at Mount Ida. I know I do need to disendorse the AFR for headlining a story a few weeks back saying there's $93 billion worth. It could be a little bit less than that, so let's not say that number too many more times. There's a bubble chart showing where Mount Ida sits in terms of rubidium content. It's a big outlier. That's a great bubble chart. They're pretty hard to do. Took about half a day, that one. Made it green so it stuck out even more. And your battery's running out. No, it hasn't. Now, the mica comes out of the spodumene concentrator flow sheet, and it's a 3% lithium mica con. Ordinarily, that's a waste stream for mines that do the mica pre-float. You need to pull it out before you float the spod. As luck would have it, that's saleable, 3%. The Chinese will take that. They weren't going to give us a rubidium credit for that con, so we thought that was a little bit unfair. So we decided to do our own test work. And through our friends at Strategic Metallurgy in Belmont, we produced battery-grade lithium carbonate and very high purity rubidium carbonate from a conceptual flow sheet. So we need to do a little bit more work on that. We are pulling more core out of Ida, and we'll use that to generate some more mica concentrate, which we can then further bed down the test work. I need to sneak this slide in. We're pretty proud of the way that the demerger of the gold went last year. That investment's worth about $100 million on our balance sheet at the moment. We're expecting that value is going to go up as Ballard gets further down the development pipeline towards building a gold mine. I think it certainly will be a gold mine, and we're very much looking forward to using that Ballard investment as future funding for Delta Lithium. So we don't need a lot of funding at the moment, and there's more funding available when that investment is finally liquidated. So Unithara, we're still pushing ahead up there. We've just finished the drilling. We're waiting on the second batch of results. We need to find more tonnes. We do have the Melinda resource, which we've put a mining lease around. We've recently done another small mining lease to the east where the down plunge of the M1 pegmatite will probably go underground. But we're still working diligently towards a mine design there. It's most likely a big open pit with an underground, but it's a very big tenement package, 2,500 square k's. And like I said, we need to find more, and we're doing the work to do so. I am running out of time a little bit here. Chrissy's meant to be chasing me off the stage, but there's the M1. Most people will have seen that before. Quite big pegmatites, lots of tantalum, lots of metallurgical test work done. We're quite satisfied with a 70% recovery. We do need to deal with the spod float losses there, 17% crept up when we did the pilot stage, so there's some water issue there that needs attention. Still working towards all that, and also looking at folding the tantalum in. There's a lot of tantalum in the footwall waste stripping, and if we can derive some value from that, then that is what we will do. So we're still exploring, we're looking for more. The team's up there doing a great job, and we'll tell everyone about it as things happen. So thank you very much.
And the power goes out. Thank you, sir. Well done. Now, I'm trying not to remember, we do have a really tight schedule here, and the boys know it. We're old mates. Christopher Pickett, come and join us. You're a happy man. You've been looking to expand your resource, haven't you? You've been drilling like crazy, and now you've got something to share with us. Would you please make welcome Lewin Meadows?
Good afternoon, and thanks for your time. So I'm here to present a relatively straightforward, simple story to you. It's gold, Western Australia on mining leases. And I think when you look at a lot of the peers for us and other options in the market and what you want to invest in, you're not going to find a much better value stock out there. So this is the summary. 342,000 ounces on mining leases, 500 square k's of tenure. We've got a low EV, 20 mil market cap, $5 million in the bank. It gives us about $40 a resource ounce. All on granted mining leases in WA, north of Southern Cross, and we're very active on the ground across all of our key prospect areas. We've done 10,000 metres since the beginning of the year. We're about to start another 5,000 metre program of RC in the next week and a bit, testing new targets, down dip pits, across a couple of prospect areas. So lots of news flow and potential for real catalysts. This is an overview of the team. So Simon Jackson, you might know him from PDI. They recently got taken over for a few $1 billion. Scott Williamson, he's here as well. Myself, I'm a geologist, and Nick Catras-Kosek, CFO. We listed Lewin a few years ago. We're all very motivated by share price. We are shareholders that we've bought on market, and we're very committed to ensuring that money that we have in the bank is spent on the things we think creates value, and trying to manage and minimise dilution along the journey. This is what it looks like, corporate overview. Our shares are about 14 cents, 127 million shares on issue. We raised money at the end of last year at 23.5 cents. So for you in the room now, you can go and buy our stock for 20% discount to the last capital raise. And since that time, we've gone and drilled a bunch of metres at Evanston, added value with the drill bit, we think, and put a resource on the books of 350,000 ounces almost. So when you sit here today and you look at what was potentially, you could buy it 2 or 3 months ago, you can buy the same stock at a much better valuation with cash in the bank. So this is a snapshot of where the project is. So it's about 100, 150 k's north of Southern Cross. It's spread over a few key prospect areas. Marta North, Evanston's up there is one of our key target areas. There's about 130,000 ounces. Marta Central, Ramelius mined a few little pits out here and sent that to Edna May. We've got 80,000 ounces, 87,000, 88,000 ounces there. We've got another prospect called Golden Orb. We've got 25,000 ounces there. And we also have a bunch of regional targets. We've only owned the project for about a year and a half, year and a bit. And as you know, the life of a junior goes, this is the first year we've had the capital to start doing some of the earlier target prospect generation. So to date, we've been focused more on the brownfields opportunities. And we've been able to grow the resource base from 0 to 342,000 ounces. We leveraged off the historical data, and on that basis, we made a discovery cost around $10 an ounce. So now going forward, we've got the basis of a resource there. We feel like we're on our way to developing critical scale, and now we can start looking at some of the earlier stage opportunities. We're going through that process now to look at more greenfields, blue sky type targets within the broader 500 square k's of tenure. So Evanston is a really exciting prospect for us. It's a bit of a unicorn as far as WA Goldfields goes. So we recently got this M granted a couple of weeks ago, executed a heritage agreement there, which is a major milestone and expedites that path to mining. We've got 130,000 ounces there. Importantly for us, at a higher cutoff grade, we get 96,000 ounces at 1.5 grams. This is all within the top 100 metres. There's an old pit here from the kind of late 90s to 2000s. They processed it pretty close to where this pit is now, and there's no plant there anymore. It's got a long history. I found a penny out there from like 1894 on the ground, so I thought that was pretty lucky. And I think all in all, it demonstrates that there's a lot of exploration potential within these types of projects that just haven't been drilled in kind of 10, 15 years. And we've gone out there and drilled some really significant intercepts down dip. Some of those include 14 metres at 1.7, 9 at 1.7, 13 at 3.2 grams per tonne, 9 at 5. And what we have there is a BIF unit. It's really well understood. You can go to the pit. We've taken a few rock chip samples from the pit wall. The pit wall grades anywhere from kind of 1 to 20 grams per tonne. When we see it in our drilling, we're drilling a hole 200 metres away is the pit, and we're looking at the rock chips, and it looks exactly the same as what was in the pit. And that mineralisation continues down that far. So it's next to a road, on a grant to mining lease, nice little resource, ready to go, and we're continuing to grow that and expand that along strike with our drilling. Marta Central, this is what Ramelius spent most of their time mining at this project. 4 little pits. They sent that to Edna May, and I think when you look at it, we've gone out there, we've gone and drilled some holes, we've replenished the resources that they mined, and I think that points towards the fact that exploration can continue to replace ounces, and it bodes well for future exploration. Again, we've typically only targeted the top kind of 150 metres vertical. We are seeing some decent grades in there in widths, 22 at 1.25, 16 at 2, even things like 1 metre at 10 grams per tonne, demonstrating that there is some decent grade at this prospect area. It has been mined before, and it's on a mining lease next to a road. And we're going up there this next week or two to go and drill some holes here. There's some high-grade historic rock chip trends that haven't been drilled effectively in the past, and these are proper old-timer workings, kind of, the 1900 type thing, not touched by modern mining. And there we've got 11 trends, or 13 high-grade trends of rock chips. We've got up to 10, 20 grams per tonne rock chips in mullock dumps. I think our highest grade one was 209 grams. Just at surface, under-drilled, and we're going to go and do some RC drilling there in the next couple of weeks. Golden Orb, another prospect area that's relatively underexplored, and we're going to go up here and drill test this. We put out some results the other day, which extended some of that mineralisation along strike of the pit. There's about 25,000 ounces here. There's some decent grade, really simple geology, again a BIF unit. And with our coming program, RC, kicking off in a couple of weeks, we're going to test some of these extensional targets down dip of resources and look to grow this resource further. And again, it's on a mining lease, historically mined, and we use downhole EM and geophysics to target some of the extensions there as well. So why invest? Why should you care about Lewin Metals? So we're aggressive explorers. We've done 10,000 metres this year. We put out some drill results last week. We've still got a few more holes pending. We're kicking off drilling in the next couple of weeks. across Marta Central, Golden Orp, and some high-grade working trends. So you're going to see strong news flow in that regard. We've got 500 square k's of tenure that we're beginning to explore, looking at earlier stage targets. And then that all feeds into further resource upgrades and growth for the rest of the year. And I think 350,000 ounces at a low EV, we're well capitalised. We've got active exploration on the ground. It's an exciting time and an interesting time to look at Lewin and be a Lewin shareholder. So yeah, thank you very much. And I think on a kind of another point, when I talk about, Lewin and what's interesting about this kind of region, since I've got 1 minute and 40 left, when you look at some of the gold space in Western Australia, typically, there's an enormous amount of consolidations that's been happening in the big end and the smaller end. And I guess you see today with Vault and Regis and the like, this part of the world is very under-consolidated, and I think as a junior, there's some interesting activity going on in the region. Edna May's on care and maintenance. There's a few mills that probably will be built or looked at in the future. With the record gold price, I don't think it's ever been a better time to have ounces in the ground on a mining lease. And we definitely feel that the Southern Cross Belt and this region has been overlooked by companies, corporates, as well as investors. And so I'd highly suggest you have a look at it and have a make your own mind up. But I think it's a compelling investment proposition to you guys today. So thank you for your time.
Well done, Christopher. Interesting. If you've just joined us in the room, there are seats down the front here. We will not look at you as you walk towards the front, but you're more than welcome to come and grab a seat down the front. All right, Rob Smackman, you ready, sir? So we're going to go to Brazil now, everyone. These guys are using some really cool cutting-edge tech, aren't you, to unlock that potential over in... It's an emerging critical minerals hub, and I know you've got lots of buy-in from the locals, which makes it really interesting to have lots of support. Let's listen to Rob and find out what they're serving up at Alvo Minerals.
Well, thanks, Chrissy, and thanks, RIU. It's always a great event. Fantastic to be back in Sydney. It's the only event that we do every year. So yeah, very happy to be here, and we've been here since we listed all those years ago in 2021. Today's story is about Alvo Minerals. We're a critical minerals explorer in Brazil. We're only in Brazil. We're all focused in the same place. We're a company that has a solid resource base, but the real focus of us, our motivation, is exploration and discovery. Today I'm going to walk you through a bit of a story about how we found a project called Toro, which creates that discovery that we found late last year. So Brazil's a big country. We're operating right in the centre, not far from the capital, Brasilia. We have two main projects, which are critical minerals projects, the copper and the zinc project called Palma, and the Blue Bush ionic clay project, which is a rare earth project, right next door to each other. So we can operate both of our projects from the same office, which happens to be the only office that we have in the company. I'm the only Australian employee of the company, so we keep our costs and our administration down. A lot of our money goes into the ground, and as Chrissy mentioned, we do use some cutting-edge technology to hopefully do that exploration, but then make discoveries as well. So here's our main project. On the right-hand side is the Palma project. It's a copper-zinc VMS style project. There is associated lead and silver with gold associated with it as well. And when I talked about the established resource base, we have 3 deposits here, C1, C3 and C4. In total, about 7.6 million tonnes at 2% copper equivalent. Not quite enough. And what we've focused on over the last couple of years is expanding that resource by exploration and discovery. Now, that right-hand side, that box over there, is 1,000 square kilometres. It's approximately 70 kilometres north to south and 30 kilometres east-west, which makes it a huge exploration search space. And what we've had to do is take the original concepts of exploration and apply that over this enormous area. And it's taken us some time, and we've had some failure. We've drilled several prospects that had no mineralisation at all, but we've taken thousands and thousands of soil samples. We've done hundreds of kilometres of geophysical surveys. We've drilled lots of prospects. We've got our own auger rig that we apply. And I'm really glad to say that in November last year, we took a soil sample in the south of this tenure, and it's not even on this map, it's on the next map, and a prospect called Toro. And that was one soil sample, which was 800 metres between different lines and 100 metres between those samples. We followed it up like we do. We're systematic, we're diligent, and we apply this technology, and we found this new deposit, new prospect called Toro. This is just a graph just to show that our journey hasn't been a straight one. We don't make discoveries every month. We have had failure along the way, but I think what's really important is that over time, we've tightened up all these anomalies. We've tightened up our targets. And it's the only way that you can do that by spending the diamond drilling budget to make those discoveries. And that's been our real focus, our core focus. One of the things that Chrissy mentioned was our technology. Right at the beginning, when we started exploring the known deposits of the VMS, we could see that electrical geophysical techniques were very good at delineating those deposits. So we bought our own equipment. We bought fixed loop EM, downhole EM, IP, and a bunch of other stuff, and we've been applying it systematically across it. We've saved ourselves millions of dollars by not having to have contractors come in and do that work. And we've redone the work several times to make sure that we totally understand it. So Toro sits in the southern part of this belt. I'm not even going to talk about our existing deposits because that's last year's news. This year's news is Toro. Toro was drilled for the first hole in November last year. The first hole so far has been the best hole, unfortunately, but it's our understanding of this project is getting better and better as we go. So on surface, Toro's got a north-east-southwest extension of about 1 kilometre. We did trenching across the top. We did auger drilling across the top. We mapped it. We did all the surface geophysics we could. We built our model and then we drilled it and we hit it in the first hole. We've since drilled 11 holes into this project over 1 kilometre strike length down to around about 350 metres, and every single hole has been mineralised. Not to the extent that we want, but our understanding is growing, and I'm going to show you why. On this long section here, basically we can see the original EM conductors that you can see in the grey there are over 2 kilometres in strike length. This is an enormous target that we're drilling, and the holes that we've done into it so far, which have all hit the mineralisation, have only really scratched the surface. Once we've drilled the holes, we come back with geophysical tools down the hole, and what they've done is shown us the sweet spots that we next need to go and target. So if you can imagine, the grey boxes are almost like a shotgun approach, so it's going to give you a very large area to cover. The drill holes give us more precise targeting. They give us the ability to use a rifle, and the next program that we're planning in the next couple of months will be targeting those green plates. I hope that we will make even more discovery or higher grades discovery than we've seen so far. But to date, what we've seen is prospects or intercepts which average in the order of 4 to 5 metres thick, 1 to 1.5% copper equivalent. And really interestingly, at Toro, much more significant values of gold and silver than what we've seen previously. Silver above 100 grams per tonne, gold above 2 grams per tonne in individual samples. So it's starting to come together, but we need to do more work to understand it better. We also drilled another prospect called Esperanza. Now, when I spoke about the failure that we've had in the past, we've learnt from that failure, which means that 2 out of the 3 prospects that we drilled in this last campaign starting in November were successful. And Esperanza was the second one which was successful. What we hit was we only drilled 3 holes here. 2 of them hit mineralisation. The bottom hole, we did the downhole EM on before, and we found this off-hole target. Now what that means is we couldn't see that red target from the surface because it was obscured by the other superficial electromagnetic signal. But that off-hole target is stronger, and we have a much more precise location in a system that we know is mineralised. So this is a much higher probability of success when we go and put the drill rig on top of this and drill this target coming up in the next campaign. Will talk once about C3, our deposit to the north. We've drilled over 5,000, 6,000 metres here. Some of our results have been quite exceptional, 20 metres at plus 5% copper equivalence. That project is now going through the process of licensing through the Brazilian system, and we expect to have some progress on that in the coming months as well. And lastly, before I go, it'd be remiss of me not to talk about a project called Blue Bush. Blue Bush is an ionic clay rare earth hosted prospect. It is a long strike from the only operating ionic clay project anywhere in the world outside of China. The project is called Serra Verde. Serra Verde was bought last week or 2 weeks ago by American Rare Earths for $2.8 billion. We have the northern extension of this particular project. So our project's called Blue Bush. It's something that we haven't spent a lot of focus on over the last few months, last couple of years actually, but over the next few months we'll be looking to reinitiate exploration here because we see some real value locked up in Blue Bush. As a corporate, we recently raised some money. We now have $2 million in the bank. We raised that money at a premium, an unbrokered capital raise. I think based upon the results that we're getting from Toro, but also from the potential of the rare earths. We've got a very small board. Bo Nichols is here with me at the booth, so please come and say hello. We have a very tight register, over 70% of the registers in the top 20. The shareholders, the board is invested. We are motivated not only by discovery, but we are also motivated by strong share price, and that's what we're doing to try and make everyone some money along the way. So in summary, we're a critical minerals company. We are focused in Brazil and only in Brazil. We've had some success, we've had some failure, but I think we've learnt along that journey, and we're really motivated by exploration and discovery with a solid resource base backing us up. Thanks very much.
Nice, strong, Rob. Thanks so much, mate. Appreciate that. All right, team. We are down to, where are we up to now? Number 5, I think. Yes, we are. Option 5, session 3. We're powering through our 10-minute supercharged sessions. Now, these guys are actually serving up exposure to 3 of the hottest trends in commodities. You've got gold, you've got critical minerals, and you've got that recovering lithium price that we've touched on in this session. Would you please make welcome Karen Wellman?
Thanks, Chrissy. Yeah, so Dynamic Metals is an ASX-listed explorer. We have a portfolio of exploration assets, primarily focused in Western Australia. And as Chrissy's mentioned, all those projects are prospective for a range of commodities, from gold, lithium, and a range of critical minerals. Also, what I want to do today is touch on some news that we had out this morning, our first results from our Cognac West project, from some diamond drilling that we did. I really want to do a bit of a deep dive on that in this presentation today and explain that in a bit more detail. First of all, I'm going to start with the structure, because I really do truly believe that we were structured for success from the beginning. We listed on the Australian Stock Exchange 3.5 years ago. We raised $7 million at 20 cents. As you can see, we've still only got 50 million shares on issue and a share price of 57 cents. We've still got 2.7 million in the bank, and part of that is because of our ability to involve ourselves in some strategic funding partnerships, which I will also touch on in a bit more detail as we go along. The board and management team have been together for over 5 years, so are heavily invested in the success of the company, as well as our top 20 shareholders. So they own 78% of the company. So when we say we're tightly held, we really do mean it. What it means, though, is that you are strongly leveraged to the success of our company when you get on board. So as I said, I really want to get stuck into the project. So Widjamultha is our flagship asset. It's located an hour south of Kalgoorlie in Western Australia. It's a proven gold district. We know people have been there since the 1890s exploring for gold. It's well positioned, surrounded by multiple million-ounce camps. You have the Higginsville Gold Camp owned by West Gold. You've got the St Ives Gold Camp with many multiple million-ounce deposits located in there. One of the things that comes with an area like this is an unrivaled land position, over 800 square kilometres of land in amongst all these other mines. We had a lot of historic data to work our way through when we started off, and with that, we used that to refine our targeting. And one of the targets which really popped out and grabbed our attention was the Cognac West prospect. So Cognac West, as I mentioned, we've spent a fair bit of time over the last 18 months working this target up. It's a structurally complex area, but for us that's all good music when we're looking for the next big gold deposit. With this area, there was some historic drill results, but what we decided to do was look at it with a fresh set of eyes. So we went back in late 2024, we did our first soil sampling programs, and we defined the soil anomalies that you can see there in the yellow outlines. We got anomaly A and anomaly B. We also had some high-grade gold results from rock chip sampling on the surface, up to 2,000 grams per tonne in a quartz vein. So we knew that there was plenty of gold floating around on the surface, but what we wanted to know what was happening underneath and where a potential deposit would exist. So in 2025, we followed up the soil anomalies with about 9,000 metres of RC drilling over several programs. They're the black dots that you can see on the screen. We got some good results, 8 metres at nearly 3 grams per tonne and sort of high grade, 4 metres at 5. We also got a lot of broad, low-grade intercepts. On the southern line, you can see there in a black line, we got big wide zones of like 44 metres at 0.3 grams per tonne. Very shallow, broad, as I said, sort of lowish grade material. So we really wanted to understand what was going on that, whether it was an alteration halo of some kind or what the signature was representing. So end of last year, we applied for an EIS grant, which is a government co-funded drill program with the WA government. They contribute $175,000 towards the drilling costs. And the application was for 4 diamond holes. So we really want to see what's happening geologically in the ground by doing this diamond drill program. And we finished that on the 31st of March this year. The blue dots on the screen are the 4 diamond holes that we've drilled. So you can see the first 2 dots are over on anomaly B, and they are the drill results that we put out to the market today. So I want to walk you through this. So if you can see all the red intersections up the top, that's the shallow, broad, low-grade mineralisation that we were hitting in the RC drilling. This diamond hole goes to 350 metres depth, and what's super exciting about it is that we've hit gold at 311 metres below, which is very exciting because what it gives us is there's an indication of scale, probably for what we've had the indications of scale from the soil sampling anomalies on surface. Now we've got indications of scale at depth. So that's why we're really excited. So we've got 4 metres at 1.5 down there, including a higher grade zone at 1. We can see the gold is associated with quartz carbonate veining. We can see that it's located within the dolerite, which in the goldfields of Western Australia, most of the high-grade narrow vein gold deposits that you find are associated within the dolerite unit. So that's also very good music for us. We also could see in hole 83, which is on a different section, it's the bluer dot on the western side of anomaly B. We got quite a nice high-grade gold zone associated with a shear zone, confirming that it is a structurally complex area. We have a big regional fault that wraps around the top of the project called the Republican Thrust Fault. And we got some good results there with 0.6 at 4 grams as well. So we're really, really highly encouraged by these results, and we're quite excited. And while they might not be in the hundreds of grams of tonnes yet, we're on the right track. And it's also worth noting that in this area, there are no other deep, like the closest, deepest drill holes at this level are associated with gold camps. So it's either Higginsville or St Ives, and we're sitting in the middle of that. So I think that's also very important to note. So we've got the gold, we've got it at depth, we've got it in the right geological unit, and we know that there's structural controls. So we're really well on our way to unlocking this puzzle, I think. Also, what we've got in our exploration portfolio is we are exposed to a variety of different assets or commodities. So one of them is through lithium, through the Mineral Resources joint venture, and this is also another way that we've brought in a strategic partner. So as I mentioned, Widjimultha is our flagship project, and we had the prospectivity for the lithium. 2 years ago, we signed a joint venture with MinRes, and they gave us $5 million cash. So this is one of those non-dilutive funding arrangements that we have been able to bring to the table. So with that $5 million cash, we've been able to go on with our gold exploration while they need to spend $14 million over the next couple of years on the lithium to earn their next stage of ownership. So with that, we are exposed to the lithium upside while we can continue to spend the capital money on our gold exploration. Also in our portfolio, which I won't go into too much detail today, but there has been a bit more of an increased interest in fluorite in recent times. Fluorite, we've got our hands on this Minthena deposit or prospect which sits up in the Pilbara. It is a high-grade, underexplored opportunity. Last significant work was done in the 70s. There's multiple veins exposed at surface. There's strong demand growth forecast. In this, it's critical for EVs and semiconductors and steel making, and also, having our own supply within Australia has become a bit more important as well. So with the Minthena project, we've been working our way through permitting and hope to be on the ground doing a bit more work by the end of the year. But it's definitely something that's of interest, and it's sort of one of those extra strategic optionalities that we have in our portfolio. I often get asked, with this large land position, we've got like over 100 tenements in WA, how do you focus your attention? I want to be clear that our attention is focused on Widgiemooltha Gold at this time. We've got a pipeline of projects that are refreshing in the background. We've got the Lady Jane Lindsay's Aqua projects all located within an hour south of Kalgoorlie. They're what we call our generative projects that we've got ticking along. We've got our strategic partnerships, such as the one with Mineral Resources, helping provide that exposure to the lithium. And we've also got the strategic optionality of the Minthena fluorite. So it's quite a diverse exposure that you have here at Dynamic. It's a very active year ahead of us. We're a little bit behind schedule. We've only done Cognac West so far. Next cab off the ranks is Courvoisier, located about 4 kilometres away with some RC drilling. But as you can see from this, that we are working our way through the pipeline, continually generating new targets, and have that continuity going throughout the calendar year. So hopefully you can see that we are well funded. There's a pipeline of assets behind Dynamic Metals. We're not just a one-trick pony. And that I think we are quite well positioned for success in 2026. So come see us at the booth and grab a Dynamic donut as well if you're feeling peckish this afternoon.
Well done, Karen. Bravo. And if you're also new to us as a group too, I don't speak just while they're turning off, because what we need to do is tidy up their feed for the ASX as well. So that's why I look at them in my certain manner. So I don't want my voice over the top of theirs, because it makes it a nightmare for our audio guys down the back. All right, we're going to knock off another acronym on our geology bingo card. We're doing PGE, Platinum Group Elements. You can knock that one off, because these guys have got a lot of these in their project. We're travelling to the sweet spot in mining in Western Australia, up in the Western Pilbara. This is James Rattenberry. I want to make sure I get that. James Rattenberry, and we're going to talk green tech metals. Please make them welcome, everyone.
Thank you, and thanks very much for having me. I joined GreenTech as CEO 2 months ago, so this is my first presentation in front of an audience. And by way of background, I am a geologist, but I spent 13 years in mining private equity finance with resource capital funds. And a lot of that was investing in Platinum Group Metals projects. And when I came across this one, it was just too good to say no to. With GreenTech, I see an opportunity to reframe 2 high-quality projects that have had extensive exploration and a development history. And what we're doing is reinterpreting some of the geology to look at this through a very different lens. Our core focus includes the recently acquired Money project. So that's a high-grade Platinum Group metal project. It's got 24 million tonnes at 2.9 gram a tonne Platinum Group metals for 2.2 million ounces. So this is a very high-grade reef system sitting within a layered ultramafic intrusive. And outside of and within that reef zone is a lot of copper and nickel, which has never really been a focus of prior exploration. We also have the Wandoo Copper Project, a 6 million tonne resource at a grade of over 1% copper, over 1% zinc. And this is a brownfields project. It was mined as recently as 2008. The 2 projects are located 10 kilometres from each other, and the resources across both projects gives us a substantial consolidated high-grade precious and base metals endowment, and we've got a clear de-risking pathway in front of us. Both Money Money and Wandoo are located about 60 kilometres south of Karratha in Western Australia, and they're close to infrastructure with a highway sort of running right by them. There's a sort of a major power line as well, and both projects sit on existing mining leases. We've consolidated a ground holding in the West Pilbara of over 500 square kilometres, and importantly, this is the first time tenure's been consolidated over the 225 square kilometre Money Money intrusive. We completed the acquisition of Money Money in February, and that was after announcing the transaction in December. At a share price of 8 cents today, we're around a $22 million market cap, and we're really well supported by a number of shareholders who don't show up on this list, but I think some of Perth in particular's most identifiable junior mining investors, those that have backed Chalice and Terra and other world-class discoveries. So a lot of people sort of have come on board on the basis of the asset in the last few months. In addition to myself, the board of GreenTech has been refreshed over the last few months. So Simon Kidston out of Sydney joined as chair late last year, and Stephen Murphy, the current managing director of CZR, joined as an NED early this year. As part of the Money Money acquisition, we've also brought on Kevin Frost. He's a world-renowned geologist who was instrumental in Chalice's discovery of Gonville. And Kevin's only got 2 engagements. He consults to Chalice and he consults to us around Money Money. Talking to Money Money, there's close to over 400 drill holes into the northern extent of this major intrusive structure. Through prior work, there's 13 kilometres of strike length over which this platinum metal reef has been delineated, and it's been drilled down to a depth of 700 metres, and we know these do thicken and continue with depth. We completed our first drilling program at Money Money in March, and we have assays due this week, so a very short-term catalyst coming. Our drilling program was designed to support the re-estimation of the historic resource at Money Money. This is a JORC 2004 resource drilled to a measured and indicated level of confidence in most of the key zones. Importantly, we've been able to resample and re-assay a lot of the historic core that's been well preserved on site. And this aids in us building an understanding of the broader exploration opportunity across the intrusive, and we'll do that using a full geochemical suite of assay data that was never done previously. With historic work programs at Money Money just focused on the high-grade platinum reef zone, which is around 3 metres thick, we've reinterpreted the mineralisation sitting around that reef, so going through old drill hole databases and drill logs, re-logging core, and really trying to form an understanding of what else is there. And we do know there's a lot of coincident copper nickel within that reef zone, and there's also an 8 to 10 metre wide zone around the reef that runs up to 1% copper, 0.5% nickel, and that's never really been considered historically. There are still the very high-grade zones of platinum group metals throughout this deposit, up to 9 gram a tonne PGE. So I think from a grade perspective, we've got a lot to work with. And historically, they used a 1.9 gram a tonne PGE cutoff when they domained out that reef zone. Now, because of the copper nickel, we're looking at this in terms of what an NSR is, so giving value to the copper and nickel that's in the system, which I think is a significant sort of upside to what was done previously. One of the big learnings in the last few weeks of spending time on site with Kevin Frost is, just how strong that copper-nickel surface signature is across this intrusive. A lot of gossan, and certainly from the trenches we can see lots of, sulphide, so fresh sulphide signatures in those trenches as well. So we see outcropping reef zones, we see a gentler plunge on mineralisation in the east, and because of that very continuous sort of 8 metre thick zone, we anticipate that's going to be highly attractive for open cut mining when you consider the platinum group metals and the copper nickel. The Money intrusive, I mean, also has a gabbro unit sitting on top of it, and we've seen a lot of altered gabbro with a lot of chalcopyrite throughout it too. So they didn't really assay for this historically. So I think part of the intert we've done is looking at where they have picked up a few numbers and where they have got those broader zones of 20, 30 metres at 0.5% copper. Not amazing grades, but when you pair that with a high-grade platinum reef sitting below it, we're looking at that sort of bulk scale extraction potential. We're going to do some more fixed loop EM, more rock chipping, just to better understand where these copper anomalies are strongest. In the north of Money, we've got 100 square kilometres of this strong copper anomalism, and that's where Kevin Frost is most excited. It's not around the reef itself, it's around this broader sort of anomalous copper nickel and the potential for repeats of the platinum reef. We've got that 13 kilometres of strike length, so open on both limbs of the intrusive and down dip. Money as a project stands alongside a short list of very high-grade platinum group metals globally, including the Merensky Reef. It's very sort of strong in copper, so this differentiates it from a chalice, which is more of a nickel-dominant system. And I guess the 40 years of exploration and study work at Money have given us a real sense for what we can do here using traditional flotation and producing one bulk concentrate. So simple project. At Wandoo, 10 kilometres away, I mean, this is a high-grade VMS project with a lot of upside, and I think we're going to spend time on this. Firstly, looking at including the gold that sits in those copper zinc domains. We did an assaying program for that last year, and there's an upgrade in terms of actually pulling that gold into the resource. Beyond that, we've also got a lot of potential to drive pits deeper. The prior resource was done at a copper price half of what it is today, and with the stacked lenses, we've got a lot of upside to push those pits deeper before we look at the depth extension. I wanted to speak just quickly around platinum group metals because it's a real passion of mine. I'm a physical investor in iridium, ruthenium and some of the lesser known metals. I mean, of your 8 precious metals, 6 are within the platinum group metals suite. And I think similar to silver, I mean, you've got that dynamic where, I mean, industrial demand and investor demand compete, and you really do get much higher prices in environments where that tension materialises, and they're quite small markets with geographic constraints and that scarcity dynamic. So a lot of upside in platinum group metals, and I'm most excited in demonstrating how this project looks like a chalice, like a Terra, like a Bravo mining in Brazil, with a bit of reinterpretation. We'll have assays out next week. We're going to progress with the updates to the Money resource and then the Wandoo resource. And I think because of the mining leases and the amount of work done, this is something we can progress into study phase very quickly. A lot of upside with the resource, obviously exploration, and this is an obvious M&A target given the potential for 500,000 tonnes of copper without having to do a lot of drilling. So please do drop by the booth and have a chat. Thanks very much.
Right on. All right. When it comes to copper exploration, believe it or not, it pays to be able to tell investors or potential investors that you are thick in all the right places. To elucidate us, will you please welcome Chris Hansen, the MD. Hello, sir.
Thank you. Good afternoon, and thank you all very much for the opportunity to provide an update on Somerset Minerals. The core message for today's presentation is very, very simple. Somerset offers investors exposure to a large-scale, high-grade copper exploration opportunity at exactly the right point in the copper cycle. Simply put, the world needs more copper, and the industry hasn't been finding enough of it for the past 10 years. At Copper Mine, our flagship project, we've already delivered thick, high-grade copper, which is near surface. And that was part of our maiden exploration program completed in the second half of last year. We have a district-scale land holding and multiple untested targets and the opportunity to make multiple discoveries throughout the region. Oh. Sorry, we need to go all the way back now. So look, just in the interest of time, I will move through the disclaimer and the capital structure very, very quickly. I'll just make the note here that we contain forward-looking statements and exploration results and refer you to the relevant cautionary statements. Sorry, keep going. There we go. Perfect. So why is the Somerset story so compelling? There's 5 or 6 key points here that I'd like to outline. Firstly, our copper mine project displays all of the right geological foundations for a major copper system, being copper-rich source rocks, large structures, strong alteration, and high-grade mineralisation, both at surface and in previous drilling. Secondly, our maiden drill campaign completed last year generated some outstanding drill results. The first drill hole that we ever put into our Jura discovery delivered 42.7 metres at 2.7% copper from just 15 metres below surface. The third point that I would make is that we control a very, very large land package, over 1,650 square kilometres, with more than 110 historically mapped copper occurrences, with surface samples grading near 52% outcropping at surface. And the fourth point I'd make is our regional pipeline is growing, and it is growing very, very quickly. We have over 21 untested targets, including our flagship regional target being the Talisker anomaly, which I'll touch on in the second half of this presentation. So the investment case for Somerset Minerals really starts with the current copper market. The global economy, as we all know, is becoming more and more copper intensive, with new demand drivers like decarbonisation, grid investment, and the new emergence of some of these AI data centres. The slide behind me, though, highlights a very, very interesting fact. There's been an 83% decline in copper discoveries, with only 14 major discoveries being made in the last decade, compared to 81 copper discoveries in the decade preceding that. This is a result of exploration having shifted away from greenfields exploration, like Somerset Minerals, more towards brownfield and near-mine exploration, which is contributing less copper tonnes to the global copper market. Simply put, the world needs more copper, and Somerset has the pathway to potentially provide that. And that's where our copper mine project comes in. As I mentioned, we control a very, very large land package of highly prospective geology, hosting more than 110 mapped historical copper occurrences. We've already generated 21 regional targets, including Talisker. We made our first discovery at Jura just 6 months ago, and this map just shows why the region is so compelling. There are nearby deposits, including ASX-listed Whitecliff Minerals with their Danvers deposit as well. From here, I'll cover 2 key points. I'll firstly talk about our most advanced target being Jura, and then I'll touch on our regional exploration portfolio as well. So this slide here shows the emerging scale that we have here at Jura, and I cannot stress enough that this only represents a very, very small fraction of our total project area. From left to right across the screen there is a mineralised strike horizon of about 5 kilometres. The yellow dots are high-grade surface samples with samples of up to 19% copper outcropping at surface, and the green dots there are historical drill collars from our last campaign, and the yellow circles are untested geophysical anomalies. The majority of our work has been focused on the northern end of the project, where you see a cluster of green holes behind me, but I would highlight the fact that over 3 kilometres away, we drilled a single hole where we intercepted 10.7 metres at 2.65% copper, and we haven't even followed up on that yet. So at Jura, we've now completed around 12 drill holes. We've drilled to depths of around 170 metres, and we've defined average thicknesses of mineralisation of around 40 to 60 metres. The maiden drill hole we put into this, we intercepted 43 metres at 2.7% copper from surface. Mineralisation here is typically fault-hosted. The main mineral is chalcocite and hosted within a breccia. The best thing of all is we're currently drilling here at the moment, and I'll touch on that again in a moment. This slide shows why Jura North is just so exciting. The first drill program we completed in 2025, we hit mineralisation in every single hole. We produced broad intercepts of wide mineralisation, and beyond the initial discovery hole, we've had intercepts like 60 metres at 1.5% copper, including a higher grade core of 19.8 metres at 3.5% copper. The 3 holes you see here are the same 3 holes that were on the previous slide. The only difference now is that we're not looking down to 170 metres below surface, we're looking down to well over 600 metres below surface. The background image there is a resistivity survey that we completed late last year, which shows that same mineralised signature is potentially contiguous down to depths of around 600 metres below surface. And that's the focus of our current drill campaign. We will be testing mineralisation here down to depths of around 400 metres below surface, while also testing potential hanging wall and footwall loads as well. The key advantage that Jura has afforded us over the past 6 months is we've made a number of very key geological learnings from this deposit. One of the key observations that we've made here, and it's a very basic observation, is that anything that's mineralised has been demagnetised. And it sounds like a relatively simple point to make, but from a regional targeting perspective, it's very, very powerful. And the reason for that is that our host rocks in this part of the world are exclusively basalts, which are very high in magnetite, which, as the name suggests, is magnetic. When we have these hot hydrothermal copper-bearing fluids move through the system, they alter that magnetite to hematite and effectively demagnetise the rocks in the same process. That's become a core targeting feature as part of our regional exploration campaign to unlock the true value of this entire region, where late last year we completed both an airborne magnetic survey and also a regional geochemistry survey. The purpose of that was to identify large demagnetised linear features that were coincident with geochemical anomalies. What we were hoping to find was maybe 5 or 6 coincident anomalies. What we ended up finding was well over 20 coincident anomalies, 3 of which we have subsequently ranked as being high priority, and the standout anomaly being our Talisker anomaly. Talisker is one of our most exciting regional targets. This is a very, very large coincident anomaly, and I cannot understate the size of it. We have a coincident geochemical and geophysical anomaly, and there's 3 things that we really like about this target. The first being that it is hosted within a very large 17-kilometre north-trending demagnetised fault zone, with zones of demagnetisation of up to 300 metres wide, indicative of hydrothermal fluid flow. The second point we really like about this target is the coincident geochemical anomaly. And it's not just low-grade soils. We had 4 samples that came back at well over 1,000 ppm copper in soils, and one that was close to 4,000 ppm soils, coincident with that geophysical anomaly. The third point we like about this opportunity or project is the structural architecture, and that fault zone is part of the same fault zone that hosts our neighbouring deposit with Whitecliff Minerals Danvers deposit. The plan here is that we'll do some infill geochemical sampling in the next 4 weeks, and we're hoping to drill this target in the next 8 to 9 weeks. These images just reinforce the grade potential that we're seeing across our entire project area. I fully acknowledge that they don't demonstrate mineralisation alone, but it does certainly show the fertility of the system. So apologies that we only have 10 minutes, but we have much more to say about the project. We're down at booth number 88, so if you've got any other questions, please feel free to come down for a chat. Thank you.
Well done, brilliant. Now, I was going to say something during the last break, but thank you, Reserve Bank. We all need to stay here for all 3 of these days so we can make more money for those of us with a mortgage, because they just upped the rate again. Now, Joe, do you like red wine?
Sure, yes.
Thought so, because Joe's 2 projects, nice little mature projects, tin projects, one is in Spain and one is in Tasmania, both nice places to drink red wine and buy red wine from. Was that planned at all, Joe?
This is true. I can confirm.
That's all right. We're going to talk elementos now. We are going to 2 hotspots, and we're talking about tin, which we haven't really talked about yet at RIU. Please make him welcome.
Thank you very much. Hi everybody. We are a tin developer listed on the ASX. This presentation has been put onto the ASX this morning, or this afternoon. So please have a read of the disclosure statements, which I'm sure you will after this. I do have to apologise to any of the geologists in the room. I don't think I've got one drill, assay or section in this. For everyone else, please enjoy. So yeah, we're a developer. We've got a mature resource basis and we're turning our 2 tin projects into mines, and that's the full focus of the company. We have not had a drill rig spinning on our deposits for over 12 months, and that's because we're taking these projects into development. We currently have a market cap of just under $200 million. We have Australia's largest tin producer and one of the largest globally listed tin producers, Metals X. It's 16% of our register, as well as having 2 board members. And we also recently had L1 Capital, one of Australia's leading resource institutions, come in and take a 20% placement in us. So we're very well placed, got a very good register, and certainly got the right supporters to take these 2 projects into production. Where are our projects? As we've already covered, very not bad places to go in the world of mining projects. We have our main flagship project in Andalusia in the south of Spain. That's about 2 hours out of Seville. And yeah, it is a greenfield tin deposit, open pit, and it's going to become the only tin mine in Europe. And because of our vertically integrated solution, we've got an option over a tin smelter 200 k's away. We're going to be supplying tin into the European Union. Again, there is no other primary tin supply in Europe, nor is there any tin supply into North America. Basically, the entire tin supply comes from developing nations and China. So for us, this is very strategically important, very well placed at the moment. And then we've got the Cleveland Tin Project in Tasmania. It's a brownfield project. It did operate until 1986. We've had it for about 10 years, and we've been doing plenty of drilling and recently really focused on not only the tin that's close to the surface, but a very large tungsten deposit which sits underneath that. As I said, L1 came onto our register in February this year with a $30 million placement to take 20% of the company. They're a high conviction fund, and they came onto the register because they saw that we are the most advanced tin developer on the ASX and one of the few in the world. There is only about 6 or 7 tin projects in advanced development in the world. And tin is forecast to be in some very sufficient deficits. That money is going to go towards moving our flagship project through FID and into construction operations. It also covers the option agreement we have over the tin smelter, also in Spain, and then the Cleveland Tin Project, which I'll take you through at the end. So yeah, very well funded, and certainly we are struggling to find ways to spend the money at the moment, which is a pretty good problem to have at the moment. Tin price is doing the heavy lifting for us. Tin price is sitting well up, close to $50,000. The definitive feasibility study we delivered last year for our Oropesa Tin project in Spain was done at $30,000. So obviously that's about a 67% premium, and certainly based on the really constrained supply of tin and tin concentrate into the market right now, it looks like it's set to stay there for a while with the lack of new projects that can even come in and fill the gap. As I said, we are a fully integrated tin solution for Europe. We have our Oropesa tin mine. We also have the option over the Roble Lledana, apologies to anyone who speaks Spanish, tin smelter 220 k's away, which will deliver tin ingots into the European market. One of the key reasons that this is extra interesting from a business case point of view is because there is a premium for tin deliveries in Europe. It's about $1,000 to $1,500 above the $50,000 tin price, and there's about a $2,500 premium into North America. So by producing tin in Europe, and that tin will naturally flow into both the European and North American markets, it certainly won't flow back to the non-premium markets in Asia. As I said, Europe's 83% of their demand comes through imports currently, so they're really desiring some domestic supply. Spanish government's coming to the party. They just put tin on their priority raw materials list. That's in addition to tin being on the critical raw materials watch list in the European Union. So certainly tin is very well placed. Tin is also on pretty much everybody's critical minerals list around the world. No surprise when there's no supply in North America, no supply in Europe, and very little supply out of Australia. As we said, I'm not going to show you any sections here, but here's a 3D model of our resource and our ore reserve. So again, one of the very few tin projects around the world that has an ore reserve. That's on the back of our definitive feasibility study that we delivered into the market last year. Talking about the feasibility study, the numbers I'm showing you here are done at $30,000 per tonne. The current price is $50,000 a tonne. NPV of our published DFS was $270 million NPV. Currently at spot prices, that's about $1.1 billion. So the tin market is very strong, and our project's very well placed. All-in sustaining costs, $15,000 to produce our tin ingots. As I said, that's a very, very low cost compared to the current $50,000 tin price. So, and a less than 1 year payback to build the mine at current tin prices. So moving on to our second project, but one that's growing in the company's focus, is the Cleveland Tin Mine in Tasmania. It is in that mineralised rich belt in the northwest of Tassie. For those that don't know, mining is actually Tasmania's #1 contributor to GDP. A little secret that the industry does down there. Very strong industry and very passionate industry, despite the reputation that Tasmania is a bit, a green zone that people don't get in there and mine. They certainly do. Cleveland Tin Mine operated for 27 years, started in World War I, supplying the Allies tin supplies in World War I, and had another run through the 60s to the late 80s when the international tin price collapsed. But it's got a strong future. Why? Because it's got some very, very substantial resources. So it's still got about 7.5 million tonnes of tin resources in the old underground mine, which we have resourced up. We have about 4 million tonnes, just under 4 million tonnes, sitting in the old tailings dam. These can be reprocessed at about a 50% recovery rate. But very interestingly, and certainly where the company's focus has been in the last 12 months, has been the very substantial tungsten resource we have sitting at the bottom of the old mine decline. We have 8.5 million tonnes of wolframite. In the tungsten world, wolframite is the type of mineralisation you prefer over scheelite. Ours is wolframite. And in addition to that, we have a very large exploration target of 32 to 90 million tonnes. Contained within that tungsten, we have other minerals. They're not part of the resource, so be careful how I say it, but we're currently doing test work and reassaying for rubidium, molybdenum, bismuth and fluorite, which we have announced the assays that they substantially intersect through this tungsten ore body. So very substantial critical minerals project, and we have all those minerals currently off at the metallurgical laboratories, confirming how they upgrade, and we look forward to the back end of this year publishing that, as well as some further studies, most likely a scoping study towards the end of the year or into early next year. Here we are. Okay, here's probably the image just to the right is the one I will describe here. Effectively, that is the old underground mine with the old workings down there in the green. The big tungsten resource that the 8.5 million tonnes is the big purple shape you see there, surrounded by the light blue, which is the 32 to 90 million tonne exploration target. So accessible through the old decline, although the old decline currently needs to be dewatered. The red area looking at there is the tin resource, the 7.5 million tonnes. So basically, conceptually, we see this will be a two-phase mine life. It'll have a tin and copper. There is copper credits in that in the red zone, and there'll be a tungsten mine there coming into one life of mine plan. As I said, more detail that in the back end of this year as we progress this through to a scoping study. Tungsten price, for those that, the tin price looks impressive, the tungsten price is even more impressive, and certainly you'd see in other listed companies like EQ Resources absolutely boom off the back of that. So certainly a lot of strength in our two key minerals. We've already done some ore sorting test work on that tungsten. We get about a 6 times upgrade from about 2.24 up to over 1%. So yeah, it's already showing great upgrades even before we do the metallurgical test work. As I said, all this will come together into a scoping study at the back end of this year. In terms of our register, 3 of our major shareholders there now hold 49% of the company. All of them have good bank balances, deep pockets to fund the company through our major project through FID and the Spanish project into construction and operations. That's my board, but I'm going to finish up because I think I'm out of time. Thank you. Come see me, booth 99. Thank you.
All right. Now, you're going to like this next company. They've got a nice little jurisdiction. They've got some great infrastructure. They've got a wonderful skilled workforce. Recently, they've been quoted in the press as saying they're putting down back-to-back aces when it comes to their drilling results. So you should be a happy man, shouldn't you? Yeah?
Sure.
Should
Absolutely.
be, Mr. Link. All right, let's look at what Link has to offer us today for our portfolios. This is Clive Donner. Please make him welcome.
Thank you, Chrissy, and good afternoon to everyone. We are in the Macquarie Arc, which is a very prolific address, well endowed for global copper gold. and gold rich. And we have a belt of 600 square kilometres with a north-south belt running about 60 kilometres, of which 40 kilometres are mineralised, and I'm going to show you what that looks like. Essentially, we have top 10 owning 70%, 200 million shares, around 80 million in market cap, and we're funded for a 30,000 metre drill program currently. In terms of the investment proposition, it is a strategic asset, great location. I should mention that this project is now fully consolidated into one company with one focus and was previously held in multiple parcels over the past 40 years and highly fragmented in ownership. And with the current metal prices and the consolidation of tenements, it's a very valuable belt. You can see we have all the ground from West Wailong to Temora, and that's all the southern end of the Macquarie Arc on the western fringe, and we're directly below Evolution's Carl Mines and North Parkes Mines, which are $30 billion company today. We have very strong growth potential. We have 6 resources, over 500 million tonnes for 3.7 million ounces in JORC resource, plus 1.2 million tonnes of copper. Open along strike and open at depth and in multiple directions. Fortunately, we have some infrastructure running nearby, including rail that runs adjacent to our project and goes to Newcastle. And we have a brownfields project in the very south, north of Temora town, which we're hoping could be the nucleus for a starter development. We have the longest strike of continuous copper-gold occurrences in the Macquarie Arc. We have over 40 kilometres of continuous strike. You can see that on the very left. We also have very strong copper incidences in the drill holes, and you can see the other inset there where we have, in every hole, we have copper. So we have twin metals of copper and gold. Both are good leverage to a hopefully upcoming, even improved copper price, and the gold prices are already very strong. The aerial view of the map there shows our tenement package really in 3 areas, north, central and south. We're busy in the central and southern areas at the moment. We've been drilling around Gidjibung and the dam and some of the targets and deposits in the central zone. Now, turning to the dam drill results, the dam is in the southern end and it's on the right-hand side of that aerial map. We announced a hole this morning, which is the 4th hole out of 5 holes drilled at the dam, and those 4 holes are all in excess of 100 metre gram gold equivalent intersections. So very exciting. It looks like a high grade or higher grade pod of copper gold, and that's at the southern end. It's shallow, and we're going to expand the drilling at depth and to the north. And you can see the planned holes in white in the long section. We also had a maiden drilling campaign at Gidjibung, which is the project on the left-hand side, and you can see the holes, the maiden holes that we drilled, and as we got further south we got even better results, and there's an isolated hole about 1 kilometre south of the pit which is mineralised, and we've got great results stepping out under the Devonian cover. Looking at the historical project and some drilling results, I'm not going to dwell on this, but I'm just putting them up to show you historically some of the holes that have been drilled on this project over the past 40 years. And you could see in the northern parts of Gidjibung, we've got 25 metres at 9 grams, 16 at 2, all close to surface, 14 at 6.5, etc. Monza and Donington are standout targets for us. We're currently drilling Monza, and we've drilled 6 out of 8 holes with assay results to follow, and there's still 9 holes in the dam which we're waiting on assay results. And we're drilling now continuously 24/7 in the central and in the southern zones. So we should have a plethora of news flow literally from now onwards. Zooming into the southern zone, you can see Gidjabung in the dam in the south. We're very interested in the ground further south, which is under the Devonian cover, and we're going to be focusing on that with an IP survey. And you can see the 6K arc that trends northwest to southeast, and you can see some of the targets in and around the magnetics, and that's where we're focusing in the southern zone. We've got both epithermal gold and we've got porphyry copper gold. Some of these results and targets that have been drilled and mineralized haven't been drilled since 1995. So lots of upside for us. The central zone magnetics are showing 17 kilometers of mineralization, targets of which we have 3 resources, JORC resources, and we've got another 10 or 15 mineralized targets that are still got to be drilled. So very excited. Some of these, again, haven't been drilled for 30, 40 years. Just looking at 1 or 2 of the targets, Monza, not a resource. It's delivered a high-grade assay in the past, 150 meters at 1% copper and 0.75 gold, including nearly 13 meters at 9% copper and 6 grams per ton gold. So, and that's pretty shallow, around 60, 70 meters, and we've put another 6, or we're doing 8 holes, and we've drilled 6. It's open in multiple directions and along strike. Mandama, another central zone deposit. This one is a resource. It's about 43 million tons, and it's got a high-grade core, and you can see the hole we put in a month ago, 220 meters at 0.79 copper equivalent, and some very good grades. Now, these are porphyry deposits. For example, Cadia is drilling at a grade of about 0.5 copper equivalent, and it's 2 kilometers deep. And most of our targets are at surface, open pittable, and higher grades than that. So we're very excited. You can see the photos of the core as well. And then looking at the central zone, again, larger system maybe between Mandama and Donington. Donington's a target, 1.5 kilometers apart, no drilling at depth between them, and you could see they're relatively shallow and lots of unfinished business. We're going to be drilling those targets. And then lastly, in the very north, we have a target called Yida, which is nearly 280 million tons, very wide, thick intersections, up to 330 odd meters at 0.4 copper equivalent. Big company project, and we're not drilling out this one at the moment. So, Right Rocks, first time it's been put together and publicly visible in one company, well funded for a 30,000 meter drill program. We have a large resource, and we've got some attractive opportunities and targets all along the central and the southern zone to drill out over the next 18 months to 2 years. Thank you. We're in booth 87. Come along and we'll have another chat.
Well done, Clive. Thank you, sir. All right, now this final presentation, thank you, sir. My apologies, thank you. I was just getting a little bit excited. I was reading Bell Potter talking about the next company up on stage about a week ago, and they were saying they're exciting, emerging gold discovery, etc. And then this morning, lo and behold, bang, they're in a trading halt. So this will be a bit of an interesting one. So Waratah Minerals is next up on stage. How are you feeling, big guy?
Yeah, good.
Yeah, pretty happy. So
Yeah.
you've got 2 days. 7th, you'll be back trading. So let's see what we wish we knew yesterday. Please make him welcome.
All right. Thank you to RIU for the opportunity to present here today. Waratah, we're an explorer focused on the Macquarie Arc and focused on a gold project at our spur. I like this image here because it's really about what we are. You know, this exploration business we work in is a wonderful, wonderful business. And when you get the ingredients right, it's that ability for success is there. And I think what we're going to talk about today is about this. And you look at the rigs lined up on this project, it shows the conviction, not only the Waratah team, the Waratah board, that this is a genuine discovery. And it's going to be quite a significant discovery. So we'll step through and I'll show you why I believe that to be the case. So to be successful in this business, it's about having the right project. We need a project with scale. It's good to control the district. And you know what we're looking at here is you've got to have a team to deliver that discovery. We've got an amazing team on the ground, amazing team in the boardroom, which allows us to not only navigate the capital markets, and that's really driven by a clear strategy. This is all about aggressive exploration. When you find something, you've got to move quickly and build those resources rapidly, and that brings down your discovery costs. Because at the end of the day, this is a business about delivering discovery costs and delivering a discovery at a rate that allows the shareholders to capitalise on it. So I'll just start with some drill holes. In this business, we monitor drill holes, particularly in the gold space, by 100-gram metre intervals. This project is delivering amazing drill holes at the moment, and I think the key thing, the takeaway I look at this is, last week we put out some great drill results. Drill hole 27 was a real pivotal drill hole for us. We'll step through and I'll show you what that means in sections. But 7 metres at 26 grams, 1 metre at 120. It's important because this is a big system and continuing to grow. But when we look at this drilling and we look at Spur, the 38 drill hole there, again, shallow mineralisation, 80 metres from close to surface or at surface, over a gram gold, 10 metres at 8 grams. This is across 2 zones. So, we're releasing drill results here that come from 2 different zones across the district. So quite significant. And for those out there, when we look at the rocks, I haven't looked at many gold deposits globally that, I've seen so much visible gold, so much going on. Every drill hole we drill is different. And for a geological perspective, that's important because this is a very dynamic system that continues to evolve. We continue to understand it and we continue to chase it and we continue to drill it. So it's all about the drilling, and we're well positioned to do that. So important, shares on issue, 300 million. We have a very tight capital structure. We look after that. Board management have got serious skin in the game here. We're committed to it. Share price at 71 cents. We've got a market capitalisation of about 200 million. So the company's come a long way in the last 12 to 18 months. When we started this company with a $3 million market cap and taken it to well over 200 in about 12 to 18 months. And that's really been done by the team delivering, the drill bit, and just that constant drumbeat and news flow and aggressive drilling. So very strong register, North American institutions, Australian institutional investors, and some high net worths around Australia, and good coverage out of Bell Potter and Blue Ocean. So where are we? We're in the Macquarie Arc. We're only about 3 hours drive from here. You head to Orange, you go about another 30 minutes to the southwest and you hit to town called Cargo. That's basically where we're located. You can see our project located about 10 kilometres to the west of the large Cadia project. We're generally in elephant country. This is very large deposits. And it's a porphyry belt. You've just heard that from the previous speaker there with Clive. But what's also known for is very large gold deposits. We look at Lake Cowal, that's a standalone gold project. And this is the right environment to harbour these very large gold and copper deposits, and that's where we're exploring. So it's a mining-friendly jurisdiction. Amazing to work in a community of mine workers, so people understand what it is and understand what a mine is. So a little bit of a zoom in where we are. You can centre of the image there is the large Cadia project. It was Australia's largest gold producer for a long time. I think that project will be back to about 500,000 ounces per annum very soon. But what that does, it brings real infrastructure. So we're not worried about where's the power going to come from, where's the water, where are the roads. We're in a brownfields environment here. Several large mines around us. And that's a great place to have discoveries. And really it's the untested potential in these districts. It's coming along, different ideas. We've had a history of exploration across the project, but really it's Waratah that had a different perspective on this. And that's where we've been successful. So what do we have? Large mining licence covering 100 square kilometres. So this is a district play. Really, really important that when you have a discovery, you control a large area. No point having a postage stamp and having a discovery and people pegging around you. You've really got to control the district, and we do that. The centre there, that magnetic high, is the spur, the cargo intrusive complex. That's where we're focused at the moment. There's numerous other targets in this area. But we have a unique tenure too, which is really important. The main spur area sits on a mining common. So that mining common is an area which is zoned as for mining, and equivalent to probably Crown land, so no native title, no freehold land. So we've got a real advantage here, and we believe that conversion of this project from exploration through to mining will be a lot faster than any other land tenures in New South Wales. So a unique opportunity. The question I get asked is, why do we have this? How does this project exist? Pre-war, this was quite an extensive alluvial goldfield, a lot of activity. The 70s and the 80s, large American companies came here looking for copper. They found it. You stand there, you drill some broad zones of copper. Certainly we're in the right ballpark of a porphyry environment. And so that was the Anacondas and the Biltons. In the early 90s, Golden Cross held the project. Probably suffered from a bit of a mix of, too many projects, focusing elsewhere. But they gave us the clues to where we are today. So some of those drilling, the Golden Cross drilling, that really led us the opportunity to what we're drilling today. And then was held by an individual for a while, focused on, very determined to make this project happen. And we were able to do a deal with them in 2024 and went about the drilling. And I think for us, it was about walking across the project. You could see the scale, you could see the grade, and it was about the drilling. So we have a big core there, that main centre part of the cargo intrusive complex, that is actually a porphyry. You walk across that, it's well mineralised, but outbound of it, in the shoulders of it, we start seeing this gold manifesting at spur consoles, and that's where we're drilling at the moment. A little bit about spur. Currently we have 2 drill rigs on that, currently defined a zone about 1 kilometre by 250 metres. It's characterised by broad zones of 1 to 2 grams, but very high grade discrete shoots. And the system remains open. Consols, we announced the discovery of Consols in about September last year. This is a serious system, and what the geology tells us is this is a big system and is continuing to grow. We haven't drilled the edges of it. I don't think we've drilled the core of it, to be honest. And I think we're seeing, very high grade zones separated by broad zones of gold mineralisation. So as I said, exceptional drill results, aggressive drill program, some of the best drill results globally at the moment. And it's certainly capturing the attention of a lot of groups. Not uncommon for us to put out multiple 100-gram metre intervals in single drill holes and progressing it very steadily. What does it look like? Mineralisation from surface at spur. We've identified the high-grade shoots. Those shoots run sort of 10 metres at 26 grams type thing, but broad zones of gold mineralisation. We see it's hanging together quite well. The drilling is very focused on those high grades, extending them, understanding the dimensions of the scale. Consols, geez, it's a big system. We can't drill the bottom of this yet. We're drilling some 800-metre holes. We still remain in the mineralisation. And what it is a real mix between that environment where you get your gold and where you get your porphyry copper systems, and it's that real transition. So attractive mineralisation, coarse gold, and some of those intervals there we've been putting out, world class in terms of drilling. So this system continues to grow. It's really unlocking the ounces here. We believe this is really the engine room for our resource growth. Preliminary geomet work, amazing gold results, fantastic recoveries here. Once you see gravity recoveries in that sort of 15 to 45%, and conventional leaching 51 to 47. So, nothing crazy about this ore deposit. Very simple, coarse gold, be crushed gravity and a normal sort of vat leach. So we continue to expand. We talked about spur consoles. We've just recently acquired the Ironclad mining licence, so we're about to collar a drill hole there. We're going to start drilling that shortly. And what you'll see is I suspect this system will continue to grow up to the north and around and include alpine and gazzards, and we're drilling at gazzards at the moment with an RC rig. So 80,000 metre program underway, 10 drill rigs. We have 200 permitted drill sites at the moment. So we've got an amazing runway now of news flow, and that constant drumbeat of news flow will keep going as we continue to expand this gold system, and we believe to be a multi-million ounce discovery. So rare tenure, an aggressive exploration team, money in the ground, tight structure. We're focused on keeping that structure tight. Shareholders are very important to us, and a numerous catalysts. When you've got 10 drill rigs, that constant news flow will be there. There will be more discoveries. There will be more shallow discoveries, and it's quite exciting to be part of this journey and a new discovery for New South Wales. Thank you.
Well done, big well done to all of our presenters in that round. That's our Power 10 at 10. So we've got one more session to go for today. We do need to stay here so we can make more money and pay off our mortgages. The last one today, if you want to completely do your bingo card, they've got gallium, copper, lithium, neodymium, praseodymium, dysprosium, and also terbium. So you can get all of your things on your geological bingo card done in the last presentation of the day. And then after that, you will need a drink. So you're invited to join us at the Gold Bar. Enjoy, team. We've got about a half an hour break. You'll hear the bell and then we'll come back in. Thank you. All right, I'll get you all to grab seats coming in. I was just going to share with you a card. A fellow called David outside came up to me and said, here's my card, I'm a mortgage broker. You might need help given what the government's done today. I said, yeah, possibly, quite possibly. Mrs. Hurley, it's nice to see that you're still alive and kicking after your big trip from San Francisco. I'm very impressed with that indeed, because we've been covering a lot of ground. So hopefully we'll keep the energy in the room though, because we've got some really good presentations to round out the day. A couple of new faces that I haven't met before and some old friends as well at RIU. Now we're going to start off with the ladies who are going to take to the stage first up. Now this is the highlight, the number one part of this project is one that's a highlight high-grade gold. It's at depth just north of my hometown in Kalgoorlie. It's a great little project. They've got loads of other projects as well. There's one in Namibia that I'm sure that Tara's going to touch on. You've got a jam-packed program. I'm going to sit down, let you have your full 15 minutes. Would you please make welcome Kazali Resources and Tara French.
Thanks, Chrissy. Thanks to the RIU team for putting on another fantastic conference here in Sydney. And thanks to everyone in the room for your time today. I very much appreciate it. I do have a lot to get through today, so if you are interested in talking more about any of our projects, please come and see me. I'm at booth number 86. Oh, I forgot to do the intro. So, look, what I'm really excited to tell you about here is our recent high-grade hits that we've had out at Goongarrie. So this is just north of Kalgoorlie. I'll get into that to start with, and then I'll tell you about our other projects. A little bit about Kazali. So we do have a number of great projects in Western Australia, Namibia, and also Canada. We're currently working on our flagship, which is the Goongarrie Gold Project, but we also have a great copper asset at Halls Creek in the Kimberley in northern WA. And we have a rare earth copper-based metals project in Abernab North, that's in northern Namibia, and also a huge potential project, a very large carbonatite called carb niobium rare earth in northwest Ontario. This is our corporate structure. Clive Jones and myself on the board there. Combined, our entire board has over 170 years of experience, so we're all quite grey-haired. Sorry, Jono, I know you're out there too. But a lot of experience here. I came across to Kazali from Regis, where we had a lot of success, and my team found 7 million ounces of gold. So in short, we do know what we're doing, and we enjoy what we do. So a little summary on our capital structure. We closed yesterday at 2.5 cents. I think we were 2.4 when I looked just a moment ago, which gives us a market cap of 14.7. With the projects we've got, I think we've got plenty of room for growth there, and we currently have cash and investments of $5 million. So we are well placed to do the plans that I'm going to talk about today. In addition, we also have a couple of royalty streams. So these are future royalty streams with projects that we have divested in the past. Yilgarn Iron are currently developing the Parker Range project, and we expect that that royalty at 50 cents a tonne should kick in 2027. The Hammersley project is a large project, 343 million tonnes at 54% iron. That's at 30 cents US a tonne. So this is our focus today, the Goongarrie Gold Project. It is a large-scale gold project. We signed a joint venture agreement with Brightstar last year in March to earn up to 80% of this project. So it's a staged earning. We spend $3 million over a period of 4 years for 80%, and we're already at 25, so we are well on our way. This is a zoom into the project area. We're in a fantastic location here. We are between Menzies and Kalgoorlie. We're on the Bardock Tectonic Zone. Now, this is the northern extension of the Boulder-Lefroy Zone. It's host to multi-million ounce deposits in the district. It is where you want to be in the goldfields. And we've also got mines and mills in the district too. Just to zoom in again of our project area. And the beauty of this project is that it really hasn't been tested at depth. We've seen the recent success that Gorilla Gold are having at their Comet Vale deposits and Lakeview in particular. That's some early drilling results, and you can see the grades that these guys are getting at depth is really impressive. We've got 20 strike kilometres on the Bardock Tectonic Zone, which is the same zone that Gorilla Gold are in. There's multiple north-south shear structures in that zone, and also a number of north cross-cutting northwest and northeast structures. The geology is complex, and that's what you want for good gold deposits. I'm going to focus in initially on our southern tenement area because that's where we've been most active to start with on this project. We've completed about 10,000 metres of air core drilling, and what this has done is highlighted the Menzies Shear in particular. So this is a north-south trending structure, and we have 1 gram per tonne hits here over about 10 kilometres. We've done a lot of good desktop work here as well. We've had geophysics reprocessed, lithochemical studies done, and so we're starting to build a really good geological model here and get a better understanding as we're drilling what geology is doing. Now I'll zoom into the focus area we've been conducting our RC drilling. We've conducted about 5,000 metres here now, and so we are starting to build the picture at Duke of York and Duchess. So our initial phase of RC drilling, 6 metres at 10.3 grams per tonne and 10 metres at 5.7 grams per tonne. Now, as we drill deeper, what we see is the mineralised structure continues, which, as we just spoke about before, we know that these structures do continue. We see that with others that are drilling in this space at depth. We just recently got 4 metres at 14 grams per tonne from 204 metres. So these are fantastic results. And I should also point out that these are 80 metre space lines between the deepest holes. So this is broad space drilling for these narrow high grade veins. But nonetheless, good results and are certainly very encouraging. I will just show you that cross section to highlight the results. Our first phase of drilling ended at hole 15, and you can see the 2 deeper holes that we've got to the west there's extended this down 80 metres down deep. So we've got 400 metre strike. We do have a mineralised trend there, and we'll be undertaking a mineralisation study on this particular prospect area while we move on to the next one. The next port of call is Hastings. As you can see, that's just to the south, very southern end of our project area, which is located just north of Ardea's Aphrodite 1.7 million ounce gold deposit. As I said, plenty of gold deposits on this trend, so it's a great place to be operating. So we intend to follow up these intercepts, 38 metres at 3.1, 5 metres at 8.3, with includes really high grade results, including 6 metres at 17. So it's a fantastic target again, and we have multiple targets on this project. So our intent is to keep up our drilling activities, reprioritise as we get the assays, and then rank each target, and then we continue. Zooming out to the entire project area to have a look at the potential that we do have here. I'd like to have a bit of a look at the northern project area now and introduce you to Sir Lawrence Great Eastern and also Julie Margaret. Now, the Sir Lawrence Gold Project, this prospect is really exciting, however it is challenging, and I guess that also employs the opportunity, where we have a 2 kilometre footprint of 1 gram per tonne gold at the base of a paleo channel. So that suggests that there is potentially something very significant at depth here. Previous drilling here by King West got some great intercepts, 4 metres at 2.3, and they did get a couple of diamond holes under this, but didn't follow it up. And that intercept, 5 metres at 4.8 from 113 metres, is in fresh rock. So they were targeting a Kanowna Belle style target. This is could potentially be a big system, over 5 million ounces. So we're doing a lot of good groundwork to start with to work out exactly how and which direction we drill these structures. We're currently undertaking a gravity survey, and then we'll be undertaking some air core drilling in Q3 and diamond drilling in Q4. We'll also be air core drilling at Great Eastern and Julie Margaret. Now, this prospect sits on the Comet Vale trend, and I'm not sure if you saw the announcement yesterday by Gorilla Gold, but they had a fantastic hit just north of Long Strike at their Sovereign deposit at the mine there. I think it was 9 metres at 20 grams per tonne. So this belt is capable of delivering very high-grade gold deposits, and we're certainly looking to drilling into more of those. That is Goongarrie in summary. There's a lot happening there. And I'll just go through the rest of our portfolio now. We have a copper project in Halls Creek, northern Western Australia, with a combined MRE of 97.3 million tonnes for 285,000 tonnes of contained copper. So the exciting piece about this project is the first VMS deposit is on a mining lease. We've got fantastic intercepts there, 64 metres at 2.7% copper, 16 metres at 5.9% copper. and you can read the rest. And this has also been tested shallowly, so nothing below 150 metres, and therein lies the opportunity at Halls Creek. The other deposit we have at Halls Creek, this is a large porphyry deposit. These intercepts run from surface, and as you can see, they're quite extensive, 78 metres at 0.3, 126 metres at 0.3. So the opportunity here is also below 150 metres depth. So we're currently considering our options here for deeper drilling across these projects. This is the project generation piece that Kazali do as well, just as an example. We don't manage this project. We staked the ground though, we pegged this, and we recently did a joint venture with Dundas Minerals, who were just out the front there. And we sold this package, well, JV'd this package to them for $500,000 in cash and shares, and up to $1.2 million in future cash and shares. So Dundas do need to spend $2 million on this project over 2 years for 80% of the project. So we still retain an interest, but in the meantime, we've added value back into the company. We also have a number of other joint ventures that are managed by others, which does give us exposure to nickel, PGEs and graphite. I just will quickly touch on our international projects because these are very exciting. Our Abinab North project was recently granted. This is a very large scale project, 790 square kilometres. We're in the African copper belt. We're right next door to Semeb, which is the only smelter in the district which processes complex ores. Now they mined over 30 million tonnes at over 4% copper there. So we do know that there's great potential here in the district for copper, and we've seen the other companies on this map have a lot of success as well, Midas Minerals for example. Our previous land holding, 790 square kilometres, is large and has been very poorly tested for copper, so we know that there's an opportunity there. Previous work focused on the rare earths, so a number of magnetic highs were drill tested. 2010 Avonlea Minerals was successful in drilling a number of their targets and got really good total rare earth oxide intercepts. You can see those there, 19.9 metres at 0.48 total rare earth oxides, 39.7 metres at 0.55 total rare earth oxides, and these include some high-grade intercepts as well. Our walk-up drill target that we have at Abinab North is this pipe-like looking structure, a mag high. It's actually 800 metres in diameter. So we would drill a few holes across this and we would know either way what we're looking at. Is it a carbonatite intrusive? Do we have some sort of other magnetic anomaly which is mineralised? Nonetheless, it's just screaming out to be tested basically. So we're currently in discussions with the landowners, the farmers, have very large land holdings out there. They're quite pragmatic, and we anticipate to finalise those access agreements in the next few months and be drilling in Q3. Now, our Carb Lake project is in northwest Ontario. This is a massive opportunity. This intrusive carbonatite is 3 kilometres in diameter. That is the size of Mount Weld. It had 4 diamond holes drilled into it in the 1960s, and no exploration, no drilling exploration certainly has been done since. We don't have the original assay results, but nonetheless we do have reports, and niobium's reported there up to 7%, which is extremely high. That's just a chart for the comparison size. Arash is producing, they are a larger scale carbonatite, but it is massive, this thing, and there's the location of the drill holes, only 4 drill holes, again down to drill to about an average of 140 metres depth. And this is what the drill core looks like. You can see it's not in great condition, but nonetheless we did get access to this and we were able to take PXRF readings. Now these aren't oxides, these are actual numbers. Praseodymium 0.4% and neodymium 1.5%. So we've confirmed there's mineralisation in this intrusive. Now we're just aiming to get out there and drill test it. We're currently working with consultants in country to deal directly with First Nations, to develop MOU for access, get written agreements in place to get on the ground and drill test this fantastic opportunity in Ontario. But our focus is Goongarrie at the moment, so our gold focus, we're very progressive with our drilling activities. They're staged, they're methodical. We make smart decisions as we get results in. And we'll continually work through those projects at Goongarrie. So we have potential for certainly new discoveries there, building that land holding as well. And we do also have potential wins in our large-scale copper rare earth projects. Thanks everyone for your time. Please come and see me at booth 86 if you'd like to chat a bit more.
Thank you very much, Ms. French. Now, this next presentation is an interesting one because this time 12 months ago, it would have been Inca Resources up here on the stage. And I would have had Inca Minerals, wasn't it? It was Inca Minerals last year. And yeah, we had Trevor Benson come up. Their focus was all on antimony and gold. Well, fast forward 12 months, and this fellow here is the incoming MD of Rockaby Resources, which is what Inca has become. And these guys are unashamedly doing things their own way. Their focus is on gold. They've headed down to Victoria, lots of things to look for in Victoria, but they reckon where they're going, which is not too far from where you could potentially have a nice ski resort, is also the makings of what could be potentially a fantastic gold mine. So let's hear what they have to say. Would you please make him very welcome in his inaugural speech as the MD.
Thank you very much. Well, maybe it'd be a great gold mine, but maybe in rehab days down the track, it might be a new ski resort. But anyway, we'll worry about that another day. So, Omeo Gold Project. So it's located in the East Gippsland area. It's by itself, strategically, there's no other gold play of any size in that area. So we're looking at it at a local level and a strategic level as well. But we're endowed with this project. We're really excited from an Omeo point of view because it's going to become our flagship project where our key focus will be. This is where we're going to sink the bulk of our dollars into the ground to bring this resource on. So it's already got a resource there of 320,000 ounces underground. And it's just got such great exploration upside, which I'll show you through the preceding deck as we move through it, and the potential for resource growth and various options for multi-value wealth creation for what we're doing down there. In terms of grades, there's a few there just highlighted behind me. There's another slide to give you an idea. So this is a high-grade gold mine, narrow vein. This is where I've come from. I've cut my teeth on narrow vein gold mining in my earlier years as a mining engineer, and this project really sits in the sweet spot for what I do. And the team now we're putting around this is geared up to break the ground there and bring this whole project forward to a huge success. The other thing that really got my excitement going is the potential when we look at the long section on the Mount Wills project, the project area to the north. We've got a mineralised zone of 5.8 kilometres in strike, and it's largely open, and we'll demonstrate that as we move through. One of the key areas that was concern for the board as we looked at this early days was the potential risk from government approvals. So we've gone quite a fair way in mitigating that. Certainly in our DD, we've talked to all the other Victorian miners down there and have got a great sense that they are changing their attitude and their delivery of approval processing. But we took another step there, and we've got an incoming chairman who is an ex-20-year politician down there by the name of Tim Pallas. Obviously, a few people here will know of him. Maybe some will know him directly. But Tim has been an excellent individual to work with this far in the project in terms of opening up opportunities through the various departments there. He's well connected, and I think his place on the board will really cement the success of this project. So substantial growth, that's what we're looking at. So we've got the platform for the resource there. We've got an underground that's in the makings. There's old workings there. This is all in the mountains, so the ore body itself is accessed quite easily from existing adits, be that narrow veins, so they will need to be stripped out. But what that really is saying, the cost of capital to develop this project into production will be far less. We don't have the traditional costs up front of expensive decline systems or shaft systems. We can easily get into the side of the mountain and get straight into the mineralised zones. The community down there is highly supportive. I've spent the past year working with everyone down in the Omeo region, and basically an agricultural area in terms of the whole socio wealth and the dynamics down there. They're on the lower side, so they are keen for employment opportunities. What I do like about the farmers down there, they're very hands-on, hard-working and very mechanically minded. So they will make up the large part of the workforce. And again, government support, well, I think we've got that covered off. That's the board. So Tim's coming in, myself as the MD, and then Trevor is coming across onto the board from the CEO role, and Bradley and Andrew will remain on there. This is just the corporate makeup. It's probably the key highlights. Market cap today is around 7.3 million by the time we finish this deal. This is an incoming deal that's not completed. It will be done on the 2nd of June when we have our shareholder meeting, and they'll hopefully vote this project in as part of the flagship going forward. I can't actually see them saying no. So we see a position of about 14.4 million as a market cap, sitting at the same market price at this day. So there's the project area there. In the north is Mount Wills, to the south is Cassilis. Mount Wills is where the activity is in the short term. That's where the resource is for the underground. So it's a large area there with an exploration lease. It's not so well marked out, unfortunately, on the slide, but there's a dark green area there known as MIN 491. Narrow strip, that's where the mining lease is, that's where the reserves are. And it's divided in the north, called Sunnyside, and in the south called Maud. Cassilis itself, or Cassilis, depending on how you pronounce it, is a medium-term exploration play. There's about 155 mines recorded there, a lot of geology, reasonably complex compared to Mount Wells, but nevertheless quite an exciting piece for the future. That gives you just a sense of some of the grades from previous drilling. There's some 65,000 metres of drilling. All that core remains on site. So the historical record is there. But again, quite a lot of excitement in terms of what we can do with this ore body and bringing it on. I'm not going to read through all those areas, but the top section is about the Maud, or the southern area of the reserve. The mineral licence, and Sunnyside's to the north. So just quickly background, Mount Wills has been mined from the early 1890s right through to after the Second World War, up to about mid-1950s. There was a break in production between the world wars for obvious reasons. There was no men around to do the mining. Historically, 235,000 ounces have been mined out of the Maud and Sunnyside for somewhere over 18 grams a tonne. That's just on the mine records that can be found. No doubt there'll be more ounces actually extracted out of that area that's not recorded. Another important point is all the mining is only down to about 100 metres, which is driven more principally of technology around pumping. But from our point of view, the upside is all that ground is open. And probably the other key point, with all that history, there's a lot of data there from a geological and a production basis to draw on. And it's only very early days for us in terms of bringing that forward. Oops, wrong button. This gives you an idea of the strike through Maud and Sunnyside, so 5.8 k's in strike. The resource only sits in those two areas there that are marked up in the pink, at the Maud and the Sunnyside. Across the surface there, there's names of all individual workings and that, so there's been quite a remarkable amount of workings done, mining done over that period, but not a single drill hole in those areas. So a lot of upside for tracking down resources and developing the mine. Historically, this is the Maud, this is just the southern area. Of note here, there is silver credits somewhere between 6 and 10 grams, which is not in the model. It's in some of the core logs, so there's a bit of work there to bring that into the model for the upside. The other thing about the model, in terms of defining the resource, it sits at 320, review there by independent groups such as Cube, Consulting and other independent geos. So there's upside because some of the earlier work done around the domaining and some of the structural data put in there is not correct. So the view is there's certainly going to be a significant uplift. So one of the key pieces moving forward in the short term is to upgrade the model. And our view on that is it'll be just bring us up to about 500,000 ounces. The other point there, it's a bit hard, I don't have a mouse here unfortunately, but on that long section at the bottom, really coming from the left-hand side, there's a line going across there, that's Adit 5. That's part of our project going forward in terms of getting underground access to opening up drill chambers, which we'll be doing in the medium term. In the shorter term, we've got work plans in place for Adits 4, 3 and 2, which are further up the slope to open that up. And there's a number of old records there, very high-grade remnants, pillars and virgin ground in there, running many ounces, which at this stage is unqualified when I say that, but the records look encouraging, so we'll be moving into that in the near term to open that up as well. Resource-wise, oops, wrong button, my apologies. So these are just some sections through there. So you'll see the current drilling there. Very hard to read the slide deck for the intersections, but they're all very high grade. But you can see down dip of these structures and up dip, they're very open. And again, we can't demonstrate this here on this deck, but in and out of those slides, again, it's very open for building the resource base going forward. Sunny side, this is quite important, this slide here. This is where we're going to put our first drill program. In fact, we've already commissioned the drillers to start mobilising to site before we actually get the shareholder meeting done. So we're backing that in with the current dollars available. We are going to start up here on hole 17, which is basically in the middle of that plan. And we want to twin that hole to just do some verification work initially on previous drilling, and then we're going to start doing infill around that. So that's our main focus in the most short term at the moment, going forward at Maud. Later on, we have plans also to come in across Maud from the east or the bottom of this plan section to open up the mineralised zones. So you see two there running across the page or north-south, but there's actually a third one that exists to the north that you don't see on this plan. Again, no drilling in that, but certainly plenty of outcrops. Again here, just some sections. So this first section C, which is the one in the middle, that is hole 17, that large black line there that's intersected on that right-hand structure. The other thing to note on the other two slides, the drilling has only ever gone to the west and not the east. So it's all open along that side. When you walk on the ground and come in from the adits underneath, there is mineralisation there. It's just the work hasn't been done. Just looking ahead, so I've touched on it briefly, but certainly drilling is the #1 game up at Sunnyside, so you'll see some money's allocated to that. This is just based on a $4 million raise when we do the shareholders meeting on the 2nd of June. There is also monies we're working on to go beyond the firm commitments we got to raise 6. So that's the intention. But this activity is based on 4. And the second point there is build the ore body model database up. And then we've got resource follow-up, of course, from the current drilling we've got planned. And a lot of structural work to be done. There's no real structural work done at all at this point down there. And then the typical met test work as we go along. So really, developing Victoria's next high-grade gold mine. So it's all based on a platform of high-grade foundations around the current resource that's there. We've classed it as a non-JORC resource at this point, even though it was JORC when it was put out into the marketplace by a previous owner that was an ASX company, as in Synergy. We've done that because the CP we couldn't track down. He's disappeared into the ether. So and with the knowledge of doing some upgrades on it, we'll live with it for what it is at this point. But certainly our target here initially is to get it to 500,000 ounces, and then the next target is targeting 1 million ounces as a resource. It's a proven high-grade zone. We've just seen quickly on some of the previous slides, and it's nudging on a development stage play. So really there is study work to do, but the access into the mine is there. It's very low cost to actually open it up to get into production. And of course, bringing Tim Pallas on is one of the key fundamentals of us going forward with this project. So that is really it for today, just to give you an idea. Very excited for Omeo to bring this project into the portfolio. It'll be our focus going forward, no doubt about it. And in terms of ski resorts, well, I'll leave that one for shareholders for a much longer time in the future. But it does snow up there. I realise that it gets cold. So it'll be interesting to see how some of the Aussies go in winter up there, particularly the guys from Western Australia. Thank you.
Well done, Richard. Great first presentation in your role as incoming Managing Director. Phoenix Resources is up next. It's a Midwest WA story which keeps making news for all the right reasons. They've just ticked over 10 million tonnes hauled since production began, and they've done it all, John. You've had to navigate cyclones, the fuel shortages. What else have you had? You've actually improved your worker safety, and you've still reduced your operational costs. So it's an amazing story to this point. I know you're going to elaborate on it, so I'm sitting down. He's giving me that look that only John can give me. This is Executive Chairman John Welborn, and let's welcome him to tell the Phoenix story.
Thanks very much, Chrissy. It's always nice to get such a pleasant introduction from you, but I know that the clock's ticking and you're going to kick me off at the end and be nasty. So I'm going to talk quickly at parts of this presentation because I've only got 15 minutes and I've got a lot to tell you all. Thank you very much for joining to listen to the Phoenix story. Those who've followed us will know we are an iron ore producer in the Midwest of Western Australia. We class ourselves as the new Western force in iron ore. It's a play on the ambitions of Fortescue more than a decade ago, as well as a play to our local rugby team over in WA. What you can see on the screen is the Iron Ridge mine. It was a tiny little postage stamp envelope in the Midwest 5 years ago when Phoenix completed a feasibility study that said we could mine iron ore, crush and screen it, haul it 500 kilometres to Geraldton and put it in a boat for 85 Australian dollars a tonne, C1 cash cost. That's an ambition that is akin to many of the junior explorers and potential developers that are here at the conference. The remarkable thing about Phoenix is not only did we do that project on time and on budget, aligned with the feasibility study, 5 years later we're producing iron ore, and our last quarterly we produced that iron ore at a C1 cash cost of 70 Australian dollars a tonne. And I'd challenge any of the junior miners to talk about their feasibility studies 5 years ago and demonstrate that they're doing that for more efficient. How do we do that? We're very efficient at mining. We own our own logistics business. We own our own port assets. The future of the company is in the hills you see there, which is the World Range project in the Midwest. We're standing on top of 300 million tonnes of high-grade iron ore. We mine it, we crush it, we screen it, and then we're currently hauling it to Geraldton in those fantastic 60-metre long quad road trains you can see at the bottom. We published this presentation this morning. It's on the ASX. Anyone who's interested, I encourage you to look at it because there are slides I'm going to have to skip by, and they're all, at least to me, incredibly exciting and worthy of attention if I had longer. Phoenix by the numbers. I've mentioned we're standing on top of 290 million tonnes of hematite. We're going to mine that. We have an exclusive licence to mine that over the next 30 years. That's one of the highest quality, largest iron ore deposits in Australia. We're ramping up to 6 million tonnes. That's in our existing operation. We're aiming for 4.5 million tonnes this year, 5 in FY27, 5.5 to 6 in FY28. We then have a scoping study that goes beyond that into FY29 and charts our pathway to 10 million tonnes a year. That project, the 10 million tonne a year FY29 onwards project, had an NPV when we published the scoping study in December at the spot price of just under $100. It's about $10 more today, of 3 billion Australian dollars. And I'll come back and talk about just how exciting that is for Phoenix. We own 100% of our infrastructure assets. We've created 400 jobs in the Midwest. As at the end of March, we had $86 million in the bank, and we're adding to that every day as we export more of our high-quality iron ore to our customers. And all of that company fits into a market cap today of $250 million. people who've heard me present here at this conference and elsewhere on Phoenix, I haven't often had the opportunity to talk about iron ore, and that's possibly because iron ore analysts in the 5 years that Phoenix has been in production have universally been forecasting lower iron ore prices. The only positive about that is that every year they've been wrong. And I wanted to talk about iron ore today because I'm convinced that they've never been more wrong today than ever. This is the long-term graph going back to 1990 for iron ore. You can see that it's had some spikes, but the long-term trend is quite clear. And if you're here looking for the latest tungsten play, or you're optimistic about antimony, or you're bullish on copper, or zinc, or nickel, or almost any non-precious metal, then you're backing, I presume, energy transition or militarisation or some form of industrial development, wind farms, solar activity. All of the use of those metals are derivatives of the steel index. It's the foundation of civilization. Iron ore is the largest traded commodity out of Australia. It drives our industrialisation, it drives the richest miners in this country and the biggest mining companies. And yet there is no junior space to invest in iron ore. There are 3 pure play iron ore miners on the ASX, Fortescue Metals, Champion Iron in North America, and Phoenix. It's a bedrock. And so whatever you're chasing, think about Warren Buffett. Look where no one else is. Be brave when people are scared, and be scared when people are brave. Iron ore is a great place to be. You'll see those spikes. Not only am I not thinking that iron ore is going down, I'm actually increasingly confident that we're going to see stronger iron ore prices in the near-term future. And there's a couple of reasons for that. The bigger thematic is that demand is rotating. Analysts have been forecasting the demise of iron ore because of the collapse of the property construction industry in China. They've been forecasting the demise of iron ore because of the advent of Simandou and many other factors. Those factors are now well known. The China construction market has seen a huge downturn. Simandou is in production. Its tonnes are known. The idea of the Pilbara killer has been proven wrong. It has displaced largely Chinese low-grade iron ore production. It's also having, with its African challenges, a slower ramp-up than people extended. I've been asking people the question recently, do you know the 5th largest country that exports steel in the world? Simandou shocked the market for 10 years with an overhang of 100 million tonnes of iron ore. The country that is or was the 5th largest steel exporter in the world also mines 100 million tonnes of iron ore. They export 60 million tonnes of that iron ore, along with 10 million tonnes of finished steel goods. That country is Iran. Their industrial infrastructure, to quote the President of the United States, today is more likely to be akin to the Middle Ages. No one is talking about those tonnes coming out of the market. If you added 60 million tonnes of iron ore to the seaborne market, analysts would say iron ore is going to 80. And yet what we're seeing is iron ore going from 100 to 102 to 104 to today $108. Get used to that. The other idea that is worth investigation is supply is tightening. Rio Tinto is about to apparently announce a large-scale scale back job cuts and cost reductions. That's in response to clearly a number of cost factors. The most obvious one is diesel fuel. It has a big impact on our business. It has a big impact on all the big iron ore producers. It has a massive impact on the South American producers, including Vale, talking for about 30% of the iron ore market through bunker fuels and shipping. Unlike costs that miners control, where you can reduce your workforce, change your cut-off grades, manage to reduce your costs to manage increased costs for things, third-party costs like fuel. Shipping is just a passive cost. The only thing you can do is pass it on to your customer. And that's exactly what we're starting to see with iron ore. Demand rotating, supply tightening, and an increasing reality that higher iron ore prices are here to stay. That's great news for Phoenix. This is our part of the world. It's a great place to operate. We've got the big miners up in the Pilbara. We're in an area where there's a very successful gold exploration and gold development. But we own and control the key bulk commodity export facilities out of Geraldton. Work backwards from there. On-wharf port storage facilities of just under 500,000 tonnes a year. It gives us a capacity north of 15 million tonnes a year. We also own our own haulage business and logistics business. The vast majority of our drivers live and work in Geraldton, and that's a state-of-the-art fleet that I've spoken about at this conference previously, and I'd love to champion why that is a state-of-the-art business. And please drop past the booth and we can talk through it. We own 2 rail sidings. We have access to the Mid West Rail network when we need it. We're currently operating 3 iron ore mines, and we're about to transition to a World Range only project. So people who followed Phoenix would be aware we're very proud of making ambitious promises and then delivering them. We last raised capital in 2020. It was a $15 million capital raise aligned with the $15 million of capital we needed in the feasibility study to build the Iron Ridge mine. In 2022, running at 1.3 million tonnes per annum, we set a target of getting to 4 in 2025, which we've now achieved. We've shipped 100 boats out of Geraldton, and we're now setting our sails for 10 million tonnes a year on that track record. What does that look like? So this is the Iron Ridge mine. This is a fantastic 3-to-1 strip ratio. The highest grade iron ore shipped from mainland Australia comes from this deposit. 64% lump and a 62% fines product. We're now in the World Range W11. This is our new mine. We commissioned this last year. And this is our future, part of a 30-year exclusive licence to mine 300 million tonnes. Very simple operations in our mines, simple digging and then crushing and screening operations. We're expanding those. We're moving into owner-operator of our crushing and screening plant. This is the small plant we have at Iron Ridge. We're soon to have a much larger 6 million tonne a year plant installed in the World Range. This is the start of the journey of that iron ore to our customers in these 60-metre long quad road trains. Total weight of that prime mover, trailers and the iron ore is 200 tonnes. They've got a payload of 150 tonnes. We've already built 2 private haul roads to connect our mine, and that takes us all the way to our new depot in Geraldton. We've got a 20-hectare facility in the industrial area, and this is where we maintain, rebuild and operate that trucking fleet. We have the only side-tipping truck unloader at Geraldton. There are the sheds we control. This is where we store our iron ore and then load it into Panamax bulk carriers to deliver it to our customers, predominantly in China, but also on shipping routes closer to us, Indonesia, Malaysia, and increasingly looking for new companies as we expand our production base. Now, I've got 3 minutes to go through the next 20 slides. This is the 3-year plan we published on the 12th of December. Midpoint of guidance this year is 4.5 million tonnes. Last year we did 2.5 million tonnes a year before we did 1.5, so a great ramp up. That looks very stable over FY27 and FY28. What's actually happening in that period of time is the 3 mines you saw on our earlier map, we're transitioning to 1 mining operation. So over the next couple of years, instead of running 3 diggers and 3 crushing and screening plants and 3 different logistics routes, we'll be transitioning to the future, which will ultimately see us doing 10 million tonnes a year. We're not constrained by mine life. Although the market hasn't yet cottoned on to the fact that 2 years ago when I spoke here, we had a 3 or 4 year mine life. Today we have a pathway to 10 million tonnes and an almost infinite potential to expand beyond that. Mining, logistics, port, very simple approach to both. We've got some great contractors working for us in the mining business. We're exploring about how, as we expand, we take control of more of that operations ourselves. We're owning and operating our own haulage and logistics fleet. It's a state-of-the-art, very high technology operation. And uniquely, we own our own port facilities in Geraldton. We access the berth controlled by the government-owned Mid West Port Authority, but the ability for us to store and export more than 10 million tonnes is absolutely linked to the long-term assets that we own. So in summary, 290 million tonnes, we're ranking up to 10 million tonnes. That scoping study we published in late December outlined a pathway to $55 a tonne C1 cash cost. What that translates to at an $85 a tonne iron ore price is annual EBITDA of $235 million. At $105 a tonne iron ore price, you can imagine that that more than doubles to more than $500 million a year in EBITDA. That's double our current market cap. It's 3 years away. We don't have any plans to raise equity. We're going to fund that ourselves. We're very strong in the community. We've got some great partners. We've developed that over that journey over 5 years' time. Key among them is the Wadjuri people, the government infrastructure providers in the Midwest Port Authority, and a whole range of community groups along the 500-kilometre pathway to market. There are a lot of compelling reasons to invest in Phoenix. The first one is understand what's happening with iron ore, back a team that's actually delivered, back the macro. Love to talk to anyone who's interested about Phoenix. We've got a booth here, and Miriam, myself, and Peter Jones would love to hear from you. Thanks very much, Chrissy. Right on time, for once.
I would expect no less. All right, next up, Axel RIU. Now, these guys are going to outline their progress towards trial wellfield mining in Brazil's Lithium Valley, and it's absolutely fascinating tech. I had a look through it today, and if you guys can pull this off, it will be an absolute game changer in situ on so many levels. So this is Paul Dixon. He is their MD. Let's welcome him to the stage.
Thank you very much, Chrissy. I'd like to draw your attention to the lovely undulating hills on the slide there. This is the Lithium Valley, and this is where our Caladeo project is located. And I think it's probably important to note, what don't you see on that slide? You don't see towns or cities crowded around. You don't see coffee plantations, wealthy coffee plantation owners, which could be problematic, or special native trees. So this is in fact a perfect place to build a mine. There's also infrastructure. 25 k's away is the Sigma lithium mine. So there's power, water, roads, and there is a town in the district. So we have access to all of that. A disclaimer. Capital structure. We've got 176 million shares on issue. We raised $13.3 million 20 months ago, and we still have 6.6 million in the bank. So the question is, what have we achieved with that $6 million that we've spent? And I'll show you the 2 JORC resources that we've generated in that time, the metallurgical test work that we've done successfully, which has been excellent, and we've still retained, as I say, $6.6 million in the bank. We plan to use that money for our field trial, which I'll discuss a little bit later on, and we're funded for that field trial. As for the board, well, myself, I'm non-executive chairman, and my background is also a non-executive chairman and founder of Alligator Energy, which should be the next uranium mine in Australia, all things being equal. It's progressing very well. And my background was also in stockbroking corporate advisory. Pat Volpe, his background is over 38 years in corporate advisory and resources industry. He was the founder of Axel RIU, and he's also been the founder of ACAP, which was a very successful global uranium discovery that he made. So very much embedded in the resources industry. Aidan Narnia has been involved in investment banking in London, New York, and can add that financing capability for the company. He's also been on the board of Scarlin Graphite, which was a European graphite producer, and he's also currently a director of International Graphite, another ASX-listed company. Ian Reid recently joined. Ian's had more than 40 years in the oil and gas industry, and you might wonder what an oil and gas person is doing in a rare earths company, and there's a very good reason. Firstly, he's had more than 10 years experience working in Brazil for Karoon Energy, and he was crucial in getting Karoon to where it is today through his activities. As well as that, oil and gas is a lot about permeability, porosity, flow rates of hydrocarbons. But in this instance, the way that we plan to mine is going to be very similar in looking at permeability, connectivity, flow rates, and I'll show you how we want to extract our rare earths, and you'll see where it does fit in quite nicely. This is a schematic. This is the Caladeo project, our two main leases. That area is 420 square kilometres. It's huge. And we've only drilled 35% of it to date, and that's in 20 months. So we've drilled 35% and generated 2 JORC resources. The first one is 572 million tonnes of TREO at 1,500 ppm, and something quite unique is a gallium resource, 439 million tonnes at 38 ppm of gallium, and it's something that I've looked all around the globe and can't find too many other gallium resources that are independent as well. You can see the resource growth we've had in the last 6 months, so the company's very active drilling and achieving great success. This is the style of mining that we're going to be using, and it's called in situ recovery, or ISR. And I want to highlight the picture on the slide, which is that of a Chinese operation. And just to highlight that 99% of global ionic clay rare earth production is using this style, this technique. And we plan to use this. It's a global standard. So we plan to do what the Chinese have been doing since the 1990s and using it successfully. And it's very much low capex, low opex. And you can see from that picture, the environmental impact is very minimal. So it's very friendly in that regard. And that helps later on with permitting and all the other areas. But I want to point out that this is the global standard, and this is what we'll be using. This is a schematic of how it operates, and you can see it's a hill-type structure. And remember the first slide I put up of our undulating hills? They're perfectly placed to actually have ISR mining. You have a magnesium sulfate lixiviant, which is in the blue tank at the top of that schematic, and then it's pumped through injection holes, are the blue holes that go down into that hilltop, and then the liquid drains down through and picks up the rare earths, and you have extraction wells down the bottom and into those orangey coloured tanks at the bottom. And that's where you have what's called a pregnant liquor solution, and that's where your rare earths are found in there. And then it goes through subsequent processing at a later point. What are the advantages of this style of mining? Well, the advantages are it's very low capex, and if you compare it to open pit or heap leach mining, it's very low capital intensity. The environmental footprint, well, you can see the difference between an open pit, a big hole in the ground, compared to the style of mining that I showed you the picture of before. Time to production, it's much quicker. Open pit mining, 5 to 10 years plus. Here we're looking at 2 to 3 years. The scalability, it's modular, and that's the beauty of this. You can have a centralised processing plant, and you can have well fields situated around it and bring them on a modular basis when you've got the demand for it and when the customers are there. And I'll talk about the amount of capex to actually construct it. It's not that expensive. Is it proven at scale? Absolutely. In Southeast Asia, in China, Malaysia, they've been using this technique since the 1990s successfully. Licensing, well, I certainly know about licensing in Australia, and it's very different. For us to actually commence this trial, we don't need any other form of licensing. When we get into further production, yes, we do, but I'll show you the process that we plan to take through that. But at this stage, we're preparing at the moment, generating the people, the data to actually start a trial. These are the two main deposits that I'd like to focus on today. The Woolwich deposit on the left, this is the one that we've targeted to start our trial mining on. Only a small section of it, it's only going to be 100 metres by 150 metres where we start our trial. But you can see that we've already drilled it out to an inferred basis, and we're currently in there drilling at the moment, and we're going to lift that from inferred to indicated status. And we're also going to be doing a lot of drilling in a little area where we plan to do our trial mining. The RIU deposit, which is further to the north, there are about 11 potential well fields that we've identified there. And that's surely enough for a little junior to deal with at this stage. But it's district scale. This slide, I think, is the money slide. I'd like to draw your attention to the two coloured columns there. We've got, first is ours, which is the Axel Re Woolwich deposit, 128 million tonnes. And you can see our soluble grades that we've got, 464 ppm of soluble TREO. And then, importantly, is the percentage of magnetics that we're getting in that, 42%. And if you have a look at the coloured slide or coloured area below it, the Gerrick mine, this is a mine in Malaysia, 120 million tonnes, 486 ppm TREO, so very similar to ours, but our magnetic percentages are better, but they do have better recoveries of dysprosium and terbium at the end. However, what I want to point out here is if you can look down the CapEx column, it cost $20 million US for the Gerrick mine to be constructed. That was the CapEx. They're currently producing 4,000 tonnes per annum, and they're making $10 million net profit after tax. That is our analogue. That's what we want to achieve, and that's our point of difference. We want to emulate that particular project. You can see that we've got very similar tonnage and grade profile, very similar ionic clays, metallurgy, and also a very good comparison of magnetics. And recently, late last year, there was a Singapore company. They put $82 million into that Gerrick mine, and they achieved 40% equity. So it valued it at $205 million. And I'll show you where we sit in relation to that. But this is, in my opinion, one of the money slides. Here's a blow-up of the first well field that we've chosen in our Woolwich deposit. It's only a small area, 150 metres by 100 metres. We're doing much more closer space drilling, auger drilling, and also we're going to put in 5 diamond drill holes. Now, it's important to note that in this area, we're also going to be drilling 20 other diamond drill holes in the whole of the Woolwich district that we've got there, and further auger holes there as well to lift it to indicated resources I mentioned. This is an overview of the RIU deposit. We've identified 11 well fields here, and you can see again it's the undulating hills which are perfect for actually ISR mining. I think it's important you note on the right-hand side the grade thickness values that we've got, up to 13,700 gram metres of TREO. This is another high-grade area that we've got to develop at a later point in time. So a lot of upside. As for the implementation roadmap, this just shows you what we're doing at the moment is we're drilling in the Woolwich deposit in the area we want to do the trial. We're going to be doing modelling of the ore body. We will be adding to our team a hydrogeologist, a chemical engineer. These are the people who will design the prospect for us. Then we go into injection well drilling, and you test the chemistry and the permeability and flow rates. It does take a while to ramp up an ISR project. You can't just turn on the tap and get to maximum production from day one. We'll also be starting our mine permitting, and that process will start now, and we anticipate taking about 2 years. So environmental studies and all the like. So what are the advantages of doing trial mining? Well, we've proven our recoveries. Now we confirm the chemistry and test the economics. So as I mentioned, it saves time, saves costs, you get real data, and that real data goes into the feasibility studies, and then you produce a commercial spec MREC, which would be given to customers to actually test to see if your specs are suitable. Gallium, very quickly, is $2,000 per kilogram, and as we mentioned, we have one of the few gallium resources globally that we can see. It's normally a byproduct of bauxite processing, and China banned exports in 2024. So it's certainly a commodity that's in high demand, used in defence, solar energy, next-gen semiconductors and the like. It's a small market by tonnage, but very, very valuable. Our recoveries, our metallurgy has improved considerably. The blue column on the right-hand side was when we first started, 25%, and we're now up to 50% recoveries already. This is the value proposition, where we sit. I'll leave it to you investors to work out where we sit as a value proposition. The market determines that. But when we de-risk our project through our trial, we feel that we've got tremendous leverage. And finally, low-cost, fast-track pathway to development, and I'll leave it there.
That was a beautiful ending. Well done. A big round of applause. You did an awesome job there. Go and see him, because that gallium one is really, really interesting. It could circumvent what the whole China thing. Now, I would not have thought of putting this next geological centric name onto my geology bingo card. However, I think it deserves a special mention. Stumpy Do. Now, the question is not what is a Stumpy Do, but what can having a Stumpy Do in your portfolio do for you and your investment there? And that's funny, because Stumpy Do belongs to this gentleman here, and he belongs to Win Metals, which has a really interesting growing gold profile. And if you've been following their story, you remember that they've also got nickel and lithium, really solid nickel and lithium. So we're going to talk about gold. You hear about Stumpy Do. Let's make him very welcome. We're talking Win Metals. This is Steve Norregard.
Thank you very much, ladies and gentlemen. Thank you very much to RIU for putting on a great conference. This is my fourth conference, and indeed I come to you on the first conference with one project. On the fourth, I've got 4 projects on the go. But we said we're on the cusp of production back in 2022. We're definitely on the cusp, which I'll talk to you about in some detail today. The disclaimer, the presentations on the ASX platform if you care to look at it in more detail. The company itself, we're wholly and solely focused in Western Australia. We started life singly focused on a nickel project, and we spent a significant amount of money on that project, the Mount Edwards Nickel Project. It is in an advanced state, ready to go to the next stage, and it's a strategically very, very significant one. As a result of that, it sits prominently within our portfolio. During the course of evaluating that nickel project, we found some lithium, and that also plays an important role in our portfolio of assets. But in more recent times, we've pivoted, probably born out of necessity, into gold. Now we have quite a substantial gold project up in the Kimberley region of Western Australia called the Butchers Creek Project. But the main topic of my presentation today is the Radio Gold Mine, which is an asset we only acquired very late last year, and it's one that we're fast tracking into production. If I was to summarise all the key points about the company as we sit here right at the moment, obviously we're in a very, very good jurisdiction. We don't, as a company, we don't travel the full breadth of the world in order to be able to get our projects together. We sit here with a project that's on the cusp of production. We've advanced the Radio Gold Mine very, very quickly towards a production decision. We've now completed 2 drill programs. We've also been fleet of foot in terms of getting some bolt-on additions to that project, which will be value accretive. We've got a growth profile. Not only the Radio Mine, which we can see getting into production in the short term, but also our Butchers Creek project, which we think has will be a much larger project and is something that the free cash flow from Radio can be invested in that project. And importantly, and I think it's very relevant now with a resurgence in nickel price, our nickel asset is strategically very, very important, and in a similar vein, our lithium project as well, which I'll touch on a little bit later on. We are really valued as an exploration company with EV of just on $17 million. When we make that transition, we expect there'll be a much higher valuation. The company is focused on becoming a producer. We have a diverse array of skills at board level, from process engineering, geology, mining engineering to corporate law. Very much a skill set required to be able to set ourselves up going forward. Our major shareholders, Meteoric Resources, which should be noted. The Radio Gold Mine. We're all about acquiring projects cheaply, and we certainly did that with Radio. An asset that has a sensational production history, producing over 70,000 ounces at a very, very impressive head grade of 38 grams a tonne. We acquired this asset for a cash consideration of $400,000, $500,000 worth of stock and a deferred production royalty. When you see the assets that we've acquired with this project, it was an absolute steal. Not only do we get the high-grade gold that we've been able to define, we've acquired mobile plant, we've acquired a fully developed underground mine, compressors, gensets. We've even acquired a pub to accommodate our people. A really, really good deal. In a great location. The Southern Cross Greenstone Belt is a prolific gold producer over an extended period of time. There's a lot of stranded gold assets in this part of the world, and upon us getting into production, we can see the opportunity of more bolt-on acquisitions is very, very real for us. When we acquired the asset back in September of last year, we got on the ground immediately, completed a drill program. There was a modest historical inferred resource. We achieved 2 key outcomes. Firstly, we verified that resource. We saw it grow as a result of that drill program. So now, rather than relying on a single underground mine, we will see the underground mine redeveloped or continue to be developed, but we'll also see a open pit development concurrent with that. The drilling was highly successful, and we've completed a second program since then. We made an ASX announcement on Monday regarding that. Again, numerous high-grade intercepts reflective of the high-grade nature of this mineralisation. But probably the most impressive thing is it's very rare you get the opportunity of going underground and see a development phase such as what you see on this slide here. This is actually outside the resource. The mineralisation is narrow in nature, but it's also extraordinarily high grade. Across this face here, which is approximately 3 metres wide, channel sampling has revealed head grades of up to 334 grams per tonne. Now, 1 tonne of this mineralisation today is probably worth has about $70,000 of contained gold. Extraordinarily high grade. The interesting thing, in the middle of the face, there's virtually no gold of note from the channel sampling. Now, what this illustrates is the process of us quantifying the resource, which is based exclusively on drilling. If we were to drill a hole through the centre of this face and hit 0 grade, we'd think that the mineralisation had indeed terminated, whereas less than 1.5 metres on either side of that face, we've got these extraordinarily high grades. So the strategy that the company will employ is much of drilling for structure and developing for grade, which we see the opportunity here. The mine now is fully developed or fully designed, and we're poised, ready for action. It's been a busy time for the company since we acquired the asset. As I said, we've just completed our second drill program, which now will see more of the resource get converted into indicated. We've completed a lot of mine design work for both the open pit and the underground. What does remain at large and is probably less than a month away is concluding either an appropriate toll milling agreement for our mining, or alternatively looking at building a modest standalone gold processing plant. We've started the process of permitting, and by the end of this quarter we'll come out and tell people the future of this asset and how we're going to execute. We've bought some additional assets which will only complement the outcome. In Westonia, which is only 80 kilometres away, we've recently acquired what's known as the Princess Royal Gold Mine. Again, a $500,000 transaction, but we've acquired an asset with a historical resource base of over 30,000 tonnes at 10 grams a tonne. Hugely value accretive. As you can see, there's some extraordinarily high grades have been noted in this mine, and an abundance of upside is still present. Indeed, we acquired this asset with over 20,000 tonnes of tailings going 1 gram a tonne, so the value that we can reap from the tailings alone has more than adequately paid off the consideration for the purchase of the asset. And Stumpy Doodle was named by the wife of the prospector that discovered this deposit. I don't know what she was inferring, but anyway. Again, very, very close proximity to the Radio Mine, only less than 10 kilometres away, an abundance of upside, historic workings over a 600 metre strike length, a little bit of a production history, but we do see the upside here, especially in the high gold price environment that we see right at the moment. A little bit about Butchers Creek, the second and the growth project for the company. Located up in the Kimberley region of Western Australia, about 40 kilometres due east of Halls Creek, where gold was the first gold rush that we saw in Western Australia happened. It is a forgotten area. There is an abundance of geological prospectivity in this part of the world, and there's a lot more gold to be found, I can assure you of that. This particular asset was mined back in the mid-1990s by a company called Precious Metals Australia. They exploited about 50-odd thousand ounces of gold at just over 2 grams a tonne, leaving the mineralisation open at depth. Since that point in time, Meteoric Resources, the company that we've acquired the project, have expanded the resource, and we've expanded it furthermore. Another company which may be familiar to you, Northern Star, they had a project not about 4 or 5 kilometres away from the main Butchers Creek open pit, which called Golden Crown, which also is a satellite to our project. As a result, now we've got about 360,000 ounces in this project. And we have put a value on the project. Contrary to the requirement these days of having to have 1 million ounces to start a new project, we've proven that we can have quite a robust project looking at a lot smaller endowment, and indeed producing some 200,000 ounces of gold using a gold price probably $1,000 an ounce less than what we see today. We're able to demonstrate that we can build a processing plant, a camp, a standalone operation, pay that all off and have a handsome return to shareholders, where in the scoping study, using $5,400 an ounce, we're able to demonstrate a free cash flow of just under $300 million. In today's terms, at a price of $1,000 more, that number's well north of 500. An abundance of opportunity to see us grow this resource too. And in elaborating the nickel and the lithium potential of the company was decimated back in late 2023 with the demise in the gold price. We had a market cap of, I think, of $150 million at one point in time. With the retraction of the nickel price back down to about 15,000, the company's market cap shrunk accordingly. Well, I can tell you that nickel is coming back. You can see from this graph here the price of nickel over the course of the last 12 months. It's sitting now somewhere between 19.2 and 19.5. It is an inherently volatile commodity. There is a series of industrial commentators now that are saying that the nickel market is in deficit, which is excellent. It is excellent because the world supply of nickel is concentrated in Indonesia, and they will not be telling you when their output is decreasing because it is not self-serving. When it flips further into deficit, the price goes up. They will be the primary beneficiary of that. And when, with 180,000 tonnes of contained nickel in this project in an advanced state, a strategically very, very important asset will be a beneficiary of that. Lithium also has appreciated in value. It's gone up 2.5 times over the course of the last 12 months. Our project is under constant review, and indeed we will come to the market shortly and reveal one of the byproducts in our lithium ore body which we think has inherent value, and enlighten you all as to what that represents for the company. So, the company's bringing a whole host of assets we're pushing along the value train. We've got a team of people that are very, very technically competent and are proven mine developers. With that, we have that necessary execution expertise. And for you out there in the audience today, at a very, very modest market cap, the opportunity for value appreciation for shareholders of WIN is evident or very apparent in my view. So with that, thank you very much. With 9 seconds to go. Perfect.
Well done, Steve. I knew you'd be on the ball. You're well trained. You're a very, very good human. All right. I just wanted to let you know that I've had word from out the front, so I'm madly doing a bit of typing in there. But Jackson thinks that maybe the first beer of the day will be poured by our last presenter, thereby preventing anyone else from out there from having a drink before we get out. So we'll be in here nice and calm, and the first beer won't be poured until we get outside. Huzzah. A round of applause for that. Yes. Thank you. Thank you, Jane. Yes, I know we don't drink, but you and I will still have a water. All right. How are you going, Mr. Woodcock? Are you good? It's been 12 months between us. Now, you've picked up some interesting land in Nevada and tungsten is just going this way, and there's something happening in December which would make the Americans definitely want your potential tungsten. So some may say that you're getting ahead of yourself with the latest news flow, but I know that you're a man who does things in a measured way. Let's listen to what he has to say about this project, because it's got some serious upside from what I've seen. Please make him very, very welcome. So we are talking Viking Mines. We're going to Nevada, and this is the fabulous Julian Woodcock, MD.
Thank you very much for the introduction. So yes, our presentation, Securing America's Tungsten Future. Usual disclaimers to read through at your leisure. So I just want to give quickly the investment highlights. Firstly and foremost, USA tungsten. Tungsten is a very hot commodity at the moment, and where better to have it in the USA. They are rapidly depleting their stockpiles and looking to replace with replacing munitions. And we have a high-grade past-producing asset located in the best jurisdiction for mining globally, Nevada. And we're rapidly moving towards our maiden drilling program. The project has been performing very well since we acquired it late December. And some examples of that are achieving a gravity concentrate on metallurgical samples up to 63.6%, high-grade surface sampling in our due diligence field visits, and a geophysical program which has helped establish the potential scale of the system. We've got extensive work programs currently underway which will feed into good news flow. We've been sampling the tailings dam. This is from mining in the 1950s. We've got stockpiles on site and we've sampled that, and we look to be getting those results in the near future. And we've got the metallurgy that I've mentioned underway, which is moving from gravity test work into flotation test work. And we've got a conceptual processing study looking to bring this all together into a flow sheet, which we believe we could, in future, deliver a processing plant for the project. This is culminating in maiden drilling, which is scheduled for late in the June quarter. As Chrissy alluded to, tungsten is doing very well at the moment. We're at all-time highs, trading 10 times higher for APT, which is a derivative product from a scheelite concentrate, which is used into the manufacturing industry. That's up tenfold since early 2025. There's also supply shortages which are compounded by geopolitics and global issues, which I'll touch on in a moment. Just a quick corporate snapshot. Our board members on the right there, me in the centre, Charles Thomas and Dr. Julian Stevens, also as a non-exec. The project acquisition occurred in December, which you can see on the chart there is initiated by a very large spike in volume, and since then we've seen some good share price appreciation. We were trading about 0.6% at the time. The project performed well continually. We did see a spike at about 2.5 cents. Still softened off a little bit lately, but still trading well above the previous values, and still got lots of opportunity to grow. Market cap around $31 million, and we had 4.6 million of cash in bank, which is fully funding our current workflow. So why tungsten, why now? Look, first and foremost, there's no US domestic supply. They rely heavily on imports, which are then processed in country to produce APT, and it's essential to munitions, aerospace, cutting tools, etc. The legislative mandate, the US government have banned the supply of tungsten from China, Russia, Iran, and North Korea coming into the military supply chains, which takes effect from the end of this year. And that opposites to what China has done, which prior to that act kicking in force is actually limit global supplies from leaving China, and they control 85% of the supply chain. This has resulted in a supply chain deficit, which has had stockpiles diminished, and supplies are being consumed by global conflicts. So that's led to this very large rise in the tungsten price, which we've seen lately. We have a huge opportunity for speed to market. We have a brownfield advantage with a past producing mine, which I'll go through shortly. It's high grade, stopes up to 3%, drill hits up to 4.8%, and we see an opportunity for rapid start development opportunity for this project. So just to go over our assets, the deal that we struck actually acquires 6 projects in Nevada, and they're on the map on the image there. We've got Alpine, Ragged, Long, Linker, Victory, and Terrell. Linker is what I'll focus on, and the reason I'm focusing on this one is we have a huge technical advantage. Not only was it the most significant producer across the assets, mining at 0.5% grade, we secured a historical data set for the project. For a bit of history on it, the mining was in the 50s, ceased in about 1956, sat idle for about 20 years. An exploration program occurred in the late 70s, which is the data set which we acquired, and then as far as we can tell there's been no further exploration conducted since then. So it's been nigh on 40 years since a drill bit's been seen at this project. With that historical production, that gives us strong confidence that we can bring the asset forward with drilling as well as other studies which we have underway. Just to set the scene for what the 0.5% mine grade means, so not everyone knows what 0.5% tungsten actually is. This chart shows a series of listed companies, not just on the ASX, but globally, London, Canada, the like, and the grades of their projects. You can see there's operating mines or projects that are advanced stages of assessment and feasibility with grades as low as less than 0.1%. These are very low grades. But our project sits at the 0.5% grade from the historical mining, which you can see sits in line with the top tier of projects on this chart. For a comparison in terms of valuations, there's every company on this list, if to name a few, all have market caps well in excess of $100 million, with some such as EQR, which have the Mount Carbine project, as well as the Barracuda project, with a market cap of $1.4 billion. So we certainly have a lot of room to grow with our market cap currently sitting at 30 million. So Linker, this drone image I took in December when I was out at site, looks across the project. We're looking to the east, and there was 3 mines that serviced the mill when it was in operation in the 50s. These are Conquest in the north, on the left side of the image, through Hillside to Linker, Pit and Shaft, the namesake for the project. There's a stockpile there, which we sampled with a metallurgical sample, yielded 0.8%. And as we move south, it goes under a thin volcanic cover, which is younger than the mineralized rocks, re-emerging 800 meters away, of which there's a surface sample at 0.6%. I'll show you in some of the subsequent maps why this is a high priority target, but we believe the mineralization will continue as we go under that cover. We've consolidated all the claims in this area. There's also good infrastructure. There's a good road access, as you can see in the image. That's only about 4 or 5 kilometers to the nearest highway, as well as a 230 kVA power line about 4 kilometers to the west of the project. So we have all the ingredients for bringing this project forward rapidly as we get success through drilling. The next 2 slides, I'll just take you from north to south. So this is the Conquest ore body, which was mined for feeding to the mill in the 1950s. And this is the collection of that data set that we acquired from the exploration in the late 70s. There's some very high grades seen in the drilling here on the right-hand map. Some examples there, 10.7 meters at 0.6%, 22.9 meters at 0.6%, and a very respectable 12.2 meters at 1.3%. If you look at the cross-section on the left, you can see the relative position of those, and all that drilling was located really to the east side of the historical workings. What you're looking at on the map, the orange is the intrusive unit that brings in the tungsten. The brown is a limestone unit which has calcium. You mix tungsten, calcium with a bit of oxygen, you get scheelite, CaWO4. So that contact position is the critical area to be exploring. As we move down the contact to the bottom of the image, you can see it says a priority untested contact area. There's 2 drill holes that were completed there in the 70s which didn't drill deep enough and didn't test that contact. And then there's a whole area with no drilling, but there are surface sample results at 0.3%. If you move 800 meters south, we get to Linker, which is where the bulk of mining took place. Here's a vertical shaft shown in the image, 40 to 50 meters deep, 1 level of workings, and a shallow open pit at surface. In this date, all the data we see on this screen is data that's collected post-mining, so it confirms that mineralization still remains in the ground at those points. At surface, a very respectable 8.5 meters at 1%. That is very, very high grades for a tungsten project. Drill hole just underneath that, 9.8 meters at 0.5%. Now, amazingly, 2 things to take away from this image is 1, there's a very large area underneath the old workings that wasn't drilled, and that will form a focus of our upcoming drill program. And secondly is the deeper holes, which don't have very much in them, they were limited by the depth of drilling of the equipment used at the time. They really were only able to drill to a maximum depth of 125 meters until they didn't have enough air to be able to drill within the wetter ground at depth. This is not a problem bringing in modern equipment, so our initial drill program will focus heavily within this area. We have a number of other opportunities to test for at Linker. Not only the high-grade outcropping mineralization, which I've just shown you on the image, but we also have the surface stockpiles that I've touched on. That presents an opportunity for us to process that material to generate samples that we can use to speak to offtake partners, give them examples of the material and the concentrates that we can produce, and then they can assess those and we can seek to commence with early discussions regarding offtake. We also have the tailings dam. So we know that the mine was operating at a head grade of about 0.5%. We do not know their recoveries at the time, but if we take an assumption that their recoveries were about 70%, that should leave about 0.2% in the tails. We've completed a sampling program across that tailings dam a number of weeks ago. We're waiting on the assays. Once we receive those assays, we'll have an idea of what the grade of the tailings is. We'll be able to calculate the volumes. And once we've done that, we will move on the next step, which will be to undertake metallurgical test work to see if we can recover any of those tailings. It's important to note, if we have a tails grade of 0.2, that's higher than some of the grade of those head grades of those operating mines that I talked about on one of my previous charts. It's certainly higher than some of the head grades, some of the mines of companies that have billion-dollar plus market caps. So that in itself is an opportunity of potential feed into a potential future production plant. If we step back and look at the bigger picture, I really like this slide. On the right-hand side, the orange to blues and browns, that's the outcropping mineralization, and that's about 800 meters long. I showed you that in the image with the overlooking the site. To the left-hand side, or the bottom left of that right-hand map, you've got the yellow dashed area. That's that bit that goes undercover, and at the end of there you have the 0.6% sample where the older rocks come back to surface. So that's our high confidence exploration target. Our drilling program, which will be commencing late in the June quarter, is going to have 4 traverses undertaken across that yellow dashed line area with the objective of defining the contact between the limestone and the intrusive, which in turn will then allow us to vector in on mineralization. If we zoom out on the scale basis, however, it shows you the map on the left-hand side. Early on in this project, we undertook geophysical programs. We did close-space magnetics with the objective of defining the intrusion, which is what is bringing the tungsten into the area. And we believe from the interpretation of that, we've defined an intrusion with a perimeter of about 7 kilometers. So the 800 meters that's got mineralization known at surface represents only 11% of that 7-kilometer perimeter. The remaining 89% is untested and really generates the blue sky potential. So again, this early drill program that we're doing will have a portion of the drilling dedicated to putting initial scout holes through the shallow cover that overlays the intrusion to try and identify what the rocks are underneath, whether it be intrusive or limestone. Then a subsequent drill program, we can go and drill between 2 holes which have different rock types in and look to hit the contact. So it gives us really big upside potential. None of this would be any good if we didn't have a processing flow sheet to match any resource that we could define. So in order to do that, we started very early with the metallurgical test work. So we collected 4 samples in the due diligence work. One of those 4 samples, there's an image on the right-hand side. Great looking photo, it's under a black light. Scheelite has this unique property of fluorescing under UV light. So that's the rock samples that we started with. That's crushed, ground, and then put through a gravity processing test work initially. And the bottom image shows the scheelite concentrating there. The white bands is the scheelite on the Wolfley table, and then the darker mineral underneath is the waste, which is primarily garnet. This proved very effective. We yielded a 63.6% premium scheelite concentrate, which is well within marketable grades. And then taking a lower grade portion of concentrate as well, we attained a 46% recovery into a 56.4% WO3 grade in concentrate. The next step is to recover further material through flotation. This is a common processing flow sheet that is employed for tungsten. So we've completed the initial rougher flotation. We saw good recoveries in there. We're currently going through the cleaning test work in order to enhance the grade and maintaining a target overall grade greater than 50%. This flow sheet really supports an evaluation of a low capex modular processing solution. So in order to assess this, we have the processing concept study that we initiated with Mineral Technologies. They develop and build both the engineering solution as well as make the equipment, and they have what called the Flex Series technology. This is all built off-site, shipped to site, bolted together, put the pipework in, and away you go. Their studies commence with developing the flow sheet, which you see on the right-hand side. It's straightforward, crush, grind, gravity separation, flotation, and they're in the process of completing the CapEx estimates, OpEx inputs, as well as delivering a design model and a construction timeline. This is a small processing facility that will process 43 tonnes per hour. You do the maths on that, it's about 300,000 tonnes a year, but that gives us a capacity to produce 1,000 tonnes of scheelite concentrate. So just to wrap this up, first and foremost, we've got 4.7 million cash in the bank. So we're fully funded for the work program presented below. We've been very successful. We've had high-grade samples achieved from our due diligence field sampling. Historical data has expanded the size of the project. Geophysics has expanded it even further still. Metallurgical test work is delivering key results, which has allowed us to move on to a processing evaluation. And that, in turn, is then moving into permitting. We've got a faster market strategy, which is really envisaging delivering these different steps in the pipeline, running parallel in order to be able to get this project moving as rapidly as possible. So before Chrissy makes it over here, very quickly, the news flow on the bottom. We've got test work results coming out in the next month or so. We've got geological field activity. We just submitted our permits to commence our drilling. Once we get those permits, which we expect in the next month, we'll be commencing a drilling program late June. We'll be getting assay results through August, and in parallel with all of this, we're conducting baseline studies with the objective of acquiring all the data we need in order to be able to move forward with a mining permit application in the future. Thank you very much.
Well done, Mr. Woodcock. Good story. Can I join Paul Adams? Can you swap with Paul Adams here on your way down? Sure. Paul, come on up here and join us. So Paul is from Carly Metals. It's interesting, isn't it, when you go to airports around the world, and sometimes you struck up conversations with people, and there was an interesting discussion being had about Kali metals. So I've been looking forward to this presentation, and I'm glad that there are so many of you in the room to hear it. Would you please make Paul very, very welcome?
Thank you, Chrissy. Given your advice that the beers won't be flowing until we finish, I think I'll leave it there. No, but today I want to talk to you about a rather unusual gold discovery in the Pilbara that we've made over the last 9 months or so. And that's the usual disclaimer. Just to introduce the corporate overview, I think we've got a share price today of about 17.5, so that puts our market cap around about 35 million. We've got cash of 8.5, so we did a raise early on this year after our phase 1 drilling program and at this gold project in the Pilbara, and that's a very nice amount of working capital that we have. So we are fully funded for calendar year 2026. It gives us enterprise value of about 25 million. Top 3 shareholders own 40%, so Westgold, by virtue of their acquisition of Karora Resources, are our top shareholder at 16%. Kalamazoo vended some of our lithium assets into the company 2 years ago as part of the IPO with about 15%, and Mineral Resources, as you're probably aware, came in quite aggressively on market after our lithium projects south of Kalgoorlie. So top 20 own about 75%. Just a couple of mentions with respect to the board. Simon Coyle was the Chief Operating Officer for Pilbara Mines at Pilgangoora. As a mining engineer, has extensive experience in lithium, but also in operating projects. Mladen Stevanovic, our exploration manager, has found millions of ounces for Goldfields, has put together some projects in the Balkans that have done very, very well recently, taken out by Dundee Precious Metals. And so, you know, we have a good board, we have money, and we've got some great shareholders. So just to take you through our project summary, starting from east to west, we've got about nearly 2,000 square kilometres of ground in the southern Lachlan Fold Belt around the Albury-Wodonga area. That is a potential for tin and lithium, but also tungsten, actually. So it's very, very interesting the way the tungsten markets are performing at the moment. There is gold potential there as well. Moving to the Higginsville project, we have about 1,200, 1,300 square kilometres there. We attained the lithium rights to all Karora's ground at Higginsville. And of course, Karora did a deal with Westgold. Westgold are now our top shareholder by virtue of that acquisition. And recently, Westgold divested its Mount Henry project to Alicanto. Our lithium rights, through a deed of assignment, have continued with Alicanto. But it's the projects in the Pilbara that I really want to focus on today. We have this gold discovery in Marble Bar. That was also a lithium project, and this was in a joint venture with SQM Australia, along with our Dons Hill and Pear Creek project. As a result of continuing and completing our lithium exploration at Marble Bar with SQM, they handed that back to us 100%. So looking at the Marble Bar project in particular, this was a lithium project until not so long ago. And we had the Panther project. We discovered a 3-kilometre long pegmatite with spodumene and lepidolite. And we just couldn't get SQM to drill it. And to be honest, if I was in SQM shoes, I probably wouldn't have done so, although it's up to 20 metres wide on surface. But it's in this granite sort of gneissic terrain, and their view was it's probably not going to be dilational enough to end up with a 100 million tonne deposit, and that's really what SQM were looking for. So they handed back the project to us 100%, and we thought, well, you know, what else is there? Let's go looking for gold. We looked at the geochemistry that had been done for lithium, and in a very, very short order, delineated a 9-kilometre long gold in soil anomaly just by looking at the gold results from that geochem. And since that time, we've developed another 3 gold prospects, Tiger, Sherman and Churchill. And if there are the older people in the audience that like World War II tanks, that is the common nomenclature there. So there were a couple of isolated rock chips, 2 kilometres apart, one at 3 grams and one at 1.7, and they formed the focus for a lot of boots on ground exploration in this area. We also made a couple of strategic acquisitions to the north, and you can see that the blue dotted lines there where we acquired a couple of companies, Peggy Resources and Florence Resources, and together with some additional pegging, we've now got nearly 120 square kilometres in that region. We're also 10 kilometres from the Klondike Mill, which was the ex-Calidus plant, and that, of course, is now being operated by Creasy. So the mapping and rock chipping that we did in this project has identified an auriferous quartz vein at surface. It's actually within the Mount Edgar Dome, or the Mount Edgar Batholith as it's sometimes called. It is a virgin discovery. There are no drill holes in this project before we got there. There were no rock chips. There were no old workings. And in fact, when I talked to some geologists who've been working in the area for many, many decades, they hadn't bothered to go there because, quite frankly, they had no reason to go. It's in this granite terrain. But we had rock chips there of about up to 87 grams a tonne. Now, across the 3-kilometre strike length at surface, even using a 10-gram top cut, our average of 120 or so rock chips is about 2.2 grams. And of course, the danger is that the rock chips show gold mineralisation, but the drilling doesn't. And that is very, very often the case. And very, very happy to see that our first phase 1 drill program, which was essentially a reconnaissance program with drill spacing of about 200 metres, they actually replicated at surface the grade that we found in the rock chips. So 5 metres at 2.3, 4 at 3.2, and so on and so forth. And we have continuous mineralisation along the 3-kilometre strike length of this vein at surface. So what is it in? It's in quartz. There are sulfides. Potassic alteration is almost always present. And interestingly, it's in a granodiorite host within this batholith. So we actually think it's some late-stage intrusion that has had either a shear or some other mechanism whereby this quartz vein has come through. And importantly, for our news flow, our phase 2 program is currently underway, which is about 4 times the size of our phase 1 program, and we'll be doing RC and diamond drilling as part of that. This is what it looks like in cross-section. We now think that we're starting to see parallel zones in the hanging wall and footwall. And we believe there's now potential for down-dip continuity across that 3-kilometre strike length. We are reducing the spacing down to about 40 metres, and so far in the drilling for phase 2, it all looks like it's part of the same system. We also had the Doms Hill project. That was also subject to the SQM joint venture. SQM had earned a 30% equity in this project by spending roughly $3 to $4 million. We decided to buy back that equity to give it 100% to Cali, and we did that for $200,000, $50,000 in cash and $150 in shares. So at Doms Hill, there is significant gold mineralisation. 18 metres at 3.4, 14 metres at 1.2, and so on. These intersections were drilled back in the early 2000s, and they haven't been followed up for 20 years. Now, there are rock chip samples there as well, particularly at the Doms Hill project, 70 grams, 14.5. There are several prospects within the Doms Hill project that have not seen any exploration for about 25 or 30 years. So now that that's 100% within our control, we will be looking at getting into the Doms Hill project in the second half of the year. The actually Doms Hill prospect itself is nearly 2 kilometres in strike length, and it is open. Turning to the Higginsville Lithium project, we acquired this project from Karora, all the lithium rights. 2 early drill programs ended up with 9 metres at just over 1% and 10 metres at 0.9. Obviously, since then, the lithium price tanked, and we stopped doing drilling on the program until conditions in the market were conducive to starting a drill campaign up again. And we've just been ticking this slowly along with soil sampling, generating targets that we will drill either in late 2006 or probably in 2007. We have a rather large package in the southern Lachlan Fold Belt. This was pegged for lithium and tin. It now appears that tungsten is also quite prevalent in the area. We had grades of up to 1.5% at our the pegmatite up there, and we have tin mineralisation up to 16% tin in hand specimens at Mullingadra, and we've been using soils and LiDAR there to vector the exploration. So that is perhaps our Tier 3 project at that stage, but of course with tungsten being very much in the news, that is something that we will be looking at later on this year. So planned activity for the rest of the year. Obviously, we have the current drilling of Phase 2 at Marble Bar. We have not had results back from any of that drilling yet. We hope to get the first results within about 2 weeks, and I think the rest will probably come through June. We aim to build out the mineralisation at surface. Obviously, we'll be looking to exploit that if we can. So perhaps putting together a mining lease over that area. And if we mined it, of course, because much of it is at surface, we would have a 0 strip ratio. Doms Hill reconnaissance follow-up in Q3, and we'd be looking to perhaps follow up those drill intersections of 20 years ago later this year or early next. We'll continue to maintain the integrity of our Higginsville lithium project. I think our share price has responded well to the fact that we still have one of the best lithium packages of a junior within Western Australia, and we'll be working through our tin and tungsten projects over the next few months. So in terms of an investment thesis, we have tailwinds from both gold and lithium at the moment. We are fully funded for 2026. It's a virgin gold discovery at Marble Bar, 3 kilometres of strike length of mineralised gold at surface. We're now following the down dip extents from that Phase 1 drilling. We're 10 kilometres from an operating plant, and we have historic intersections at Doms Hill that remain untested after 20 years. We still have our extensive lithium package. We will be continuing to maintain the integrity of that package, looking to drill that in the near future. And of course, we have a rising market in lithium now by virtue of EVs accelerating. And I think with 1 minute to go, I think we're done.
As long as you think you're done. That was good, thank you. I've been waiting for all day today. I'm glad you went on day 3. I would have had to wait longer, but I would have waited. That's cool. Great photo that you've got there. Isn't that a gorgeous photo, that big one with the moon in the background? Right, Justin Virgin. Hello. You're pouring the first beer at the bar when you finish here. Do you know that? You need to race off the stage and go out there.
I should get it all over in about an hour and a half, so...
What was that?
I'll get it all over in about an hour and a half. We should be fine.
Yeah, right. Just keep them here, keep them here. So, right, you are advancing high-grade gold, silver at Smokebush, Western Australia. You've been very busy recently because you've been getting that $1.5 million raised. What's he going to use it for? Let's find out. Let's make him very welcome. Our final presenter, day one.
Thank you for hanging around, much appreciated. I wonder how much because the beer's not flowing, but we've got a pretty exciting and very busy company. Trainer, if you know it all, we've got a booth over here, so please come and speak to us. Ben, our geologist, is also here. I'm not sure if I want to get through all of our projects. We're a pipeline company. We've always worked on the theory that as a junior explorer, you do kill projects off. We've actually found a real project. We've made a discovery. We're advancing that. That's what we've become, which is a gold and silver project in West Australia. And our other projects we'll have to deal with in due course. We do like them, and there's a lot of results pending on them at the moment. So, disclaimer, why Terrain Minerals? So you get access to our Smokebush Gold and Silver project, as well as our pipeline of other projects which we are advancing. They offer big scale opportunities for our investors. Investors have access to a very disciplined approach. We have to be because we're always low on cash, which is always the way for an explorer. And we're actually creating a lot of value by being very prudent and taking a very careful approach with our exploration. All our projects are in Tier 1 jurisdictions, West Australia and Queensland. Our Smokebush project, mainly our Lightning target, is the one that's most advanced. IP has turned this project area around, has made a major difference to our view of this. It's been a long process. We're getting exceptional high-grade results. If you look at our results on the 15th of last month, they're pretty impressive, and we just keep on drilling and getting those sort of results. With a mining lease grant in Lightning, we're targeting our starter maiden MRE in July. Might come a little bit earlier. We're doing some MET studies at the moment. With an association with sulphides not bound to, they're very different zones, so I don't think we have any issues there. A wildflower area which sits around from where Lightning is. There's another 3 targets we've tested recently with 2,300 metres and 13 holes. Might have another discovery there or 2, would be very exciting. We've also got our Lawrence Lane gallium project. So gallium's a very specialty metal. We found it by mistake. I seem to be good at making discoveries for things we're not looking for, and we've done that a couple of times in our portfolio in the rare earth space. So the WA government's basically paying for our MET studies at the moment with Curtin University, and we have a maiden JORC exploration target that's been signed off over the 27 square kilometre area. Our next project is our Billawheeler project in Queensland, 2,500 square k's. Secondary copper hanging out of the ground. This is an exciting project. It's taken 3 years to get granted. We'll get to it in due course. Our Kalinga project in the Pilbara. We've just done a big soil program. We've sent 4 Ks back for gold. It's just up from Hemi. Hemi was found with a machine learning study. We've done a machine learning study too, so there could be some interesting news coming there. And our Lort River project, we've got comparable grades to the rare earth players in Brazil. We've just got very high grade rare earth hit there, and we've just done 33 air core holes. They're pending as well. But that's the stuff we're getting with on the sidelines. Our main project is our Smokebush Gold project. So Terrain at 3.3 billion shares issued. That's going to lift up a little bit. We just raised $1.5 million on Monday. The top 20 own 44%. The top 200 own 82% of the company. It's reasonably tightly held. Shareholders have grown by about 700 shareholders over the last sort of 12, 14 months. So that's growing. So that's a positive sign. People like what we're doing. The board, there's information on page 30. I think I'm going to run out of time, so you can go back and have a look there, but we're all committed. We keep a small board, small office, and funds go into the ground. That's our project spread, predominantly WA focused. Our Smokebush project is our gold project, proven clay gallium oxides, as well as gold and silver, multiple targets, which are all high grade and quite exciting. 4-hour drive from Perth, last 20 Ks is on a gazetted dirt road, so it's very accessible. Mining lease granted, we've just done 4 diamond holes. There's 97 RC holes, 4 diamond and 1,600 metres. We've done it all ourselves. This is a Terrain discovery. We now have a model that works that we're rolling it over the project area, and that's the exciting thing here. Maiden MRE is due July, so it's not far away, and there's a lot more drilling coming for this project. This is an interesting one. There's a lot of infrastructure you can see here. Kirkalocka Mill's a toll mill. They're trying to turn on at the moment. Golden Groves are north. Rothsay was in a transaction today. There's a lot of mills in the area. We're in a pretty good jurisdiction in that Singleton Belt, Yalgoo Singleton Belt. The main part of this project is, you can see that Mount Mulgone granite. That's the big engine that's been pushing up. You can see the corridors that have been pushing the fluids. It's a basalt. We found dolerites at Lightning, and I think they're in some other areas. The yellow is the mining lease. There's a bit more work to happen here. The southern parts around Wildflowers, we've done some drilling, and there might be a new discovery. We're only looking for sniffs down there. So we're in a great geological setting, and now that the model's working, we can roll it out over other targets. Now we know what's going on. So we just completed 5,300 metres. We've got some cracking results, as you can see a few of them there. If you come to our booth, there's a big giant list of gold results we've been getting, and there's a lot of holes into this, and it's holding together nicely. There's been a couple of mineralisation events here. You can see where Lightning is. The blue one's Lightning structure. That's gold and silver. The north-south structure is the Monza structure. That's just gold. And the cross-cutting sort of mega highs, the dolerites, we're sitting in a basalt. So to the north, we've pushed gold up, right up the top, another 500 metres. It's only 1 metre at 1.5 grams. But if you look at the early holes over Monza down to the south, that's what we're getting, pushed down a bit deeper. So this mineralisation system's a lot bigger. It needs a lot more holes. It's going to grow. And maiden MREs mainly in that middle area there. We've also seen a third structure appear in the bottom of the hole. So there's some more news with some follow-up drilling to come there, I believe. Met studies are coming. We're talking to people at the moment regarding some mining studies underway, looking at some early cash flow for the company, which is important as we keep on pushing on with some exploration to make it as big as possible. So there are some discussions. We're talking to people out there, some contractors. You've probably seen a lot of deals in the market. There's opportunities to bring this early into cash flow. And there's some silver results pending as well. We put the silver in second to save a bit of capital. That's a cross-section, just Monza. Hasn't been updated, but you can see to the my left-hand side, I guess, well, you're right. There's lots of big open portions here that need more drill holes, which we plan to do. That's what the gold and silver distribution looks like. You can go back and have a look yourself. That's the distribution. We're sort of seeing more gold as it hits into the dolerites around the edges, so they need drilling out. And you can see to the north, there's not a lot of drilling there, but you can see where the bulk of our drilling has been with some really good results. Interestingly, this is also in the mining lease. You can see Lightning to the area of interest. There's another replica lookalike. We're doing IP there at the moment. These are the IP stations. IP has turned this project on its head and has been working very well for us. So we'll be in there in the next week or two, basically doing another IP survey with some more drilling to follow up for expansion at Lightning, but also maybe testing a new target here. There's some potential other fluid corridors in between, but this project has got a lot of upside. Our Wildflower area, we've basically got 3 or 4 800-metre long IP targets again, gold in soils above, on the same plumbing system for other targets. We've just drilled them. Have we made another discovery? We're hoping for a bit of a sniff of gold. Let's see what comes in. They're 2 or 3 weeks away, so there's a lot more results to come. And they're not the only targets. We've still got Hurley, Paradise City we haven't even got to yet. We've got some historic drilling and some really nice gold results that need a lot more following up. So we're looking at a camp, basically, of gold opportunities here for the company with some early cash flow. Our Lawrence gallium project sits down the south. It's a unique geological setting. You set side out of that, there is no gallium. There's 2 granites are pushed up along a big giant floodway. It's 27 square kilometres. This offers some real scale. We've basically, WA government's funding our MET study at the moment. It's due this quarter. JORC compliant resource. We've got gallium in 70% of our holes over 10 metres, up to 64 metres thick from surface in a lot of areas, up to 54 grams gallium with a rare earth association. It's an interesting one. It doesn't cost us anything to hold it. I'm not drilling it out any further until we have a MET solution. There's no point. Let's get a MET solution, then we've got a real project. There are people who are interested in gallium. Obviously, gallium is a topical subject. Critical mineral, for those who don't know it. Computer chips, semiconductors. There's no lasers or LEDs without gallium. AI, quantum computing, doesn't work without gallium. Most of the modern military complex doesn't work without gallium, so it's critical. And China's got 98% of it. It's allowing for faster switching at lower voltages and operates at much higher temperatures than silicon chips. So there's a need for it, and it's critical mineral. But there's more news coming from this project. Have we got 5 more minutes? That's the works programs coming out from our Smokebush project. There's a lot of news still in the pipeline, and a lot of new news we'll be generating over the next 2 quarters, and hopefully we can do a deal with someone and get this into early production. So Terrain Minerals, our Lightning project is our main one. Multiple high-grade intercepts, early modelling points to north trending shear zones, the east-west caption zones, which is what you like to see in WA gold projects. A lot of strong silver grades with results still pending. MRE in July, mining studies to follow. This is quite an exciting, quite advanced project. Wildflower project, so there's drill results pending there. Our Lawrence Galleon project, the met studies are coming. Biloela project, we're trying to get there later this year to do a little bit of drilling on 7 targets. That's underway. And our Kalindi project has our soils working and we have drill results at Lort River. I don't really think I've got enough time to walk through these properly. I will quickly, that's our nice big hits, copper gold. Interesting one, that's where we're located, Biloela. One I do quite like is our Kalindi project. So we're just out of Port Hedland. We're in the same structure as Wildcat. You can see that one's granted, they're not all granted yet. That's where the soils are, that's where 4Ks are going back for gold. You can see Hemi sitting sort of just up here, 11 million ounces. We're 3 metres undercover. We've just done a machine learning study, so there could be some interesting stuff there. And very quickly, our rare earth project, that's the grades we've been getting in a hole down there, and that's what we've followed up. So that's also quite exciting. The met studies that are happening with the university will also flow into here. We're in the Albany-Fraser belt. We're not in the other, same as the other projects down there. We're in the edge of a mafic intrusive that is half worn away, and there's a big giant regolith basin there of 66 square k's. We reprocessed our VTEM data from when we did nickel exploration down here. So let's see, these are some pretty good results. This will make or break the project, but we're busy. That's basically who we are. You can have a quick look, and that's terrain, and I'll let you go and have a beer. Thanks for watching. We're here for the next 2 days, so please come call past and have a chat. I think we've got a very compelling case. There's $15 million market cap. There's a lot of upside here, and we're in a pretty exciting gold, silver area in West Australia. Thank you.
There you go. Justin Virgin, come here.
Sorry.
I went outside to make sure they all waited for us. The natives were restless out there. I said, can I just have a beer for Justin? So if you want to stay here and drink your beer, they can actually come to you. Hey,
Bring your
so
cups.
if you've got a question, you can come. You can get your beer and come to him. Justin, thank you so much. Put your hands together for Justin. Thank you, everyone. Tomorrow morning we're starting off a little bit earlier, but on Friday as well, your program says 8:30 that we start. I'm going to get underway at 8:20, so Rob Murdoch's coming in tomorrow to give his really fantastic independent analysis. He's going to come back again on Thursday, just a bit early. It's not marked in your program, but if you want to share it around, we're just going to sit at the front and do a Q&A for a little while. So if you've got anything you want to ask him and get his independent analysis on, you are more than welcome to join us in the room between sort of 8:20 and 8:35. Okay, just a little bit of an extra bonus. I don't mind coming in early, and you're welcome to join us. Thanks, everyone. Safe travels. See you at the Gold Bar.